तैयार करे असं up to
टाइगर श्रॉफ 1 महीने से 2 महीने से
Dear friends, welcome to Shaja's virtual classroom. Today we will be discussing activity 4.1, a comprehensive problem on posting the ledger, preparing cash book, and balancing the accounts. Okay. So Jana's business has opening balances at 1st October $1,000 cash and 2,500 in the bank account. There are no balances on any other accounts. Okay, there are no balances on any other. She has the following transactions for the first week of October 1st. Jan have no money in the business bank account, 80,000. Bought goods for bought goods for resale on credit from David. Paid rent by debit card 1,000. on first itself. Okay. On first. So money is coming in bank and debit bank, and who is the giver? Who is giving it? So it is carried. So this will come. So even discount will come in this, but discount amount also we have to take. Okay, then not put a money into the business bank account capital. What would Once again, so purchases account debit, they are not credit, they are not credit. So again this year right here, again this year right purchases. So that reason it. Next, paid rent by debit card. So debit card is obviously money will go from bank. So debit card is linked to bank account. So that's why money will go from bank. So we consider it as bank payments. Rent 1,000, debit card, bank, rent and bank 1,000. What date it is? Second. Second. Rent 1,000. Money has gone out from bank. Okay, so rent amount, money has gone out from bank. So it will come here. So next, so we have to record it. The opposite side is rent. So rent amount. So 1,000. October. Second. So through bank we have paid. So rent amount is an expense. Nominal amount always debit. Next. Sales are related to issue. Sales and issue. Sales are related to issue. Sales. What date? 4th. Sales are related to issue. Sales are related to issue. What is the amount? 3,000. Credit. Sales is always created. So issue. So opposite side. Issue account will be debited. Why are we debiting? Because we have sold goods to. Because issue is a receiver, account that receives. Issue account receives. So debit the account that receives. Next. So cash sales 700. So what is happening? Sales is happening and cash is happening. What date? 4th. Cash sales 700. 4th. Cash sales. Cash sales is money will come in cash account. Sales. So we receive money in cash through sales. So sales account will be credited on opposite side. Sales. So cash. How much? 700. What date? 4th. Paid cash into bank account. Paid cash into bank account. sixth, we have paid stationery by cash. So money will go out. 30. Stationery. Stationery. Money will go out. So what you have done? You have taken stationery here. October 6. So through cash, we have paid stationery. Stationery account is always debit, and we have to credit cash. So because cash is going out, debit stationery with 30, cash. Now we have to balance. How do we balance? So what is the most important account here is the cash. So basically what you have to do, you add all this. So 2500 plus 8000 plus 500 is 900 plus 10,000, and this side it is 1000 plus 4750. It is 5750. 10,000 minus 5750. So what you have to do? You have to write down in pencil here. Write down what you do. You write down in pencil here. You write down in pencil. Here also you write down in pencil. So if you write down, you will get 5750. Here you will get 10,000. So 10,000 minus 5750. You have to subtract 1 from the other. So 10,000 minus 5,750 is 3,000 minus 5,750 is 4,250. So what you have to do? 4,250 you have to write here. 4,250 you have to write here. So that total on both the sides becomes same. So this side is also 10,000. This side is also 10,000. And this is called balance carried on. So balance carried on. So this side also it is 1,700. Here it is 530. So 1,700. This side is again written down here 1,700. So here it is 530. 1,700 minus 530. 1,700 minus 530. 1,170. So you write down 1,170 here. Write down 1,170. This is how balancing is done. Okay. So now we remember we have to do balancing only for capital accounts and trade accounts because they will be carried forward for the next accounting period. So cash capital account is 8,000. Balance carried on is 8,000. So this will be carried on, no balance carried on. So we will become by balance brought down. By balance brought down 8. So only the dates will change. So here it will be October 7th. Here it will be October 8th. Or October 17th. So balance brought down 8. So then. So purchases amount 5,000. So there is no need to balance. This is 5,000 itself. You have to just this will directly go to the trial balance. So there also 5,000. Here also 5,000. So there is no question of balancing here because the total on both the sides are same. Rent amount. This will straight away go to trial balance. Write this as it is. Sales 3,700. This will go to sales account directly to trial balance. discount received is 250. This will straight away go to balance. Stationery is 330. 30 is straight away go to balance. So this is the end. This is over. What else we need to do in this? So balance the accounts at first and bring down the balances. Okay. Bring down the balances. This is how we have to do this balance. interest. So interest received. Again, interest can be received also and paid also. So that is why we have to receive a specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening. Drawings. So money is going out from bank, right? But out of bank account. So then loan received from a friend B. So what is happening? You are receiving loan from a friend. So all the transactions are assumed through bank. So you write money is being received in bank account. So but who is giving it? It is me who is giving. So credit the giver, credit the amount that gives. So it is the me who is giving. So me account, bank account, me account. So money is coming in bank, and me is the person. Me is the amount that is given. Loan repayment made on loan from me. So what is happening? Me, money is going out from bank, and who is receiving? Me. Me is receiving or giving. So me is receiving. When we repay the loan, me will receive. So me account will be debited because debit the amount that receives. Okay. So me is specific. B here, which account will be debited, which amount will be paid. You are doing very clear. So then purchases paid by debit card. So whether it is debit card or check or whatever, always it is money will go out from cash. So purchases for debit through cash. That one because money will go out when you pay out from bank. Debit card obviously money will go out from bank only because unless you have money in bank, money cannot be debited by bank. Sold goods and bank debts. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is a revenue. Sales is a revenue. Sales is a credit. So credit all incomes and gains revenue. Return goods to supplier and bank the refund. So you are returning the goods to supplier. So supplier is receiving. So you will debit supplier. And money will go out from bank because money is given away to bank. So refunded money to customer instead. Oh, sorry. So the return goods to supplier and bank the return goods to supplier is whatever. You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving it, right? So credit the receiver, debit the receiver, credit the receiver. Debit no. Yes, but return goods to supplier and bank the refund. Bank the refund. We are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debited. Bank account will be debited. And we are returning goods to supplier. We have returned goods to supplier. So it is called purchase returns. It is called purchase returns. Correct? It is purchase returns, not supplier. Yes, it is not. It is not return. It is purchase returns. Purchase returns. So refund money to customer by check for goods return. So this is sales. So when we have sold the goods, but we have received back. So it is exactly reverse of sales. Sales return. Sales return. And we will credit bank because money will go. So carriage inward paid by check. Whether it is carriage inward or carriage inward, money always will go from bank account debited and purchase returns will be paid. Purchase returns are opposite of purchase. Purchases are debit made, purchase returns are always paid. Okay, purchase returns. So this is how it is. So this is activity 1.2. So we'll continue in the next class. Students, welcome. So today we'll discuss practice questions from cash transactions. David Hopkins method. So before seeing this complete video, what you can do is you can just have a look at you can try solving this question. So which of the following financial transactions is most likely to require a debit entry? When is debit entry in the bank? What is being received? So what you will receive when you purchase, you will not receive. When you rent receivable, obviously you will receive. So you will get it. Sales returns, you don't receive. Wages, you don't receive. From the things you will receive. Having bought goods for resale and paid for delivery to the main which increase in hours for the delivery cost. Having bought goods for resale and paid for the delivery, which increase in hours for the delivery cost. So money will go, obviously money will go to pay to money will not come, money will go. So then when you are selling having bought goods, what when you buy, you pay the carriage amounts. A trader takes money from the business bank account for personal use, which entries record next payments. So money from business bank account for personal use, which entries record next payments. So per person gets twice. So money will go out. So it cannot be if we receive the debit, when we receive the debits. So obviously this cannot be the entry. So twice you will get. So these are practice questions for David Hopkins. So what you can do is you just have a look at the next problem. So below are the financial transactions of Vilas Limited. So what is necessary? Ledger accounts and both the following financial transactions. All transactions appear to Mira current business building income principal of bank account. Mira the bank account financial transactions. Purchase machinery, paid rents, bought goods. So paid carriage inwards, sold goods, paid for aging land, received rent, bought more machinery, bought more goods. So what you can do is you can try working out this question on your own. And suppose you have any doubt, or if you are unable to do it, so you can leave a comment in the description or in the comment section of the video. So you can I will just so I will go on the problem. So till then, have a good day. Okay, friends, welcome to Shortcut Virtual Class. So today we discuss activity 2.1. So this is David Hopkins' latest book, latest textbook. So we will start. So below financial transactions for max business, personal transactions to the ledger account. All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than other than cash transactions, total record credit transactions. This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So if you would have found one part, the other part would have been easy. But here, it looks somewhat somewhat complicated. So, but it's easy if you understand the main concept. What is the main concept? So basically, we need to know the personal account. The personal accounting. So whether this account is receiving or giving. So we need to know this. So purchase goods from Tina that cost you. So when we purchase goods from Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. So what you can do is you can try working on this question on your own. So then you can compare with the answer. So first let us make a list of accounts that are necessary. So we need to prepare Tina's account. So we need to prepare Tina's account. We need to prepare purchase account. Because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account. Return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Umar account. Because sales account is already there. Umar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So Ali sold. Ali, all goods sold to Ali have been returned. So have been returned means we have received that. So it is sales returns. Sales. So basically we need to prepare 1, 2, 3, 4, 5, 6, 7, 8 ledger accounts. Basically we need to prepare 8 ledger accounts. So let us proceed. So let us start with purchase account. So purchase account. So always the ledger should be so always date should come. Always date. Don't miss to put the date and the currency date and the currency. Always. Okay, write always that thing. So which amount you are preparing. So purchase amount. Purchase amount is always an expense. So So a lot of students, what they get confused, So they write something here, no? So the thing they have debited. No, it is not like that. Purchase amount debited means purchase amount is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do you prepare Tina account? So this side is always debit, this side is always credit, always debit. You have to write always debit, always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write. So Tina account is credited. See, this is what. So a lot of students they get confused again. So Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you have written 2000, here also you written 2000. See, debit 2000 and credit 2000. Obviously, debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts, like what one should be debited, the other account will be credited. So this is very important. So next, coming to the next. Sold goods to Ali for $300. So sold goods to Ali. So now we have to prepare sales amount and Ali amount. Sales amount and Ali amount. Sales amount. Ali amount. So how much? What is the value? What is the date? Always remember to put the date. October 2nd. Payment. October 2nd. There is always credit. This side is always debit. So how much? 300. See, sales is a revenue. Sales is always credited. Wait on incomes and gains. Sale is always credited. Sale account is credited by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So sales. So now one more thing. What is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the amount that receives. That is what we learned in books. So Ali receives. So that is why we have to debit. So debit the account that receives, credit the account that gives. So this is the main thing you should understand. So Tina gives, Ali receives. So this is what, this is very, very important. Now it has been clear to you. So now it is everything is easy. So that the entry is complete. Next. So sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return to Tina that had cost. So now you have returned to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited. Debited to 200. Tina account will be debited. Tina account will be debited with 200. On what date? Tina account will be debited with 200. On what date? On 4th. So October 4. Tina account is debited with 400. So, but why are we debiting Tina? Because we have returned goods to her. So, purchase returns. Purchase returns. So, purchase returns. We have to open one account called purchase returns. This is always debit. This is always credit. Always in dollars. This dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly because of it is always a credit. So what is the amount? 200. So we have to put it in. This is how you learn. There are so many ways of removing things. So why? Because it is on October 4th and it has not. It has not. We have to credit purchase returns 200 with the debit to Tina. This is how you have to read and you have to understand. You have to understand accounts. Very important. So that the logical flow of concepts is very, very clear. Okay. So very, very clear. Logical flow of concepts is very clear. Now next. Purchase goods from link that cost 2400. So link is another person. So again, what is the link doing? When you purchase from link, obviously gives. When you purchase from link, Sales amount is already there, so we have to prepare owner account and we have to write it sales. So owner account and sales. Owner account. Owner account. So owner account will be debited. Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Owner account is debited. Why? Because we have sold in sales. Sales. Owner account is debited with sales 1100. So now owner account is debited, sales account is already there. So in sales account we have to write now. We have to write it in sales. Owner account. October 8. Owner account. 1100. Is it clear? So this is how it is. Yeah. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have to return. So it is purchase returns. Purchase returns to Tina. So and it is on 10. Purchase returns Tina. Purchase returns Tina. Returns Tina. Tina. Where is Tina? Purchase returns Tina. Why you have written purchase returns? So next, all goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we are sold to. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives. Ali gives us back. Ali gives. Ali gives us back. We have sold him. At that time we have given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali, sales returns and Ali. Sales returns and Ali. So we have to credit. So we have to credit Ali because in the giver is the giver. Credit the giver is the giver of the goods. So October why am I crediting? Because of sales returns. So now sales returns. One more about sales returns. Sales returns. So sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So here the amount will be here and it is on 11th October 11th. And what is the amount? Totally debited. You are correct. Debited. Ali 300. Sales returns 300. So there So now what you can do, you can try working out activity 2.2. So below the financial valuation for Penn's business, what the was the transactions to the ledger account, all goods are bought and sold on. Bought goods from team that cost 5,000 less trade discount of 50%. So sold goods to leave for 1,000. So return goods costing 500 less discount to team. So purchase from B that cost 4,800 from trade discount before trade discount of 20%. Paid team all money out. Paid B for quarter 15 November. Received full payment from me. So what you can do, you can try working on this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day. Dear students, welcome back to Shasha's virtual classroom. So this is activity 2.2, credit transactions, from credit transactions, and this is David Hopkins' latest book. So below the financial transactions for Penn's business. So these are the books of Penn's business. Pen, or pen, whatever. So business post the transactions to the ledger account. So let us make the list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, pinch account, pinch account. So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, tinge account, sold goods to leave for 1,000. So sales account, leave account, then sales account, leave account, 1,000. So return goods costing 500 less trade discount to tinge. So again you are returning the goods. This is return goods. So you are returning to tinge. So who is tinge? So it is a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is a 45. So 45. 515 is a 45 means 15% of this. So 4 and then 65. 65 or 55? 55. Correct now? 5, 15 is a 45. So 55. 55. Okay. So purchase goods from B. So again purchases. Purchase account is already there. So B. So cost 4,800 less trade discount of 20%. So this should be recorded at 4,800 minus 20%. So 4,800 minus 20% is so 48.
So 3,840. So you have to record it at 3,840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you are paid to Tinge. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from late. So that will also be recorded in bank account. So how many accounts should we open? One, two, three, 4, 5, 6, 7. We have to open 7 accounts. So first, you bought goods from Tinge that cost 5,000. So first you prepare purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 4,250. Because purchases is an expense. So expense account is always debited 4,250. So date always you write the dollars amount. You have to always write. Don't forget to write the dollars. And what is the date? November 1. And it is to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. Tinge account. So So Tinge account will be created. Why? Because he is the giver. When you purchase, Tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next. The entry is complete. So the entry is complete. Purchases account will be debited with Tinge. Tinge account will be credited with purchases. So next. Sold goods to D for 1,000. So goods to D, sales and D, sales account. A account. Sales amount and D account. So how much is sales sold goods to D for 1,000? And November 5th. November 5th. 1,000. November 5th. 1,000. Credit to sales because sales is an income. So credit all incomes and gains. So 5th. So leave, because leave is the receiver of goods. So this side is always debit. This side is always credit by default. This is always debit. This side is always debit. This side is always credit by default. So dollar November 5th. So 1000. Why are we debiting B? Leave because we have sold him. Sales. So we have sold him. So debit, credit. Sales account will be created because it's an income. Leave account will be debited because he is the receiver of the goods. Okay. Then comes next. Next. Return goods costing 500 less discount to tinge. So we are returning the goods worth 500, but after discount it is 455. So return to goods means these are purchase returns. Tinge account is already there. Purchase returns, tinge. So purchase returns. So purchase returns account. Purchase returns account. So what is the value? 455. So purchase returns. Purchases is a debit. So it is always debit balance. Purchase returns is reverse of purchases. So it's a credit. So 455. So what date? When we have returned? We have returned on 10th. November 10. November 10 we have returned. November 10. So why? To whom we have returned? We have returned to Tinge. We have returned to Tinge. So Tinge. So what we have to do? We have to debit Tinge. Now we have credited purchase returns. Now we have to debit Tinge. Tinge we have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit Tinge. 450. Always write the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V. And it is on 15th. 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 November 15th. Purchases account will be debited. 3840. 3840. So purchase account will be debited 3840. We have purchased from where? V. Okay. So that's why you have to write V here. So we have purchased from V. So purchases account will be debited. Now we have to write it to V account. We have to open, if it is not there, we have to open V account. So when we purchase, we would have given us the goods. So November 15th. November 15th. So 3840. So why we are crediting V? Because we have purchased. Because we have purchased. Purchases account. We have to credit V with purchases 3840. So now coming back again, next entry. So always write the dates. Next entry. Paid Tinge all money owed. Paid V for goods bought on 15th November. So we have bought only once. So we have to pay Tinge. We have to pay V. And we have to receive from D. So received. 20th we have paid to Tinge and V. 20th we have to pay. We have to bank account. Bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to pinch and V. Pinch. How much we have to pay to pinch? Obviously the balance. When we have paid on November 20. November 20. So November 20, we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to Tinge. So we have paid 3795 to Tinge. Complete the entry. Complete the entry. How do we complete the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to Tinge. We have paid 3795. So we have to pay to another person. We have to pay to V. We have to pay to V. So let us see. We have to pay to V. V, how much we have purchased? We have purchased 3840. So obviously we have to pay him 3840, and it is on November 20th. November 20th, we have to pay him. So 3840 we have to pay. So what account will be debited? Bank account will be credited. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away 3840. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1000 from Lee. So we have received, what date we have received? We have received on November 25th. November 25th, we have received 1000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption. So bank. So November 25. So from Lee, right? Lee 1000. 1020 we have received. Over. That's all. So we have finished. What else is required? Below are the financial transactions for Penn's business, post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself. Then you can compare, checking with the answer here, so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So pinch account, we have paid everything. So there is no amount left over. Sales account is credited. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account, we have purchased, we have paid. So bank account, we have paid, we have received. So that is the end. So activity 2.2 is done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just by answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be created. Sale account will be created. Dia account will be debited. Why? Because sale is an income, credit or incomes and gains, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods. Dia account will be debited. Buy machinery for use by business on credit from Joints Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in asset account. So real account, debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchase goods on credit from Allen. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases. And we have taken Allen is the giver of the goods, and that's all. So discount received will never be recorded because this is straight discount. Trade discount is never recorded. So net of will be recorded. Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So these are what purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Allen will receive. So debit the receiver. Debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So some supplier, so they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns, we have received money. We have deposited it back. So refund money to customer by check for goods returned. So now we have to give the money back. Some customer has given us money. So he has given back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods what? So money will go out, bank account. Money will go out. So who will receive? Joint limited will receive. Receive full payment from DIA less cash discount. So we have received payment from DIA, received full payment from DIA. So we have received money in bank and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DIA because she is the giver of money. So pay Allen for goods bought less cash discount. So here we have to pay Allen. Allen is the receiver of money. So Allen account will be debited. So we are paying. So money will go from bank and discount received is again discount received. So the amount we are not going to pay because of discount. So that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is So welcome back to Shasha's virtual classroom. This is practical practice questions from David Hopkins, lesson number 2, credit transactions. So which are the following transactions? So before attempting this, before having a look at these answers, you can try answering yourself and you can just cross check with the solutions with the discussion. So always get back to me in case you have any notes by way of comment in the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or coming. Cash sales, money doesn't go or coming. Payment to a customer. So when we pay, obviously money is paid, this money is credited. So bank account is credited because payment by a customer. Sorry, see this payment by a customer. Payment by a customer means we will receive, we will not pay. So payment to a supplier. Yes, payment to a supplier is something we pay, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 30. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded at 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So is a purchase. It is a purchase for Joe's, and it is Joe's books means it is purchase. By Maria's books it's a sale, but in Joe's books it's a purchase. So be careful. So purchases. So purchases should be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. It will never be recorded at cross 200. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170. Maria account 170. This is the right answer. Okay. So next. So next, Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay, Myra sold goods to Zara on credit to Zara on 1st July. The goods are priced at 1000, but Myra allowed Zara a trade discount of 10%. So they will be recorded at 900. Okay, and offer a cash discount of 2%. So it will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded, this will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold, so sales entry will be recorded. Myra has sold, sales entry will be recorded. Sales entry will be recorded, okay? So it will be recorded at 900. Yes. Zara will receive, Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So 882. So this is the entry. Not this, not this, not this, not this. These are exam style questions, and this type of questions will come in AS level. Okay, so be careful. So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to the ledger accounts, all goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below this video. We'll catch up in the next class with a new lesson. So till then, have a good day. Dear friends, welcome back to Shasa's virtual classroom. This is activity 3.1 from subsidiary books. So books of primacy. Okay. So subsidiary books are books of primacy. So these are known as books of primacy. So books of primacy. So junior had the following credit purchases. Junior is the name of the trader. So junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 trade discount. Okay. So purchase goods from Cora for 10,000 less trade discount of 20%. So this will be recorded at 8,000. So this will be recorded at 8,000. So Cora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so 5% of this is 400. So then purchase goods from Prem 14,000 allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000. And cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Cora cost 400 less 10% less trade discount. So Cora, so you have sold to Cora at a discount of 20%. So you are receiving back 400. So 400 minus 20% is 4 to the 8. So 80, 320. So it will be recorded at 320. Purchase goods from Cora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 12,800. It will be recorded at 12,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Cora and Prem. So payment has been made. So enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase journal, the record all purchases, individual purchases, and purchase return journal. Purchase returns journal, the record all purchase returns, and cash book. Cash book. So record cash payments, cash payments and discount. So cash book for payments and discount, cash discount. So three books we have to write: purchase journal, purchase return journal, cash book. So these are the books of prime entry, three books of prime entry, and post them to the ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase return journal, purchase returns account. So then Cora account, Prem account, discount, received account. So these are the ledger accounts we need to prepare. 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see future problems, I mean future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we will start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the solution here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase return journal. Okay. So let us first prepare purchase journal. Purchase journal. So what all will come? Date will come. Name of the supplier, because we purchase from supplier. Name of the supplier. Invoice number. Amount in dollars. Okay. So first, what is the date? So we have purchased on 1st November. November 1 we have purchased. So we have purchased from Cora. We have purchased from Cora. Invoice number is given. Invoice number is not given, so don't worry. So your it should be recorded at 8,000. See, remember always, paid discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Next, purchase goods from Prem. Again, purchase goods from Prem. So again, goods from Prem, that is on 2nd November. So 2nd November from Prem. So the amount is 14,000. Amount is 14,000. Next, again you have purchased goods from Cora for 16,000. So at a trade discount of 20%. Again from Cora. What date? It is on 5th November. You have purchased on 5th November from Cora. So how much? What is the amount? So what is the total purchases? So 8 plus 14, 22, 22, 34, 800. purchase returns general. Purchase returns general. So what is the date again here? You have to write the date. You have to write name of the supplier. So and so what date? Return goods on 4th November. So November 4th. So what is the amount? 320. So from to home we have returned. Cora. Cora 320. And we have received credit note. See, remember one thing. So when we are writing the purchase journal, we are recording individual. Okay, so we are recording individual entries. See, very important. Okay, so this way you will remember this again. When you remember when you are preparing control accounts, when you are reconciling control accounts, at that time you may need this knowledge. So at that time you will need this knowledge because this is the logistics you have to understand. This is the logistics you have to understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all interrelated. Okay, so this is how it is. Then next, what is the next prime entry? Book of prime entry, cash book. So cash book. So we have to prepare cash book. So cash book what all will come? Discount column will come. Since we'll be paying so this side is always credit, this side is always debit. Yeah, so this is discount column. This is discount. This is cash. Cash column. So it is in dollars. So this is also in dollars. So here, next first, what is happening here? So we have purchased no cash transaction, no cash transaction, no cash transaction, no cash transaction. Check, send checks in full settlement of their account to Cora and Frame. So we have paid to Cora and Frame. So we have paid to Cora. Cora and Frame. But here we need to calculate. So we need to calculate because Cora, what are the transactions you have done with Cora? Cora you have purchased, you have returned, again you have purchased, purchased, returned, purchased, returned. So 8,000 plus 12,800 minus how much you have returned? You have returned 320 worth 320. So this gives 8,000 plus 4,800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount. So discount 400. But you already pay, you have returned goods what? 320. So what is the discount you receive here in this case? In this case, the discount is so the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is 4,800 and there is a return of 320. So purchase, return. So net purchase is 20,480 and discount is 5%. So be careful. You have to see sometimes the rate of cash discount will be different. So in this case, here also it's 5% cash discount. Here also it's 5% cash discount. So there is no variance and it is the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. On that 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 19,456. So to frame, how much you have to pay? Frame. So the entire amount you have to pay. So frame is 14,000. Discount is 280. Discount is 280. 14,000. Frame 14,000. Minus 280. So you have to pay 15,700. So this is the amount you have paid to pay. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November 9th. So you have made the payment on November 9th. So this is the cash. This is how you have to receive record. So discount column 1024, save 280. So cash. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare the ledger accounts. So what are the various ledger accounts you need to prepare? Okay. So now we have to prepare ledger accounts. So purchase account is the first. So first we prepare purchase account. So we have to post all the transactions at 10th November. So what we have to do 10th November. So November 10. So what is the date? purchases, total purchases. We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. Purchase journal we have prepared. So 34,800. So we have to prepare 34,800. So you have to write 34,800. 34,800. So purchase journal. See, this logistics is very important. So when you are doing control accounts at this time, you will come to know. So you have to reconcile. So it's very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but when we enter it in purchases account, we record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So number 10. Purchase returns journal. So what is it? $320. So now we have to prepare other accounts like Cora account. So we have purchased from Cora, so Cora's account will be credited. So always write the amount. Always write the amount. Cora account. So Cora account will be credited. So what date when we have purchased? So you can see from here itself. Cora we have purchased on 1st and 5th. 1st and 5th. So on 1st it is 8,000. On 5th it is 4,800. 4,800. So this is purchases. Purchase. This is purchase. Remember you are writing purchase here, not purchase. Okay. Purchase. 8,000. Purchase 4,800. So here this side. So it will be. So this is number 1. Because purchase journal, it is a journal. Okay. So purchase journal. So this is core ledger account. So now next, what is it? So what did you return? Return on 4th November. So how much? 320. Yes, 320. So next, claim account. So how much is claim account? So claim account is 14,000. So claim account is 14,000. So this is on what date? This is on 2nd November. Purchases. 14,000. Okay. So now come to discount received. So again discount received is again. So discount received is again. So it will be created. So individually you have to write. Or I can write the total. So discount received is 1304, 13,004. So we have to record that discount received 13,004. Four. So November 10th. So cash book. So we are right. That's all. So 13,304, not 13,004, 1,304. So that's all. So discount received. So what else is there? So So I told six ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry and the book ledger also. So cash book is both book of prime entry and ledger. So no more, it is not required since we are already prepared. So that's all. So that's the end of this particular question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important prerequisite for you to score good marks. So welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of English cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic, but some students may be confused, a bit confused. So let us discuss. So what you can do is before trying having a look at my looking at this particular session, you can just try working out the problem on your own so that your understanding is clear. So always try to work out on your own and then compare the answers so that the understanding is clear. Okay. So basically, I would like to let you know that this is a format. Particularly, you have to write this in a particular format or particular what do you say in a particular style. So you cannot write it as a however you want. So that style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between. So there should be one line. So again, similarly, this side also, there is one column, another column, date, one column. So this is date, one column, date. So details, particulars, then discount receive one column, cash one column, bank one column, and the currency, of course, whether dollars or pounds or whatever. So we have to write here. Okay. So this is how it is. So we have to write this in this particular format. First you write the format. So this side cash book. So this side is debit. This side is credit. So the date, whatever your particulars. So first you write this till here. So copy your write as it is. This way you write. Then we will start working out this question. Okay. So this is the question. So enter the following transaction in Lee's cash book. April 1st, cash sales 1000. April 1st, April 1st. Okay, so one more thing. So whatever we receive, we have right here. So all that is received, we have right here. and whatever we pay, we have to write here. Okay, so in other words, if it is debit, so cash book is a real account, cash account is a real account, debit what comes in. So when we sell, cash comes in. When we sell, cash comes in and it is cash. And it is cash. Cash sales 1000, cash is coming in. So cash column 1000, cash is coming in, debit cash. This is cash account. Okay, so cash book, this is cash account, this is bank account, this is discount account. So this is discount account. So this is discount allowed. So this is discount allowed discount. So this is discount received. Sorry, this is received. So it's a credit. No, it is received. So this is discount allowed. Allowed discount. So allowed discount. So remember this is allowed. Okay. So this side, because when we pay at the time we receive discount. No, we receive. So it's a credit. So but when we receive at that time we allow discount. So it's a loss. So we write here. So cash account sales 1000. Sales amount 1000. So we write here. So we receive cash upon sale, we write here. So all whatever we receive, we have to write here. Whatever we pay, you have to write here. This is just for you to remember. This is just for you to remember. So don't write like this. So let us see if they are writing this way. No, see, they are not writing whether it is received or paid. So here they are also discount received they are written. Okay, so discount allowed. So here they are not written whether it is received. So this is just for you to remember. So just for you so that you understand. It is easy for you. Okay, so don't write this. So don't write. This is for you, just for you to remember. So don't write. Okay, so don't write. So receive cash. When we sell, we receive. So then what is the next one? So electricity charges, electricity paid in cash, payment. So we are paying. So credit what goes out. So credit what goes out. Cash account is a, so cash account credit what goes out. So what date? So it is on second, April 2nd. So second. So credit what goes out. Electricity. How much? 100. Cash. Credit what goes out. Cash has gone out. Credit what goes out. So next. So we received. We have paid 100. So credit cash account will be credited and electricity charges will be debited. So next. Cash sales 800. So we are receiving cash again. So what date it is? It is on 3rd, 800. On 3rd, sales 800. We are receiving. When we sell, we receive. No, so receive. So 800. Next. Banked cash. So what is banked cash? We are taking out cash and putting into bank. So what is the entry when we bank cash? So very important. Okay, so this students often get confused with this entry. Students often get confused with this entry. For that, what you do, you just remember the entry first. Okay, so this is the easy way. Bank cash. Bank the cash means you are depositing money in bank. So bank account will be debited. Bank account will be debited. Cash account will be credited. Cash account will be credited. So bank the cash means we are depositing cash into bank. Cash is going out. Cash is going out, and money is coming in bank. Bank the cash. So money is coming in bank. Okay. So money is coming in bank. Money is coming in bank. So this is bank. So money is coming in here. So how much? 1400. 1400. So money is coming in bank. Bank the cash. So but cash is going out. Cash will go out. cash will go out. What date? 4th. 4th. Bank to cash. So remember, always you have to write like this. Okay. So my bank to cash. So remember, don't get confused. So bank account will be debited. Bank account will be debited. Bank to cash, and cash account will be credited because cash is going out, money is coming in bank. So against this, what you have to do here, you have to write bank. Against this, you have to write bank, and against this, you have to write cash. And this is called contra. So you have to write it as C here. Contra. Contra means it is affecting both the cash account and bank account on the opposite sides. So this entry will go where nowhere, but only affected in the cash book and bank book. So the cash account and bank account, that's why it's called contra entry. Contra entry means money is going out from cash and coming into bank. So remember, when you're writing in bank column, here it should be cash. So see here, bank column. Here it is cash. So similarly here also, here it is cash column, but here it is bank. So be careful, okay? So a lot of students, they commit mistakes, they get confused with this. So the concept should be clear. So understand this. So what is happening? So cash is going out and money is coming in bank. Simple, that's all, okay? So then stationery paid in cash. So stationery paid in cash means you are making the payment stationery. What date? It is on 5th. 5th. Stationery. How much? 20 bucks. So 20. So we drew 900 from bank for cash flow. So we are taking out money from bank. Okay, we drew 900 from bank. Be careful. So now money is going out from bank and money is coming in cash. This is exactly opposite of this. So we drew 900 from bank. So money is going out from bank and coming in cash. So the entry is exactly reverse of this. So what is happening? Money is going out from bank and coming in cash. Cash is increasing, money is decreasing in bank account. So remember, okay, cash account will be debited. Cash account will be debited and bank account will be credited. So understand, this is very important. A lot of students commit mistake here also. So they get confused. Understand this. This is very, very important. We drew 900 from bank for cash float. Cash float means to keep in office. To keep in office for cash expenses. So that is the meaning, okay? To keep in office for cash expenses. So we have to record rupees 900 from bank for cash. So money will go out from bank and come in cash. So money will go out from bank. Okay, how much? 900. What at 6th? On 6th. What is happening? Money is coming in cash and going out from bank. First you write in bank column, okay, then you write in cash column, or you write in cash column and then you write in bank column. First you write this, then you write the date. Date is very important. So then against this, so what is happening? Money has gone out from banks in this payment rate. So money has gone out from bank. So again this here you have to write cash. And this is called contra again. So again this is value here. Here you have written in cash column. So here you have to write bank. So this is in cash column. this your trade? Bank. So be careful. So again this your trade, again contra. Why? Because it is hitting cash on account and bank on the on another account. Same. So very careful. Okay. So lot of students commit mistake here. So this is very important. So this is very important. This is very important. Contra entries are very important because lot of students commit mistake here. And cash book problem is very important in ES level. So because it's very important, often asked. Okay. So very important. So at least in tests, internal tests and all, it is often asked. So a lot of questions are based out of this. So even bank reconciliation statement is based on this. So that's why the concept should be very crystal clear for you. Okay. So the concept should be very clear. So this is the end. So they are not asked to balance. So if you want to balance, how you balance? So you add here. So we are total here. So we total here. So whatever balance is there, balance carry down. So this side here cash bank. So balance carry down. So what is the balance? So here this side 1400. Here it is 900. So 1400 minus 900 is 500. So we write here 500. So here 1800. 1800 plus 900. So 19 plus 8, 27. 27 minus 27 minus 1500. 2700 minus 1500. Okay, so this will be 1800. So it will be 1180. So here it will be 1180. So now the total on this side, total this side, total this side, total this side, total this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700. Crystal clear. Okay. So this is how it is. So 180. If you add all this should be 10 to 700. So in other words, when you are balancing, so both the sides should be same. Okay. So here balance brought down. So balance brought down. Whatever is carried down here, it will be brought down here. So 1180. So this will be 500. So this is how it is. So end. So this is the end of this activity 3.2. Okay. So let's catch up in the next class. Till then, have a good day. So dear friends, welcome back to Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following items. Okay. So what you can do is you can before having a look at this solution, you can just try working out the question on your own, and then you can compare with the solution. So if you have any doubts, if you have any concerns, you can just leave a message in the comment section. So I will be glad to help you. Okay. So prepare journal entries for each of the following items. So first one, purchase motor vehicle for use in the business from Paul which cost 14,000. This is very simple journal entry. So what is there in this? So first one, so we'll just write here. So first one. So what is happening here? We are purchasing motor vehicle for use in the business. Okay, so very important thing, we are purchasing motor vehicle for use. Suppose we purchase motor vehicle for sale, for use as merchandise in the business, then it becomes purchases. But when we use motor vehicle, it will be recorded as an asset. So why it has come in journal entries here? Because this entry will not go to any of the subsidiary books. Any of the subsidiary books or books of prime entry. So these entries, either of these entries will not go to books of prime entry. It will not go to books of prime entry. So they will not go to books of prime entry. Why? Purchase motor vehicle for use in the business. Suppose if it was purchased motor vehicle for as a merchandise, as a merchandise means for sale, then this would have gone to purchase book. It would have gone to purchase register or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business, okay, for use in the business, it will be recorded in general journal. So it will be recorded in general journal. So what are the various journals? Purchase journal, sales journal, purchase return journal, sales return journal. So those are all different journals. So whatever doesn't come there will come in general journal. So what is the entry here? So motor vehicle account debit to call account. So you will debit motor vehicle and credit all. Why? Because debit, what comes in debit, asset is coming in, asset is coming in. So Paul is the giver. So Paul is the giver of motor vehicle. So that is why this will be debit and this will be credit. Next. So they are not mentioned about narratives. So if you want, you can write the narrative. So you can write the narrative being purchase of motor vehicle for use in the business. Okay. Next. Purchase of office furniture for business costing. Purchase of office furniture for the business. Okay. Office furniture for the business costing have been debited to purchases account. So office furniture you normally purchase to keep it in the office. So, but it has been debited to purchases account. So what to do? We have to reverse the entry. We have to pass the rectification entry instead of furniture account instead of furniture account. So what is the right entry? What is the wrong entry? So what is the right entry? First, to understand this, you should know what is the right entry and what is the wrong entry. Then we have to understand what is the rectification entry. So okay. So what is the right entry? What is the right entry? Right entry is debit furniture. Should be debit furniture. What is the wrong entry? Wrong entry is debit purchase. Debit purchase. So the right entry is debit furniture and wrong entry is debit purchase. So how to do it? What to do? We have to cancel out this and we have to bring in this. So we have to cancel this and we have to bring this. So we have to cancel this, we have to credit, and to bring this we have to debit. So what is the entry? Furniture account debit furniture So it will go off. So there should be a debit for credit. So when we have to debit furniture because that is the right entry. So we have to debit furniture and credit purchase. So the entry will be rectified automatically. So okay, this is the entry. So next.
So how do you rectify this? Obviously, you have to cancel this, and you have to.
A new business opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid for with 10,000 capital. So 6,000 equipment, 3,000 furniture, stationery.
So credit.
Equipment, furniture, stationery.
So when you pass this entry,
Debit.
this entry will be offset. You already debited this zones as wrong entry. So when we
Equipment.
credit zone, this entry will offset, and to give credit
Debit.
debit. So we have to debit for the
Furniture.
actually transfer entry we can say. Okay.
Debit.
Transfer
Stationery.
transferring from C to B.
How much?
Also,
So this is
this is also transfer.
6,000, 3,000, 1,000.
This is also transfer entry.
6,000, 3,000, 1,000.
We are transferring from
So we have to credit what? Credit capital.
purchases to
Credit
okay.
capital 10,000. So because owner is the giver of all these things. So we have to credit the capital debit because these are the things are coming into the business. These are the things that are coming into the business. And who is the giver? Owner is the giver. So capital is the giver. So capital, this is the investment, 10,000. So that is why this will be credited.
Activity 3.4. This is the so it's
Next.
simple, but understanding should be very clear.
Credit note number 34 for 170 received from B Jones, a supplier, has been posted to C Jones accounting error. So what is the right entry? Received from B Jones. So we have received credit note. So we have to debit B Jones. A supplier. Okay. So we have to debit B Jones. So what is the right entry? We have to debit B Jones. So to understand this again, you have to analyze the transaction properly. What is the wrong entry? What is the right entry? Then what is the rectification entry? So what is the wrong entry? Wrong entry is received from B Jones. Okay. Received from B Jones. So we have to credit B Jones. Credit note. We have to credit B Jones or debit B Jones. We have received, no. So we have received means we have to debit B Jones. We have to debit B Jones. Debit E Jones. So this is the right entry. See, understand the thing. Credit note number 24 for 170 received from B Jones. You have received from B Jones. So you have received a credit note. So credit note means you are getting credit means you have to debit B Jones. Understood? You are getting credit. So you have to debit B Jones. So what is the right entry? You have to debit B Jones. So that is the right entry. So what is the wrong entry? What you have done? Instead of debiting B Jones, you have debited C Jones. You have debited C Jones. So how do you rectify this? Obviously you have to cancel this and you have to bring in this. So what you have to do? You have to debit B Jones. So the entry has come in. So to cancel this out, you have to credit. So C Jones. So when you have this entry will be offset. We already debited C Jones as wrong entry. So when we credit C Jones, this entry will offset And to give credit, you have to debit. So we have to debit from region. So this is actually transfer entry, we can say. Okay, transfer entry. We are transferring from C to B. That's all simple. Okay. So this is also transfer. Which one? This is also transfer entry. So this is also transfer entry.
So we have not done this. We have not done this. So it is under added.
Because we are transferring from furniture
So simple it is.
purchases to furniture. Okay.
It's very simple. Otherwise, it's complicated. So
That's all. So
yes, sir. So
this is first one is error of
so the
principal.
concept is very clear.
Second one is also error of principal.
Deepak's transactions for
So
minimum
this one is
balance.
opening journal entry, and this is again error of principal. Instead of
Books of
debiting 1%, we have debited some 1%. So this is
purchase
activity
orders.
3.4. This is the end. So next, very simple, but understanding should be very clear, very important. So similar questions can come in the examination. So be careful, try to understand. So you need to take a lot of time to understand the concepts. Then only your concept will be clear. Then only you can score better marks. Okay. So don't adopt for shortcut. Please practice, understand, remember, apply, do a lot of hard work. So never try to resort for any shortcuts. Never do that. So dear friends, welcome back. So this is practice questions from books of primetry. So the books of primetry, okay. So books of primetry practice questions. So this is David Hopkins' latest book. So then we can just discuss this. So practice questions. So before having a look at this, you can try working out the problems, questions on your own, and then you can just cross check with this, and you can compare, you can confirm yourself whether you understood the concept or not. If you have any doubts, you can please let me know as a comment in the comment section. So if you have any doubts, please let me know. I can discuss it. So and we can try to sort it out. Okay. So practice questions. Gina sold goods on credit for 950 less 20% trade discount. So we know we have to record always at a net of, so 950 minus 20% trade discount is 760. So this is the amount we have to record. She allowed a cash discount of 2%. That will be recorded only upon the payment, not within the time of sales. So what amount should be entered in her sales journal? So our sales journal, we will not be recording this. We will be recording net of rate discount 950 minus 20%. So 950 minus 20%. So 950 minus 20% is 760. So this is the answer. Okay. Yeah. Sai received an invoice from Jaya for 2000 less 10% trade discount. So we have to record this transaction at 1800. So what will be debited? Sai received an invoice means Sai has purchased. So Sai has purchased. Okay. So Sai has purchased goods from Jaya. So Sai has forgotten to enter the invoice in her purchase journal. See, purchase journal. So what effect will we have on Sai's accounts? So what is the entry? What is the entry for purchase? Purchase account debit to Sai account. Purchase account debit. Purchase account debit to Jaya's account. Purchase account debit to Jaya's account. So you have to debit purchase and credit Jaya. Why? Because purchases is an expense. So Jaya is creditor. So supplier. So should be credited. So we have not done this. We have not done this. So it is under added. It is under added. So this is the correct answer. So simple it is. So if you understood the concept, it's very simple. Otherwise, it's complicated. So don't try to mess up. Take some time to understand the question. So then the concept is very clear. Then let us have a look what is this. Deepak's transactions for me were as follows: bought goods, sold goods, bought goods, purchased, purchased, return, return goods, purchased. So So basically, this is a books of question on books of prime entry. So you have to write various books of prime entry like purchase journal, sales journal, purchase return journal, sales return journal, and you have to write cash book also. Then you have to do the posting. So it will take considerable amount of time. So you can try working out this problem on your own. So if you have any doubts, you please let me know in the comment section. So I will definitely uh, discuss this question once you let me know. Okay. So till then, have a good day. Good night. Dear friends, welcome back to Shasha's virtual classroom. So this is the practice questions from balancing the accounts. Balancing account. So we'll discuss this. So before this, you can just try answering yourself and you can cross it with answer. Which of the following is account is most likely to have a credit balance? So capital account will have credit balance. Obviously, it is capital. Discount allowed is always a debit balance because it is an expense. Office equipment is an asset, so it is a debit balance. Rent is also an expense. So again, the question is whether the rent is payable or receivable. Since it is not mentioned anything, on assumption that this is rent receivable, if it is assumed that rent receivable, then it is a credit balance. If it is assumed as payable, if it is assumed as payable, then it is debit balance. So since it is not clear, we will assume. So we have to choose between these two, capital and rent. So mostly it will be capital, which is always normally likely to be a credit balance. So when must the balance of each account be known? Each day, each week, when a bookkeeper is available, when a trial balance is prepared. So obviously when a trial balance is prepared. So balance of opening account at the end of September. So this is the nominal amount discount allowed. So discount allowed. So balance. So we have added 234. So that is balance. See, balance is 3,234. So it will be carried on, but it will be carried forward straight away. It can be straight away carried forward to trial balance. So here we just put the total and carry forward to trial balance. Discount received. Discount received account. So 100 plus 220, 130. So balance carried on. So this also can be straight away carried forward to trial balance. So next one, JNP limited accounts. JNP limited account, purchase returns, bank. So this side there is total of 1340, and this side there is total of 740. So what we have to do? So 1340. So this side to make it 1340. So it is 740. So 700. So if we put 700 here, so there will be balance carried on. Balance carried on. So 700. So the both the sides, the always total will match. So 1340. So we get 700 here. match. So it will become 700. So it will be very important. Next, A and B limited. A and B limited account sales. So total sales. So we have sold to A and B limited, and we have not received any money from them. So just
And you can cross check with the solution here so that you're confident whether you understood the concept or not. Complete the table ticking the boxes that
so
discuss the given amounts.
700
Questions completed total. The derivative
plus
system
450 is 1150. So
so
1150. So it will be balance.
something you have. So it is a resource control by
Correct.
enterprise from which
So 1150 will be the balance. Carried on. So both the sets it should be 1150. 1150.
so what is liability? Liability is something you owe some other person. So you have to pay to some other person. So that is known as liability. Revenue or other income is that part of those items.
So then is some George account. So what is George account? So George account we have sold for 2300 and we have received, we have settled it. So he has paid. So everything is clear. So 2300 is sent, 2300 is sent. So there is no question of balancing account. Motor vehicle. So balance carried on zero.
So rent is normally
So that both the sets is the same. Cash account. So normally it will have debit balance. Debit balance means debit side will be every. So 800 plus 70 is 900.
so let us
So 900. This side it is 220, 45, 265. So 900 minus 265.
nothing is specified, you see the amount here. So this was not specified
635.
and income also. So it is doesn't make any difference, but normally it is taken as expense.
So
Nothing is specified, but it says
balance carried on is 635. So the total, if you put balance, will be
interest received. Interest received is something which you get on your deposits. So you have kept the money in
so to actually practically do the problem how to balance, you can see cash book problem. So the previous for your question 4.1, activity 4.1, there we have I have clearly discussed how to balance, how to write the total, everything. So here bank account again. So here credit balance is here. Since credit balance is here, see I have 5,300 and this side it is 3,500. So since it is credit balance is here, so it will be here this side balance carried out will be this side. So 5,300 minus 3,500. So 1,800. So balance carried out will be 1,800. So this side total it is 5,300. So this side also it becomes 5,300. So explain why trade receivables have trade balances, why trade payables have trade balances. So trade receivables is normally an asset, so from which funds are receivable. So they are always show debit balances because they have received they owe us money, so owe business money. So whereas trade payable are liabilities. Dear friends, welcome back to Chapter Social Counseling. Today we discuss activity 5.1. So before having a look at this solution, you can try working on the solution on your own, and you can cross check with the solution here so that you are confident whether you understood the concept or not. Complete the table taking the boxes that describe the given consequences of the business. The first step is completed for you. The derivatives is an asset. So what is before this? Let us just what is liability, what is revenue, what is expense. So asset is something we have. So it is a resource controlled by an enterprise from which future benefits are expected to something you own and you something that is owed to you is an asset. Okay. So what is liability? Liability is something you owe to some other person. So you have to pay to some other person. So that is known as liability. Revenue or the income is that part of those items which you keep getting and which you can use for your business running a business operation. So it is income for you. So it is generated regularly or it is main source of your operations. So expenses, the expenses which you incur like salary, rent, all those things. Okay. So rent is normally. So rent is let's assume it's an expense because since they are not specified. So if you see other line here rent receivable, here rent receivable is there, so this is an income. So let us assume on certain things. So this is the rent paid or payable. So this is an expense. Since nothing is specified, you see the amount here. So if this was not specified, you would have written it as expense also and income also. So it is doesn't make any difference, but normally it is written as expense. So when nothing is specified, when it says rent, it is expense. Yeah. So loan is a liability, something which you have to pay back. So loan you have taken from someone, you have to pay back. So interest received is something which you get on your deposit. So you have kept some money in bank. So you have earned interest on that, so that you can use it for your interest receipt. Interest paid is an expense, so it is an expense. So when you go right here. So trade receivable is an asset. Why? Because we have not of credit and that person has to pay. So these are customers. So rent and trade receivables is also known as trade debtors, receivables, goods receivables, all together is known as trade receivables. Trade receivables is something which is owed to you. So which is owed to you. Okay, so it is an asset. So inventory is also an asset because it is something you have held in your hand. So it has got value, you can sell and you can get money. So it is an asset again. So discount allowed is an expense because it's a loss. So if you allow a discount, you know you have to your money will be lost, not be getting anything. So that is allowed, it is an expense. Postage is also an expense because postage is the money spent on sending laterally postage to courier or all those things and all. So then next postage is done. Bank account is an asset. So normally bank means it is bank balance. So normally bank means it is bank balance. So it is an asset. So rent receivable. So what is rent receivable? Rent receivable is a revenue. So it is an income which you keep getting. Trade payables. So trade payable is a liability because it has to be paid. So trade payables are liabilities. So they include creditors, they include bills payable. So all those money which are owed by you. So you have got on credit, you have to pay them back. So that is liability. Computers is an asset because it is something you have which you can use in business, which you're using in business. Wages is an expense. Discount received is a revenue or other income. So interest received is normally other income. So discount allowed is discount received is also other income because interest received is not main revenue from operations. Whatever is not from main revenue operations is considered as other income. Okay. So rent receivable also can be considered as other income. So all these are other income. So what are revenue, main revenue? So if it is a finance company, then interest is a revenue. So if it is a trading company, then sales, whatever sales you are making. So that is our revenue. So you have to be very careful with the revenue or other income. So that is the end of this is the exercise 5.1. Activity 5.1. I hope you have understood the concepts. So we can proceed further. So welcome back, dear friends. Let us discuss activity 5.2. So which ledger? So what are the different ledgers? So there is general ledger. So there is the customer's ledger. There is supplier's ledger. So okay. So those are the various ledgers. So let us have a look at the various ledgers that are possible. So see, here these are the list of ledgers. Division on the ledgers. Ledgers can be divided into sales ledger, purchase ledger, general for nominal ledger, private ledger for confidential amounts which are personal in nature and not recorded there, and cash book for the bank and cash flows. We use cash. So sales ledger to record sales, purchase ledger to record purchases, general, other items other than cash in bank. So private ledger. So other than which is not recorded normally, which is a confidential nature, and cash book. Cash book is for the bank and cash accounts. That is whatever is received, whatever is paid, all those are bank accounts. Okay. So capital is general ledger again. So customer who buys goods on credit. Customer who buys goods on credit. So it is we are selling and who is buying. So customer who buys goods on credit. So when you are selling, that the other person is buying. So these are credit sales ledger. Supplier of office equipment. So whatever it is, whether he is a supplier of goods or supplier of office equipment, whatever it is purchase ledger. So but since it is not merchandise, okay, so it is office equipment, it is asset. So we have to be careful. You have to ask yourself whether it is asset or merchandise. So what is merchandise? Merchandise is those things which you buy to resell. So when you are purchasing office equipment, it is not a merchandise. It is not a merchandise. You are buying it as an asset. So it will be recorded in general ledger. So it will not be recorded in purchases ledger because it is not purchase of merchandise. Thank you. Okay. So bank amount will be recorded in bank ledger itself. Bank or cash book we will say. Okay. So bank or cash book. So wages is in general ledger because it is an expense. Sales will be recorded in nominal ledger. So yes. Okay, once again, sales ledger for the accounts of customers that buy on credit, only credit customers. These are receivables. So these are customers that buy for the accounts of customers. Okay, it is not for sale. Sales, even though you mention sales ledger, it is not for sale, but it is for the accounts of customers that buy on credit because customers and credit are related. So purchase ledger. So even though it is purchase ledger, it is for the accounts of suppliers. It is not for the account of purchases. It is for suppliers. So general or nominal ledger for assets, liabilities, revenue, other incomes. So revenue is what? Sales, right? Sales. Revenue is nothing but sales. So sales are recorded here. Other income. So other income is like interest, all those things, expenses. Expenses again purchases. Okay, so all these things are recorded here. Private, so that is like we cash book for the bank and cash accounts. So cash book for bank and cash accounts. So very important. So again, often MCQs and also keep a note on this. So very important. Okay, so sales is general ledger. Okay, so general or nominal, it's for nominal. Nominal, so general or nominal. Why? Because it is revenue. Wages is instance. Okay, so be careful. So this is how we have to understand the concepts, and so that the concepts of accuracy as you proceed from A levels. If the concepts are not very clear, you will get hiccups. So you will struggle. So you will struggle in A levels to secure very good marks. So there is no shortcut. Please remember there is no shortcut for success. You have to put in a lot of efforts. So you have to practice a lot. Try to understand the concept. It's very important. Understanding the concept is very, very important. So this is the end of activity 5.2. So now let us continue with activity 5.3. So activity 5.3. So activity 5.3, complete the following sentences mentioned in the correct word from the following list. So simple it is. So dash ledger contains the accounts of suppliers from whom the business based on credit. So dash ledger contains the accounts of suppliers. Suppliers. Purchase ledger. Purchase ledger, no? Purchase ledger. Purchase is related to suppliers. Suppliers means those who supply material to you. Suppliers means those who supply material or goods or merchandise. Those who supply, okay, those who give on credit, okay, so on credit. So very important. So don't get confused with suppliers. Suppliers means whom you purchase, from whom you purchase, from whom you purchase. Purchase on credit. From whom you purchase on credit. Okay. So the heating and lighting account is proven in the dash ledger and is an example of dash. So the heating and thermal is stored in the general ledger. General ledger or nominal ledger. And is an example of nominal account. Expense account, okay. So expense account is expense. So goods bought on credit are recorded in the goods bought on credit. Goods bought on credit are recorded in the again. Where we record? It is non-current, expense, purchase, general, sales. So we have to choose from this, right? So purchase ledger contain the accounts of goods from whom the business is correct. So the heating and lighting account is storage correct. Example of expense account. This is also correct. This is lower. This is lower. Then again here, what else is there? Sales. Is there anything related to sales? Goods bought on credit or recorded in the? No. Not in sales. Not in sales. Non-current, no, non-current. So only three types of ledger. So only three ledgers. Okay, so when they say ledger. Okay. So then goods bought on credit are recorded in the general ledger. So then a dash is a set what use in the business for a long period. So non-current. So we have chosen journalist, you are journalist, nothing is related to sales. You just see the dash ledger contains accounts are sold from the business based on credit. So purchase ledger. Negative accounting account is stored in the general ledger and is an example of expense account. So goods not on rate are recorded in the general ledger. Okay. So then dash is non-current. So this is again purchase ledger whatever. So general ledger. So a non-current asset is bought for use in the business for a long period of time. So it is non-current asset. So this is the end of our activity 5.3. So very simple thing. So if you get accuracy again, the concept should be very clear. Okay.
So let us start. So before starting, so property.
So dear friends,
Property is in this.
welcome back to Business Social Class. So classification and division of ledger. So let us have a look at the practice questions today. So which amount is most likely to be kept in private ledger? So drawings, interest received, credits, what is very private? So obviously drawings is very private. So how should the cash discount be classified? So how should cash discount be classified? Discount allowed is an asset. No, it is not an asset, it is an expense. So it is income now, it is liability. Discount received is a liability now. Discount received is an income, yes. Expense now, asset no. So B. Explain how it can be useful to group accounts into different categories for the purpose of classification and presentation, and the account becomes easier. So discuss why a business will use more than one ledger. So again, for specialization, so we can have a group of people maintaining the specialized in particular group, and it will become easier also to verify and cross check and to keep theoretical accuracy. So this is the end of practical questions. So let us continue in the next. Dear friends, welcome back to Shasha Subject Class. So today we will be discussing activity 6.1. So prepare a trial balance from the following balances that have been instructed from the books of small online related and 31st December. So they are given assets, liabilities, expenses, all these things. So based on this, we have to prepare trial balance. So before having a look at this session, I request you to try this problem on your own. So basically, it's very easy, a very simple topic. So I think you will be able to do it. So you can then cross check with the solution. So prepare trial balance from the following balances. Okay, so how do we do it? Trial balance, extracted from small online retailer let's start. So before starting, property. What is property? Property is an asset. Asset always show debit balance. Property always show debit balance. Motor vehicles. Motor vehicles is an asset. Always it shows debit balance. So office furniture. So remember one thing. What is that? So when you are learning certain time, you have to remember assets and expenses. Have debit balances. Normally have debit balances. Assets and expenses normally have debit balances. Similarly, liabilities and income or revenue have credit balances. By default, okay, by default, they are always assets and expenses. Assets and expenses are always debit balances. Liabilities and incomes are always credit balance by default. Okay. So office furniture is an asset debit balance. So computer is an asset debit balance. Sales is a revenue income credit balance. Sales written exactly reverse of sales, it is debit balance. Purchases is an external debit balance. Purchase returns is entirely reverse of purchase returns, it is credit balance. Motor vehicle expense is debit balance because it is an expense. Advertising is an external debit balance. Office expenses is an external debit balance. Stationery is an expense debit balance. Cash is an asset debit balance. Bank credit. So it means it's a liability. So credit balance. So capital always a credit balance because it's a liability to the business. So drawings always debit balance because it is exactly reverse of capital. So now we can prepare the trial balance. So write down all the names of the accounts: property, motor vehicle, office furniture. Property, motor vehicle, office furniture. Property 100,000. So motor vehicle 80,000. Office furniture 14,000. Office furniture 14,000. Computer 2,000. Sales 40,000. Computer 2,000. Sales 40,000. Sales return 600. Purchases 6,000. Returns 500. Purchases 6,000. Return 500. Motor vehicle expenses 4,000. Advertising 1,600. Advertising 1,600. Office expenses 1,000. Office expenses 1,000. Stationery 400. Stationery 400. Cash 200. Cash 200. Bank 300 credit. Capital 11 lakh, 110,000. Capital 110,000. Drawings 3,000. Drawings 3,000. So the total is, if you add both the sides, it is 150,800, 150,800. So it will match. So this is activity 6.1. So this is done. Okay, so this is over. So let's catch up with the next class. Till then, have a good day. Dear friends, welcome back to Shasha's Software Classroom. So let us discuss activity 6.2 today. State which of the type of errors each of the following represents. customers invoice has been omitted from the sales statement. So we need to mention the type of error. So we need to write the type of error here. So before this, let us have a recap of what type of errors and what are the different types of errors. So basically, there are 6 types of error that occur when debit and credit totals in the trial balance agree. They are also type of error. Error of omission. What is error of omission? A financial transaction omitted completely from the books. So omission is nothing but omit. Omission is nothing but omit. So the name itself suggests, okay. So omit. So omit. So omission. So omitting means leaving out. So financial transaction omitted completely from the books results in there being neither a debit nor a credit entry for the transaction. This could happen if a transaction is not entered, not at all entered. Okay. So not entered in the book of trial entry. So the entry itself is not recorded. Not recorded. You have purchased, but you are not recorded. You have sold, you are not recorded. So expense and income, you are not recorded. So that is what example is $100 of equipment is bought for cash. The transaction is forgotten and not entered in the equipment or the cash. It is not recorded at all. So there is no debit and there is no credit. Okay. So the next one. Error of commission. Error of commission means you are giving something more. So commit. Okay, you are giving something extra. So here it is omit. You are leaving out. Here we go. Skipping. So here it is. You are giving some extra. A financial transaction is posted with the correct amount to the correct side of the wrong account. Okay. So what you have done, you have posted, but you have corrected. You have posted it to the correct side of the wrong account. Account is wrong, but the account is in the same class. Account is in the same class. So the payment for the stationery is posted to the advertising account. Instead of treating it as a stationery expense, you are treated as advertising. So both are expenses. Stationery and advertising are both class as expenses. So same class. Okay, so this is very important. Same class. So expense or minimum or asset or liability, whatever. So it is the same class, but instead of posting to one account, we have posted to some other. So that is extra you have put in some other. Error of principle. What is error of principle? So you can so you don't know the accounts. Suppose someone doesn't know the accounting principles. Doesn't know the accounting principles. Ignore it. Ignore it. He doesn't know the accounting principles. So what he does, instead of recording it as an expense, he will record it as an asset or something. For example, a financial transaction is posted with the correct amount to the correct side of the wrong class. It is wrong class. For example, there you can see payment for fuel on vehicle has been debited to the motor vehicle. So vehicle, fuel for vehicle is a nominal amount debited to the motor vehicles account. So it is an asset account. So basically, revenue has been treated as capital expenditure, and capital expenditure has been might have been treated as revenue expenditure. Instead of the motor vehicles running expense amount, motor vehicle expenses are classed as expenses, but the motor vehicles are not current assets. Okay, so it is wrong class. Ignore it. So what has happened? The person doesn't know where to record. Instead of recording it, fuel for vehicle is recorded as motor vehicles. So that is wrong. So ignore it. Means he is not following the accounting principle. He is not following the accounting rules. Rules are not followed. This is same class. Okay, next. Error of original entry. So what is error of original entry? Original entry. So at the time of recording, the first time, so wrong amount is entered in the book of trial entry. So what is the book of trial entry? You record it for the first time. So there itself you have written it wrong. So wrong amount is entered in the book of trial entry for a financial step. See, here then it has been entered, but the amount itself is wrong. At the time of entering the amount is wrong. So original entry means book of prime entry. So first recording, first time recording itself is wrong. So next, complete reversal. Complete reversal of entries. Complete reversal means instead of debiting they were credited, instead of crediting they were debited, something like that. Okay. An account that should have been debited has been created, and the account that should have been credited has been debited. So a payment made to Sam is debited to the bank account and credited to Sam's account. So a payment made to Sam is debited. Actually, it should be credited to the bank account and credited to Sam account. It should be debited to Sam account because it is paid. See here the accounting principles. So whatever we have learned in first lesson. So cash transactions and credit transactions you have to apply it. So if you are not understood there, here also you will not understand. So be careful. Okay, so your concept should be logical flow of concepts. It should be logical flow of concepts. So if you understood everything before this, then even this you will understand. Otherwise, you will not understand this. So please don't try shortcuts in learning. Never learn shortcuts. So a payment made to scan is debited to the bank account and exactly reverse, complete reverse. It is complete reverse. Okay, it is complete reverse. Instead of debiting, you have credited. Instead of crediting, you have debited. So compensating errors. So what happens sometimes? Errors will offset. So and then so the compensating errors. So compensating means one will offset the other so that there is no different outcome. So they compensate one another. So two or more accounts that cancel each other out. And was the 100 in sales channel is posted to the customer account as 1000 and the same amount the sales channel is added to lower 200. The debit balance on the customer's account and the credit balance on sales account will be underrated 200. See what has happened? 1000. Instead of adding 1000, instead of writing 1200, they have written as 1000. And what has happened? One place they have written as 200, and the other place they have not written. So because of that, they cancel out, and the net effect is nil. So the debit will be equal to credit. So ultimately, what they are trying, what it is told here is they cancel out. Simply they cancel out. Okay, so they cancel out, and the error is not at all evident. Okay, error is not disclosed. Error not disclosed. In trial balance, they offset each other. One error offsets another. One error offsets another. So two or more errors that cancel each other. Okay, so this is what you need to know. So first you need to understand this. Then only you should do that problem. So now having understood that, now we will discuss it. Okay, customer's invoice has been omitted from the sales account. Omitted. Error of omission. Simple. A purchase of 100 has been entered in the purchase journal. So purchase journal original entry because first customer we purchase verified purchase journal. So original entry purchase amount has been entered in the purchase journal. So it is error of original entry. Next, discount received from Bali has been debited to Maya's account. So what has happened? We have received the discount and it should be credited or debited. Yes, it should be debited. Discount received will be debited to one person. What has happened? Instead of debiting one person, it has been debited to another person. So it is error of commission. Because you have given credit, you have given debit to Maya instead of money. So you have debited. So it is correct. You have debited to instead of one person, you have debited to another person. You have just given more So what will happen? Payment of advertisement account has been debited. So it should be debited or credited. It should be credited. It should not be debited. Correct? No? So because money will go from where? And credited to the advertising account. So it should be debited to advertising account. So it is complete reverse. Error of complete reverse.
And expenses are debits.
Entries were 100 too high overrun on both the heating and lighting and the sales account. Okay, see, heating and lighting is expense. So expense has increased. Expense overrun means expense has increased. So sales account, income also sales account. So income also has increased overrun. Both are overrun. So expense is debit, sales is credit. So what will happen in this case? This is overridden. This is also. So debit is also increased. Credit is also increased. So it will offset. So it is compensating error.
Very important to
Compensating error. So next entries 250 were too high.
so before
Overridden on the heating and lighting.
consider
Heating and lighting. So expense.
so plant and machinery is a debit balance, so this is correct. Loan from debit.
So overridden to the heating. So expense has increased debit. And 52 under added. So expense again it is expense. It has been under added. So it has under added and it is credit. That is also debit. So that is also debit. So this is also debit. That is also debit. Instead of instead of adding into heating and lighting, it has been added to rent and payable account. Both are expenses. So instead of adding one to another, it has added. So it is compensating because both are compensating. The net effect is nil. Expense will increase, expense will come down. Instead of adding this amount, it has been added to this amount. So the purchase of office furniture has been debited. So error of principal. Okay, office expense. The purchase of office furniture has been debited to office expense account. So it has been debited to office furniture, but has been debited to office expense. So principal, error of principal. So the rule has not been followed. The person is ignorant about the rule. So rule has not been followed. It is error of principle. That's all. So this is end of activity 6.2. So this is very important topic. So you have to be very thorough in this concept because this concept again we will discuss in suspense accounts. So where you will have to pass journal entries and suspense account to nullify to rectify the suspense account and all those things. So this is very important lesson. It will actually break your head if you don't understand this concept. So try to understand this concept very clearly. Be thorough in this lesson. It's very important, particularly errors and how they are passed. So unless you know how to move forward, you don't know how to move back. So moving forward is first thing you have to know, then moving backward. So that is why a lot of students they struggle near the exams. They struggle because nothing will enter into their head. So students should start learning from the day one so that they don't struggle near the exams. They have to struggle from the beginning, not near the exams. So ultimately the end result will be zero. So they will do that.
So therefore this is a very simple question. So unless
Dear friends, let's continue with activity 6.3. See, an inexperienced bookkeeper has extracted the trial balance as 31st December 2022. It does not balance. Rewrite the trial balance, rewrite the correct trial balance, and correct the errors. So basically, we need to rewrite the trial balance. If there is any mistake, we have to do it. So you know, all expenses, all assets, and expenses are debits. All incomes, all liabilities, and revenue or incomes are credits. liabilities. By default, all liabilities and revenue or incomes are credited by default. Okay, by default, normally, by default. Very important rule. So before learn this by heart is whatever. So before starting this question, so try to answer yourself and then you can have it. So plant and machinery is a debit balance, so this is correct. Loan from David is a liability, so it is a liability. It should not come here. It should come here. So office equipment is an asset, so it is debit. Wages is an expense, it is debit. So rent and rates are expenses. If they are not credit, this is wrong. So 3,000 rent and rates, you are right here. So cash is normally debit balance. It is an asset, so it is normally debit balance. It is never a credit balance because cash can never be overdraft. So general expenses debit because they are expenses. Normally they are debit balances. Sales, yes, they are always credit because they are all revenue. Purchases, expenses, correct. Discount allowed is always a debit balance because it is an expense, it's a loss. So not here, so it should come here. And discount received is a revenue, it is again other income. So it should not come here, it should come here. So bank debit balance, normally trade receivables asset always debit balance. Trade payables, yes, credit balance is a liability. Purchase returns are exactly reverse of purchases. So purchases are debit, so purchase returns are always credits. So sales returns is always a credit. Sales returns is exactly reverse of that, it is always a debit. So rent receivable is an income, it is revenue, it's a gain, so it is always credit, it is not a debit. Capital is always a liability, always it is correct. And drawings is exactly reverse of capital. Exactly reverse of capital. Drawings will always come here. So now we read out the trial balance, cross check, so it should be perfect and it should be matched. So that's all. So this is a very simple question. So unless you have understood the concepts, if you understood the concept, it's very simple, very simple, very simple. So just do it. And so let's. So this is activity 6.3. Let's continue in the next class. Till then, have a good day. Dear friends, welcome back. So this is practical questions from trial balance, lesson of trial balance. So let us discuss. So before logging into this session, you can please try answering the questions on your own, and you can cross check with the solutions here. An invoice has been recorded in J. Smith's account instead of A. Smith's account. What type of error has occurred? So obviously it is commission, because instead of giving to one person, it has been given to another person. So it cannot be compensating error. So it cannot be original entry, error of principal. So it is commission, error of commission. So discounts received $100 for January has been posted to the debit of the discounts allowed account. Which effect this has on the trial balance? Discount received has been posted to the discount allowed, has been posted to the debit of the discount allowed account instead. So discount received is income. So discount received is income. But so it is credit balance. So what has happened? So it has been debited, has been posted to the debit of discounts allowed.
Dear friends, welcome back.
Debit of discounts allowed.
Class.
Discount allowed.
credit transactions.
So what effect has this on the trial balance? So too little debit.
This is from David Hopkins.
No, this is wrong. And 100 too much
Suppose the
credit.
following transactions in the books of the law.
This is
So
wrong.
it helps to write down the
100
names.
too much debit. Correct. So it can be 100 too much debit.
These are tips. Okay, so
Let us see 100 too much debit and 100 too little credit. Correct. So this can be the effect.
before you start
No effect on the trial balance. No, this is the right answer.
work out the amounts of trade
Because
and cash
a credit has been affected as debit, so it will have too much debit because you have debited. Discount received is a credit, so you are debited. So it is debited, and you are not credited to discount received. So you have not done this. So it is too less credit. So this is correct. Next. Which of the following is not a reason to prepare a trial balance? To check that the total of debit balance is equal to total of credit balances. To help find errors in the accounts, which is not a reason. Okay. So this is the reason. This is the reason to increase the sales of a business. That's also it's not a reason. Okay. To prepare monthly reports for managers. So this is not a reason to increase sales. That has nothing to do. Trial balance cannot help increase the sales of a business. So the following balances have been extracted from these books. So you can try working on this question on your own. So since you have learned all the lessons till now, so prepare trial balance. So calculate the balancing figure. So you have to put properly debit and credit, and then so let us just cross check once. So sales is the credit, so it will go to credit column. Sales return is debit because it is reverse of sales. Purchases is debit. Purchase returns is credit, exactly reverse of purchases. Wages and salaries is debit. Heating and lighting is debit because it is an expense. Rent payable is a debit because it is an expense. Rent receivable is a credit because it is revenue. Traveling expenses is a debit. So telephone expenses is debit. Discount allowed is again debit. Discount received is credit. So plant and machinery is debit. Cash is debit. Bank is also debit. Anyways, it says debit balance itself, so it is debit. So trade receivables, again it is an asset debit. So trade payables, liability credit. Loan from team, liability credit. Drawings is a debit. So balancing figure is, so capital, so basically it should be credit, but it can be debit also. So cross check, just check and put the balancing figure. It should be the balancing figure or difference. Okay, so difference between debit and credit. So that's all. This is the end of accounting system itself. So we have to continue from the next lesson. From the next session, we have to continue with final accounts, financial accounting. Okay. Have a good day. Till then, bye.
Dear friends, welcome back to Shasha's virtual class. So today we'll be doing practice exercises from credit transactions. This is from David Hopkins. Suppose the following transactions in the books of Bureau. Okay, so if it helps, write down the names of accounts. So if it helps, write down the names. These are tips. Okay, so these are the tips. So write down the names of accounts you should debit or credit before you start posting the transactions to them. Work out the amounts of trade and cash discounts before you post them to their correct accounts. So
First, let us calculate the amounts. So trade discount, purchase goods from car which cost $3,000 less trade discount of 10%. So 3,000 minus 10% is $2,700. So then sold goods to live $600 like the ruling. So return goods which had gone to around 200 less discount to car. So 200 less discount. So it was you had sold here, right? So car. So you had sold here. Now so it is being returned. So 20,000 less 200 less 10% is 200 minus 10% is 180. So purchase goods on which cost 200 before trade discount of 10%. So before trade discount of 10%. So again it will be dollar 2,800 minus 10%. 2,800 minus 10% is minus 280. 2,800 minus 10%, 2,520. So it's 2,520. So trade discount is never recorded. So trade discount is never recorded. So it is 2,520. Sold goods to change for 1,300. So this one here. Large return goods which are costing $200 less than. So this is live. We are sold for 600. Live return goods which costing $200 less discount. We didn't give live any discount. So have you given any discount? Live? No. So then this will be as it is. So $200. So there is no discount. It was not given. So it will not be given again. So again it will never be given. So even though the question says like that, but we are not supposed to go suppose because here they are not mentioned whether we are given any discount. Or it will be that there is a mistake. There is a mistake, printing mistake. So if that is the case, then yes, because everywhere it's 10% to discount. So let us consider it's 10% to discount. It will be $540. So here it will be live item which will cost 200. So minus 10% will be Gerard paid car and leave the amount due to them after deducting 5% cash discount. See, so many big calculations. Lion chip paid Gerard the amount they owed him after deducting 5% cash discount. So again you have to calculate. So how do you calculate? So let's see how to calculate.
5% is cash discount.
So this is it. So Gerard. Okay, so Gerard. These are the books of Gerard. These are the books of Gerard paid car. So we are paying to car. So remember whose books? Gerard books. Gerard will so car and okay, car. Car how much we have to pay? Car we have sold 2,700 minus we have returned. He has returned 2,780. So 2,700 minus 180 is equal to 2,520 minus 5% cash discount. So this will be recorded. So this is cash discount. We recorded. So that will be how much? Right? 3239. What is cash discount? Cash discount is 2520 plus 126. Now for result. So now live. Sold goods to live 600. Sold goods to live. Foreign link. So link foreign link here. So link right here. Live right here. Live 600. How much has been returned? So 540 minus 1. Minus 5%. 5% is cash discount. Cash. So that is equal to 360 minus 18. 18 is cash discount. So the net amount payable will be 340. Okay, then current lie and chin paid there. Lie and chin. Okay, so now link. So link, where is link? All over, lie over, all over, link. Link is 2800, it is 2520. So are we returning anything? Is link returning anything? Are we returning anything? So 2520 minus 5. So that is equal to 2520 into 5%. 126 minus 126, which is cash discount again. Cash discount. So that is equal to 239. IGCSE Chin. Where is Chin? Chin is here. Sold goods to Chin. So Chin had not returned any goods.
Return goods which are cost Gerard 200 less discount to per. So return goods which are cost
Okay.
Gerard.
Chin has not returned any goods. Only lie return. Only there are purchase returns. We have returned to Mr. Gerard has returned to CA. Return goods. Okay, so return goods which are cost Gerard rupees. Gerard dollar 200. Lie return goods which had cost 200. Lie. We are purchasing. Okay, so there is one sales return and one purchase. Chin. There is no return by Chin. Sold goods to Chin. There is no return by Chin. So 1300 minus that. So there is nothing but 1300 minus minus 5%. See, these are the calculations. So that's why it is advised that first when you work out the trade and cash discounts before you post them to their correct accounts. So first these are so many calculations. See, so many different calculations out there. Though this looks simple, some students make mistakes in even calculating this. So be careful. So then now we'll come to the main part. So which account will be debited by how much and which account will be debited by how much. So debit. Okay, so purchase goods from car which cost 300 less trade discount. So we are purchasing from car. So Gerard is purchasing from car. So purchase is account will be debited.
Gerard paid car and linked the amount to return after deducting 5%.
Account will be debited. Car will be debited.
You are making the Gerard is making the payment. Who will receive? Car will receive.
So why car account will be debited? Because Hall is giving the goods. He is the person who is giving. Okay. So when we purchase, when Gerard purchased, Hall gave the goods. He is the person who is giving. This is the account that is giving the goods. Okay. So that's why the account will be debited. So amount will be 27. Amount will be 27.
Gerard paid car.
So now, sold goods to lie for $600 less 10%. Trade discount.
So it's an income.
So 540. So sold goods. So sales account. Sales is an income always. And who is receiving the goods? Lie is receiving the goods. So lie account because he is receiving. Lie account means receiving. So that is why his account will be debited and sales account will be credited. Sales account will be credited. Return goods which have cost Gerard 200 less discount to her. So return goods which have cost Gerard. So this is who is returning. Gerard is returning. So it is purchase return. So obviously when he returns it will be purchase returns. So purchase returns will be exactly reverse of purchases. So purchase returns. Purchase returns. So how much? It is returned to car. So So car is receiving the goods now. When you are returning back the goods, car is receiving the goods. So he is receiving it, or amount should be debited. So then purchase goods from link which had cost 2800 before trade discount of 10%. So purchase goods from link. So purchase goods from link means purchase again. Purchases is always purchases. Purchases are always purchases. So purchase account. Goods from link. So who is giving the goods? So lim is giving the goods. So lim account. So lim is giving the goods. Okay. Sold goods to Chin for $39. Sold goods to Chin for $39. Sold Chin. So Chin is receiving the goods. Chin is receiving the goods. Chin account debited. Sales account. Credit. So lie returned goods which are cost you $200 less discount. Lie return. This lie return. This is you are sold to lie. Just see here you are sold to lie and is returning the goods. Maybe they are returned. That's why lie is returned. So lie is giving. So you have to give, you have to credit whoever gives, right? So lie account will be credit. And it is sales return. Sales return is reverse of sales. So it is debit. Sales return account. So then this is also done. Then now so this is also over. So this is for this. Gerard paid car and link the amount due to them after deducting 5% cash. So when you are making when Gerard is making the payment, who will receive? Car will receive. So car will receive car account, and link also will receive link account, car account, debit, and credit to bank account. But one more thing is that what is the discount account is also Gerard paid car. So when Gerard is paying car, he is not paying certain amount, so which is cash discount. So it is discount received. So it's an income. So discount received will be credited for car into 126. Okay, car into 126, and limit will be again here also discount will come. Discount received. So here also it's 126. Both for car and limit, discount received is 126. So bank account will be how much? Bank account will be 2394. What will be the amount? 2520.
Last class I have given
20 here also. 2520 here also.
very challenging because this concept of accounts of particular person is very much. So accounts of one person. Suppose the following transaction belongs of both Brian and see what is
Or how much you have to do?
Brian
Or you have to do it.
Brian
2700. What is the discount?
get the transaction
No.
because
This is straight discount. Straight discount. Straight discount is right. So you divide it this. This is divided by this.
so you should be not be confused. You should not get
Then live chill paid. So live chill paid means obviously money will come into bank. So live pays how much? Live pays 342. Live pays 342. So live and when we pay when they are receiving lesser amount. So here there is no discount for him. Then what is brand doing? You have to see live from the point of view. Brands is selling the goods, sales for it. For brands it sales, and for Ken it is purchases. So brand sales receive. Who's receiving? Ken is receiving. Discount receive. And when Ken is purchasing, who is giving? Discount receive is it's not discount receive, discount allowance. So when you pay short, discount allowed is 18. Now, Ken sold goods to brand. So here it is brand. Goods to brand. So bank account. So here in this case it is 1, 2, 3, 5. So discount allowed is 65. So if brand is purchasing, who is giving? Ken is giving. If for brand it is purchases, then for Ken it is sales. So simply created display this. So that is so now we have to prepare ledger accounts and close the accounts. Prepare ledger account and close the accounts. So start with this. So it's risk. So we have already done this. So we can do the rest of the part. So if required, you can do it in the next class. So dear friends, last class I have given you the this is alignment from David Hopkins. So this is very challenging because this your concept of so accounts of particular person is very much. So accounts of one particular person. Both the foreign transactions of both Brian and Ken. See what is Brian for Brian the transactions will be different. For Ken the transactions will be different. Because he is buyer, he is a seller, and if he is a seller, he is a cash. So here it has been asked name of accounts to be debited, name of accounts to be debited. So you should be not be confused. You should not get wrong, get it wrong. So you cannot, you are not so see, right? So, but here the question is, your both the transactions, so both brand and Ken. But here they have asked you to write name of account to be debited, name of account to be debited. But whose books? Is this whatever you are writing here, are these related to brand or are these related to Ken? So, what is the best remedy? Let us for the time being, we consider this as a piece of brand. And for Ken, we will write separately. So now when is paid? Brian is paid. Brian has paid. Brian has paid. So cash.
Yes. This one.
Okay, books of Brian. So what is Brian doing? You have to see from the point of view. So Brian sold goods. He is selling the goods. So it is sales for him. From Brian it sales, and for Ken it is purchases. So when Brian sells, who will receive? Who is receiving? Ken is receiving. Ken is receiving. And when Ken is purchasing, who is giving? So this concept is very clear. Now, Ken sold goods to Brian. So sold goods to Brian. So sold goods to Brian. Sold in Brian. Brian is purchased. Brian is purchased. So it is purchased because these are the goods of Brian, right? So you are right in the goods of Brian. So it is purchases for. So if Brian is purchasing, who is giving the goods? Ken is giving. If for Brian it is purchases, then for Ken it is sales. And the other side is Brian. So the understanding should be very clear, crystal clear. So don't get confused. Don't get confused. Brian sold goods to Ken. Again, sales. Sales. So again, this Ken is receiving it. So if it is sales for him, it will purchase for this. So here, then Ken sold goods to Brian. Means Brian has purchased. So then, yeah, if it is purchases for him will be sales. So if it is sales this side, then who is receiving that? Ken paid Brian for the goods he bought on. Ken paid Brian. So Brian is receiving money. Is receiving cash. And he is allowing discount because it is a loss. He is receiving less. Then who is giving? So obviously Ken is giving. When Brian is receiving, Ken is giving. So now Ken paid cash. Cash is good. And he's paying less. So if he pays less, it is discount received. So it is an income. And to whom? To Brian. Brian paid Ken for the goods he had bought on 2nd April, let's say cash. So now when he is paid, Brian is paid, Brian has paid, Brian has paid, so cash. So he has paid less discount. So it is yes. So here it will be if it is discount received for it. Here cash and discount. And here it will be. So after doing this, you have to prepare the ledger accounts. Ledger accounts of Brian separately and Ken separately. So purchase account, how many ledger account? Purchase account, sales account. get the amount, discount receipt, cash for all the records will come from this, and this. So many accounts. So we prepare the ledger accounts. So we prepare the ledger accounts. I will put it as an assignment to you, so you can try it on your own. So let me see, and I will discuss this in the next class. Here it's last class we had discussed this problem. So you can see still on the screen. So you will have it. So we will now enter the following, enter this prepare ledger account for the following transaction. So we'll post the entries to ledger accounts of brand. So how to do? So we post. So books of brand. Okay, so books of brand. So first we'll copy books of brand. So can be debited with sales. First entry can be debited with sales. Can be debited with sales. Can be debited with sales. So sales can be debited with sales. So what is the amount that we see? So the amount is 50 and date is products. Next one, credit can with persons. Credit can with persons. Credit can with persons. Persons. So what is the amount? So the amount is 500 best in December. So 500 best in and the difference again. So Purchases. Can we grant this what often considerably less cash discount? So credit can with cash and discount. Credit can with cash discount. Credit can cash. Cash and discount. So cash and discount. How much for this you want on first step? You want for 300. So we got a discount of 3%. So we bring 45. So discount level is 45 and rest is 2.
So now we can see how this
Rest is 2. Rest is what is it?
cash is
Now 10. So cash has to come. Cash for advance pay. Get out.
all these things are very simple, but very basic and very important. Because these concepts are clear, going ahead you will get confused. Then lot of students they ignore these topics, they take it for granted, they forget this. After this, they will get some concepts. So teachers are not used only to unnecessary things, redundant things. They are teaching with a purpose. So return just to fill up the pages, but with a purpose.
this, for the question one, let's say cash second minus balance 20. This one missing is 20. Balance is 30. This one missing is 20. Balance is 30. Now it is. So these are the yeah. This is how you have to do it. Similarly, so now you can see how it is. So we just now we can just have a look. So this one is C. This one is C. This one is C. Dash. Cash also. So here we are. So it will do. So okay. Okay, so I would like to mention that all these things are very simple, but very basic and very important. Unless these concepts are clear, going ahead you will get confused in a lot of other concepts. Lot of students they ignore these topics, they take it for granted, like you see afterwards they get some concepts. So teachers are not used to teach you unnecessary things, redundant things. They are teaching with a purpose. The books are not written just to fill up the pages, but with the purpose. So please follow it strictly, do it sincerely, study sincerely. So now, so again, I will leave it to you. If you want me to do even that part, please make a comment in the comment section of the video. I will do it. Otherwise, I am not going to do that. It is a thing that you have to do. So, then, bye bye. I will
cost to Piccolo. So return goods to Piccolo purchase return. Purchase goods from this is purchase goods. Purchase register. Sold goods to purchase. Sales register. Purchase goods from Piccolo. Purchase register. Card return goods which are costing 300. Card return. So it's card is so I'll just taking the customer only. So sales return. Return to burger. So purchase return. Sold goods to final sales register. So return receive checks from final car and purchase. So we have to record in type for the payment and for the amount received and for the we have paid. So now we have to record it. So how do we record it? So first entry, so we'll record entry wise. So first entry, purchase goods from Piccolo for 10,000 less trade discount of 20%. So we don't record trade discount. So we never record trade discount. We have to record the transaction at net amount. So that is at 80,000. So 10,000 for 10,000 20,000 is 20,000. 10,000 minus 2,000 is 8,000. 8,000 will be recorded in purchase register. So purchase register Piccolo date. Purchase register.
Dear friends,
Purchase register.
welcome to Shasha's virtual classroom.
Okay.
So today we will look at problems from this planning tool. So in this lesson we will learn
trade discount of 10%.
how we record fruits of planning, how to prepare fruits of planning. So this is a problem from David Hopkins. So Mrugatech has the following transactions all on trade. So purchase goods from Piccolo for $10,000 as trade discount of 20%. Piccolo only 5% carry discount. Sold goods to Snapple for $2,200 as trade discount of 10%. We allow Snapple 4% cash discount. Purchase goods from Walters to be 8,000 as trade discount of 10%. Walters allowed Mrugatech 5% cash discount. Sold goods to Car for $1,200 as trade discount of 10%. We allow Car 4% cash discount. Snyder return goods which are costing $200. Return goods which are called $400 to all the Piccolo. Purchase goods from Burger for 7,000 less discount of 25%. Burger allowing cash discount of 4%.
So we have to record like this.
Sold goods to Colgate for $3,000 less discount of 10%. We have the 4,000 discount. Purchase goods from Piccolo for $6,000 less discount of 20%. Piccolo allowing 5% cash discount. Car can return goods which are costing 300. Return to Burger goods which are cost $1,000. Sold goods to Simon for $80 less trade discount of 10%. So that allowed 5,000 cash discount. Receipt checks from Simon Car and goods respectively. So accounts receivable are G and send check screenshots to the workers and balance. So then enter the transactions from March included books of payment and process in good form for the proper amount. The transactions should be dated however for the activity equal the dates and both the transactions to the correct books, the correct journal and therefore and the correct ledger. So we should record this in the books of payment. So where should we record this? So what are the books of payment? Purchase goods, purchase register, sold goods, sales register, purchase goods, purchase register. Sold goods, we have to record in sales register. Snyder return goods, so Snyder is obviously customer, so all sales return. Return goods which are cost to Piccolo. So return goods to Piccolo, purchase return. Purchase goods from this is purchase goods. Purchase register. Sold goods to purchase. Sales register. Purchase goods from Piccolo. Purchase register. Card return goods which are costing 300. Card return. Police card is obviously to the customer only. So sales return. Return to Burger. So purchase return. Sold goods to final sales register. So receive checks from Simon Car and purchase. So we are recording type for the payment and for the amount received and for the account. Piccolo for 10,000 less rate discount of 20%. So we don't record rate discount, so we never record rate discount. We have to record the transaction and take the amount, so that is at 80,000. So 10,000 10,000 plus 20% is 2,000. 10,000 minus 2,000 is 8,000. 8,000 we recorded in purchase register. So purchase register equal to 8,000. Purchase register equal to 8,000. Okay. So similarly, next. Sale goods to Simon for 1,200 less trade discount of 10,000. So sold goods to Simon. So we have to enter in sales register. So 1,200 trade discount of 10,000. So sales register Simon. So date particular it is Simon.
So it's not 400. So it is $320 and burger is 140. So we have to record it net of discount. So we have to record it sales register, sales journal,
sold goods to Simon for 1,200 less than trade discount of 10%.
purchase return journal. So we have to record it all the journals. Then ultimately we have to record it
All the details. So we have to record like this. So everything we have to record in each and every book respectively. So sales register will look like this. So Simon 1,080, car 2250, or the 2,700, Simon 16%. So you can see. So it is Simon sold goods to car, sold goods to birthday, sold goods to Simon again. So 4 sales entries are there. So we have to record it in this particular style here. So this is known as format or whatever. So we have to record in this particular way. So the transactions will be recorded in this particular format. So format is important. So then the next one we have to record in purchases. So we have done purchase metrics of it. So purchases will look like this. So we have purchased from Piccolo, Walters, Burger, and again from Piccolo 4,800. So we have to enter in purchase journal like this. So take some time to write down. Then we have to enter in sales return register also. So sales return register, what do they write? So whatever the sales we have returned, all those entries. So let us see what is the sales return. So
these are all sales.
Simon return. Simon we have sold to Simon. So Simon return, which had cost him 200. No, 200. So Simon 200.
These are all purchase returns. Again, these are purchases. These are the cash discount. This is cash discount. This is cash discount. So after the
So like this, similarly we have to record all the
so the net
sales return.
ultimately
Simon return.
so first we calculate
Car also return. So Simon and car we have to enter. So the entries will look like this. Simon 200, car 400. So similarly purchases also we have to record. Purchase returns also we have to record. So what are the purchase returns? Purchase returns are returned goods which have cost 450 crore. 450 crore means obviously Piccolo has given 20% trade discount. So which had cost him 400 means
all these three guys have paid.
that is the net discount before discount. Which had cost $400 to Piccolo. So that is before discount.
So how much they have paid and what is the discount?
So we have to take after discount and we have to record it after discount. So returns, purchase returns we have to record after discount. So it's not 400. So it is $320 and burger is 1,000. So we have to record it net of discount. So we have to record it sales register, sales journal, purchase journal, sales return journal, purchase return journal. So we have to record in all the journals. Then ultimately we have to record in cash book for the payments and receipt. So what are the payments that are made? So after doing all these entries we have passed. Purchase goods. So purchase goods because we have passed all these entries have been made. All these entries have been passed. So now last entry receipt from check. Receipt checks there. So we have to consider the discount also. The discount part, everything we have to consider. So let us make the working. So here it is. So Smile, we have sold to Smile worth this one. These are the returns total. Again we have purchased. Again we have sold this one. So total amount is 2,500. So totally 2,500. We have given a discount of. We have allowing discount of 5%. So the discount amount is 125. So the net amount 2375 we will be receiving. So I made all the amounts, list of amounts. So these are all sales or purchases. So these are all sales. This is also sale. These are all sales returns. These are all purchases. These are all purchase returns. Again these are purchases. These are the cash discount. This is cash discount. This is cash discount. So after this is percentage of cash discount and this is amount of cash discount. So the net amount ultimately received or paid is coming here. So we have to do like this. So first we calculate. So this is the amount, net amount. These are the amounts that are received, and these are the amounts that are discount. So we have to repeat. So where do you write? So all these three guys have paid. Three guys have paid. The amounts we have received from accounts receivable. The discount we have allowed. The cash we have received. The discount we have received. So how much they have paid and what is the discount? So this is what is cash book and cash book will look like this. So this we have to account and that is also done. So now we are allowed them a discount. This is the discount we are allowed. We entered. We recorded. We prepared sales register. We prepared sales register. We prepared purchase journal. Prepared sales journal or sales register. Sales journal we prepared. We prepared purchase journal. We prepared sales return journal. We prepared purchase return journal. And we have prepared cash report. We have prepared. So now what is that? So now we have to prepare
what are the ledger accounts? We have to prepare all the ledger accounts of all the parties. So sales account. Sales account is always a credit balance. So we are not supposed to record each and every entry. We have to record the total. We have to record the total in sales account. So sales account we have to record the total.
This is the amount we have received. So all these amounts we have received. And we have paid
Of sales,
to these three people. These three people we have paid.
total of purchases, sales returns, sales returns, purchase returns,
And we have got discount. These are the discount values. If we calculate,
so how do we record? So I come to ledger. So sales always is a credit balance by sales journal
so ultimately the payment,
we have to record here. So how much
the amount we have paid.
so then sales return. Sales return. Sales return is reverse of sales.
So this is how the cash book will look like. The amounts we have received from accounts receivable, the discount we have allowed, the cash we have received, the discount we have received, the cash we have paid. So this is what is cash book, and cash book will look like this. So this we have record, and that is also done. So now what all we did? So we entered, we recorded, we prepared sales register, we prepared sales register, we prepared a purchase journal, we prepared sales journal or sales register, sales journal we prepared, prepared purchase journal, we prepared sales return journal, we prepared purchase return journal,
Now when I have to record individual entries in
and we have prepared cash reports. We have prepared cash reports. So now what is left? So now we have to prepare ledger accounts. So what are the ledger accounts? We have to prepare all the ledger accounts of all the parties. So sales account. Sales account is always a credit balance. So we are not supposed to record each and every entry. We have to record the total. We have to record the total in sales account.
now we have to record
So sales account we have to record the total. So
so how do we record
so first let us do the total.
so who is capable to do the
this is the total of sales, total of purchases, sales returns, purchase returns, sales. So how do we record? So they come to ledger. So sales always is in red color by sales general here. So how much to record this here. So then sales return, sales return is reverse of sales to sales general. So sales return is general. Purchase return. Purchases is always debit. So to purchases general. So total amount purchase general. This is the total amount what we have here. So remember Malari I record individual entries in purchases account. So we have to record the total. Then purchase return. Purchase return is reverse. So general purchase return. So we have to record this. Now we have to record entries related to people. So how do we record entries related to people? So who is capable is the customer. Piccolo is supplier is accounts payable. So we have to credit it. So purchase. Purchase we have to record. So how much? Piccolo 8,000.
burger also we have purchased from burger. So
purchase return is also there.
so there are purchase returns as well. So we have this year we have paid
How does purchase return?
cash to burger. So what is the
Purchase return is paid from
there is no discount? There is a discount, so just see. Then let us go through this. So remember
so the
we have the records purchases. So then cards car. So we have sold goods to car. So we have to enter sales. We have prepared car account. We have even made the sales account to
paid
we
return.
are allowed in discount. So
Purchase return is
record that
paid return.
and we have paid.
So then
We have received cash.
we have paid.
Then
So we have got some discount.
customer we have sold in
Discount fixed is
2700 and we have allowed some discount and we have received balance amount. So done. So what is left? Burger account.
24.
Debit,
So amount we have paid.
received discount.
Amount we have paid is cash. How much we have paid?
70 we paid in
So you can see the cash.
burger. We received discount of
118 pesos.
received discount of
So we have to see here and then
discount of 170.
so 118. Now let us just check. So now we add all this. So that will be
Cash we have paid.
okay. So finally we have paid everything. So this is how the each and every account will look like. So you have to do the posting. So then accordingly we have to
Cash we have paid. Burger.
prepare all the list.
Then which account is left? We have to prepare
So now
allowed and discount received.
we prepare ledger accounts.
We have to
So we have to see the transactions and then accordingly we have to prepare. So Piccolo we have purchased.
discount allowed. We have allowed
We have purchased from Piccolo and there was purchase return of 320
we allow discount to
and we have received a discount
so we allow discount to
and ultimately we have paid. So this is how we have to record, seeing the debit side, credit side very carefully. Then Piccolo's account is over. Now we have to prepare Snyman's account. So Snyman is a customer. We have sold goods to him. So we have sold. We have returned also. So we have received. We have got a discount and we have paid. So what are the amounts? Sales, sales, sales return. So discount allowed, cash. So Snyman's account is also done. So now water supply. Water is a supplier, is a accounts payable. We have purchased from him. So these are the purchases. We have received discount and we have paid cash also. So the discount we have received is 360 and cash we have paid is 6,840. So we can see from the cash book. Then again burger also we have purchased from burger. So 5,550. So there are purchase returns as well. So we have paid
see the
cash
very
to burger.
simple but unless
So what is the discount?
unless you do all these steps
If there is no discount,
understanding will not be clear.
there is a discount. So we just see.
And ultimately
Then let us first do this. So remember the number very good. We have to record purchases. So then cards, card. So we have sold goods to card. So we have to enter sales. We have to prepare bank account. We not given discount, so we have to record that, and we have paid, we have received cash, so even that. Then voids account, if the customer we have sold it, so 2700, and we have done some discount, and we have received the balance amount. So done. So what is left? Worker account. We didn't give discount. Let us check whether we did give discount. We received discount from worker or not. Worker, yes, 170 we paid in 400. Worker, we received discount of 170. We received discount of. We received discount of 170. So cash we have paid. So this is the amount of cash we have paid. Well, then which account is that? We have to prepare discount allowed and discount received. We have to enter discount allowed and discount received. So discount allowed now we have received. So let us see. Discount allowed. We have other discount to these three people. Receivables. We allow discount to account receivables only, right? So we allow discount to receivables. So we allow discount to receivables. And discount allowed is obviously loss expense. And what is the amount? Amount also is in this. What is the amount? These are the amounts. These are discount that we have. So, and we have received discount from accounts table. We have received discount. So we have to record here. So it is an income. So debit it. So who are the tables? Who are the accounts tables? These three are accounts table. Ticolo, Walter, and Ticolo, Walter, and Bergera. We are accounts tables. So we have received discount from them. So the amount is this. So the amount is this. And this. Okay. So this is how we have to see this. The chapter is very simple. That unless otherwise you won't do all these things, unless you do all these steps, your understanding will not be clear. Your understanding of the subject will not be clear, and ultimately will get stuck in accounts receivables, accounts payables, even the advance entries, whatever are required. At that time, you get stuck. So they look very simple. So at least one or two problems you have to do. So kindly ensure that you do this problem without fail. So when this is done, so what I do is I will give this problem as a assignment to you. So this is also from David Hopkins. So you can just try this problem on your own. So then, if you have any doubt, you can let me know in the comments. I will help you out. I think you can do it on your own. So I'm 100% sure. So please try and use it. So we can move on to the next lesson. So this is very simple. So one or two problems are more than sufficient. So if you want, you can do this. So if you let me know in the comment section, I will definitely do it. Otherwise, I will assume that you have understood and it's very simple. So we'll move on to the next lesson. So next lesson is how to balance the accounts. How to balance the accounts. That is what we are going to learn in the next lesson. So till then, bye bye. Dear friends, so continuing with the books of science. So this is another column which is there in David Hopkins. So prepare journals with suitable narratives to record the following. So prepare journals only to ledger accounts, never to other books of prime entry. See here, journals with suitable narratives to prepare journals only to ledger accounts, never to other books of prime. Received from Mumtaz invoice number 506 dated 3rd March 10,000. This was in respect of the purchase of a machine on credit. So this is the purchase of machine on credit. Okay, so it is purchase of machine. Machine is an asset. So it is not purchases. So it will not be recorded in purchases account because it is not purchase of merchandise. So it will be recorded in journal. So the entry will be recorded as machine upon debit. Mumtaz. Why? Because we are purchasing from Mumtaz. Okay, we are purchasing machine from Mumtaz. So the entry will be machine upon debit to Mumtaz. From debit. Mumtaz upon credit. So the amount will be, so what is the date? Date they are not mentioned. So they are mentioned just A. Okay, invoice number 506. Purchase of machine on credit. So what is the amount? Amount is 10,000. 10,000 dollars. 10,000. So you are trying the conditions.
You see, what is the entry? What is the question? Invoice number 998 dated 7 March 2000. Given us and paid for by check. So there is a check payment also. But we should never record check payment. Check payment will be recorded in this. So only first part, which is purchase on credit from Yunus, only that will be recorded. So remember, if you record,
That's it. So we have to record it. So it will not go to purchase account. So no subsidy. Books of primary entry, book of primary entry. So we have to record it in journal. Journal form.
never come in any of the other books. Will always come
So
in
next,
journal format or
invoice number 495 dated 6 March. Sold to Wayne.
are capable of being recorded.
Sold to
Any of the
Wayne. The invoice has been entered twice in the sales check. So has been entered twice. Has already been entered, but it is entered twice. So we have to pass rectification entry. So what is the entry? When we make the same, the entry will be rate to sales. So now you have to reverse the entry. Rate to sales.
what you have not recorded in sales return.
Now it will be sales
Sales return journal. So what is
account.
the recording? What will be the entry? The entry will be
Rate.
and then the next step is you have to write down.
So the amount is 675.
Record the entry. So how
sales recorded twice now reversed and repeat. So this is also next week. So then we'll see what is the next entry. Invoice number 998 dated 7th March of 2015 respect of delivery land purchase on credit from Venus and paid by check. So delivery land purchase on credit from Venus. Delivery land purchase on credit from Venus. So 40 to 50. 4,000. But you see, what is the entry? What is the question? Invoice number 998 dated 7th March 2000 purchase on credit from Yunus and paid for by check. So there is a check payment also. But we should never record check payment because check payment will be recorded in cash. So only first part, which is purchase or credit from Yunus, only that will be recorded. So remember, if you record, if you write payment entry, then it is wrong. Very wrong. So never do. Okay. So accordingly, you have to be very careful when writing the entries. All these entries, which never come in any of the other books, will always come in journal proper or general journal. So this is general journal where we are recording because none of these entries are capable of being recorded in any of the prior, neither in the sales book nor in purchase book, neither in sales return nor in purchase return nor in cash. So other than that, whatever is there, that should be recorded in journal form. So next, credit note number 103 dated 10th March, $1 is sent to Brownie but omitted from the sales return journal. So you have given credit note, but you have not recorded in sales return journal. Now you record it. So sales return journal. So how do you record it? So what will be the entry? The entry will be, you have to write down in sales return journal, and then the next step is you have to write down the journal entry, that is you have to record the entry. So how do you record? Sales return amount debit to Brownie account debit. So you have to credit Brownie. Sales return account debit. Brownie account. So you can write the LPT valuation. So 190. So it's negative. So you can write down negative. Sales returns more so return more reported. So next one. Invoice number 854 dated 15th March 1300 for goods purchased from Sandra. The invoice has been posted to Gita's account in Netherlands. So what has happened? It has been posted to Gita's account. It is entered in purchases account, but the posting has been done wrong. The posting is wrong. So instead of posting to Sandra, the posting has been made to Gita. So it is purchased from Sandra. So you should have credited Sandra. Instead of crediting Sandra, you have credited Gita. So what you have to do? You have to credit Sandra and debit Gita. So the entry will be Sandra account debit to Gita account debit. So the entry will be Gita account debit to Sandra account debit. Gita account debit. Amount wrongly credited to Gita. No. So now so this is how you have to file the rectification entries. So here you can get, see it should be in debit column, it should be in credit column. Mission account debit, total account credit, sales account debit, balance account credit, delivery bank account debit, bonus account credit, sales returns account debit, revenue account credit, Gita's account debit, Sandra's account credit. What is the amount? So the amount is 1300. So all these are rectification entries. So if you observe, all these are rectification entries. None of these entries will come either in the neither in the books of revenue, neither in sales register, sales this one journal, not in purchase journal, not in sales return journal, not in purchase return journal, not in cash book, neither of the books that will come in the residual book, that is journal. So carefully you have to do this. So this is how we have to perform. So this very important aspect. So very under chapter is based on this suspense account, rectification, suspense account. Lot of questions are asked in AS level. IGCSE also a lot of questions have been asked. So you have to be very thorough in this aspect. Debit and credit aspect you have to be very. So we will catch up in the next class. Till then, yes, friends. This is these are exam practice questions from books of primary. So this is again from David Hopkins. So let us discuss. So exam practice this question. So we will basically number one. Tanya purchase goods for 1,000 less 25% trade discount. So trade discount is never recorded, but should be considered. So that is 1,000 minus 25% is 250. She was allowed a cash discount of 10%. So cash discount will be considered at the time of payment. So entry will also be passed. What amount should she enter in her purchase? Purchase general she has to record 750. So discount is never recorded at the time of purchase entry. Trade discount is recorded. Trade discount is recorded, but cash discount is not recorded at the time of in the purchase entry. It is not recorded in purchase entry. Next, Lara purchase goods costing 1,800 less trade discount of 30%. So 1,800 minus 30%. So that is equal to okay, so she was allowed a cash discount of 5%. She was allowed a cash discount of 5%. She has to pay less. So how much she has to pay less? She has to pay 63 less 5%, no? 5% of this. So 63 less. So this one. This should be how much should Lara have to pay for the goods? It is 1,190. So when we subtract this one, it is 1,190. So this one, next. Okay, there are exam still questions. So similar questions have been asked in the AS level exam. So these are not A level exam, A level AS level. So but IGCSE also they have been asked. So then coming to this, Cora sent an invoice to Maria for 2,000 less 20% trade discount. So Cora sent an invoice to Maria for 2,000 less 20% trade discount. So okay, so 20,000, 2,000 less 20% trade discount is 2,400, 1,600. So 1,600. So trade discount will be considered, but never recorded. So we have to take an amount. So 1,600 it should be recorded with 1,600. Cora has omitted to enter. She has omitted. Cora has omitted. So has sent an invoice. She has to enter in her sales agent. She has not entered in the sales agent. So obviously what will happen? Sales account will be understated by 1,600, not 2,000, because the trade discount will be recorded. So even Maria's account also will be understated by 1,600. The answer is second comes this one. Shivam has received a check of $1540 from Raju with full settlement of a rate of 7,700. How do you please be recorded in above? So what has happened? Shivam has received a check. So he has received a check of 1540 from Raju with full settlement of 1,700. So it is a discount factor. There the discount factor 1700 minus 1540 is 160. So this should be recorded. Discount allowance should be recorded, and it should be recorded. How should this be recorded in this? So nowhere this should be recorded. Bank account this should be recorded, and this should be recorded. We are consider as we have received three numbers from this. So NP this one is accordingly the debit and credit aspect should be very very clear. So practice these questions again and again. Often more and more questions we have to practice. So maybe lot of MCQs we can discuss in the meantime, but before that, let us go through the entire syllabus so that the concepts are clear. Otherwise, just by solving the question papers or just by working out the question papers near the exam is not sufficient. Remember, slow and steady wins the race. So never ever think of shortcuts. Never resort to shortcuts. Start studying from day one. So start studying from the day one. So let's catch up in the next class. Basically, the next class is how to balance the account. Till then, dear friends, welcome back to your classroom. So this is balancing of account. So this is a question from David Hopkins. So basically, it's a very small question. So, but in this lesson, we will go to learn how to balance an account. So balancing is nothing but totaling of all the values and then finding the difference and putting it on the right place. So that is what is balancing account. So this is the last step before preparation of trial balance. After this, we will be preparing trial balance. So before that, we should know how to balance the ledger accounts because trial balance is prepared on the basis of balances of ledger balances of ledger. So in this question, this is a small question. So first, let us make a list of debits and credits so that our writing the ledger entries will become easier. So let's classify and write which amount to be debited, which amount to be credited in which case. So paid to savings, paid savings into business bank account. So bank account, money is coming in bank, cash account, and capital. So borrowed goods for resale on credit from loan. Borrowed goods, so purchases. Paid rent of a shop by check when sold goods to bargain on credit, sales, bargain, sales, made cash sales of goods for money was used to set up cash flow. Made cash sales of goods, cash sales, return faulty goods to go, returns, to return, जो paid by check for the share code after deducting the cash discount. So you have paid Joe when. So we have paid to Joe and we will receive a cash discount. So this is discount received. So then by checking obviously the bank. Then paid for postage by cash. So postage. So now we have to prepare all these accounts, bank account, capital account, purchasing account, draw account. So ledger accounts, prepare necessary ledger accounts. Read column cash. Record the transaction. So most of the entries will come in cash book also. So and some entries will come in ledger account. So then balance the accounts at 31st March and take out the balance. So we have to balance all. So then what we'll do? So we'll start preparing all the accounts one by one. Okay. So capital account, purchases account, new account, rent account, bargaining account, postage account, sales account, purchase returns account, and discount received account. So all these accounts we have to open. So now, what is the percentage paid in savings in the bank, business bank account? 10,000. So that is on March 1st. So March 1st, bank account should be debited with capital and capital account should be paid with bank account 10,000. March 1st. Capital account should be debited with bank 10,000. So then credited capital account will be credited. So capital account will be credited on March 1st. So bank account. Then first entry is completed. Bought goods for resale on credit from Joe. Bought goods for resale on credit from Joe. So that is on March 2nd. Purchases to Joe. March 2nd. Purchases. And yours account will be credited. Purchases. So what is the amount? Amount is
are always sales, whether they are cash sales or credit sales, or if you want, you can write it separately. Credit sales and cash sales 4,000. So this since this is simple problem, okay, you can write
Then
both.
what is the next entry?
So
Paid rent of shop by check.
how much you
Paid rent of shop by check on the same day. Paid rent of shop by check.
are receiving cash. So when is it?
So March 2nd.
It is on 3rd March. 3rd March. So March
Account.
no cash. So or whether you can write sales also.
So March 2nd.
It is not wrong to write sales. And in cash
By
note,
checking.
so
Bank account.
what is the meaning of cash note? Keep
What
it
is the amount?
handy. Keep it handy.
The
Cash
amount
note
is
generally they are good
1,000.
and they are kept handy. So sales,
1,000.
receiving.
So the entry is complete. So now on to the next. Sold goods to Barney on credit.
Now
Sold goods to Barney on credit. So
return
sold goods to
quality
Barney
goods to Joe.
on
Return quality goods to Joe means from Joe we had purchased, now we are returning. So it is purchase return 200. Fifth. On fifth there is purchase return. On fifth there is purchase return. Okay.
sold goods to Barney on credit. Barney.
How much?
What date?
200.
So it's on 3rd March. On 3rd.
Don't forget to mention the currency.
3rd March.
So to whom we are from Joe we are returning. Who is Joe to whom? Joe to whom?
So you know why it is debited, why it is credited, right? So this all these aspects are clearly explained in chapter 1 and chapter 2. So if you have any doubts, you can just revert back to chapter 1 and 2 to see which amount is debited and why and how. So that the concept is clear. So don't assume presume without half knowledge don't try to do the problem. So be sure, 100% sure before starting the entries. So don't commit any mistakes so that the concepts are clear. So if the concepts are not clear now, then everything will go wrong. So the amount is 2,000.
So my entry is complete. So now come to pay Joe by check the goods we had bought after deducting 5% prices. So
So everything will go wrong. So be careful.
so
Then,
we have
so the entry is complete.
how much
Sales entry was complete.
we are paying?
Made cash sales of goods. The money was used to set up cash flow. So
Purchase
you are receiving cash on selling of goods, cash sales. So cash sales are happening. So sales are always sales,
sales
whether they are cash sales or credit sales,
cash
or if you want, you can write it separately, credit sales and cash sales separately. So this since this is a simple problem, it's okay. You can write both merged together. So cash you are receiving, how much you are receiving cash? It's 550 bucks. So 550 you are receiving cash. So when is it? It is on
190
3rd March.
the discount.
3rd March.
190 the discount.
So March 3rd. not an issue. It is not wrong to write bill. And in cash terms, we write. So, what is the meaning of cash note? To keep it handy. To keep it handy. Cash to keep it handy. They have sold some goods and they have kept money. So, sales. The same date. Cash account. By 50. Okay, now coming to the next part. Return 40 goods to Joe. Return 40 goods to Joe. From Joe, we have purchased, now we are returning. So it is purchase return 200. Fifth. On fifth, there is purchase return. On fifth, there is purchase return. Paid for postage by cash, that means paid for postage by cash, paid for postage by cash, noted 70. How much? 200. Cash, 200. Don't forget to mention the currency. So, to whom we have written? Joe we have written. Very good. So, March 5th. What is the value? 200. 200. So, 200. So, please complete. So, now come to pay Joe by check the goods we have bought after deducting 5% taxes. So, cash discount. So, we have to calculate how much you are paying. So, 4,000 is the purchase and 200 is the return. So, 3,800. 3,800 we have to pay 5% cash discount. You have to deduct and pay 3,800 minus 5%. 3,800 minus 5%. You have to deduct and pay. $190 is the discount. 190 is the discount. 190 is the discount. So you are paying Joe. Joe. Then now stop. So 190 is the discount. So how much you are paying? 3610. 3610. You are paying. So when you are paying this, you are paying this on 7. So you are paying this on 7. So you are paying this on March. What is the amount of rent that you are paying? As everything is entered in cash book. Won't be okay. So then what you have to do? Then they have paid 1,000 and you paid it by check. So this is also done. Now, carry this one over. Paid for postage by cash 20. Paid for postage by cash 20. So paid for postage by cash what date? 7 days. Postage. Postage account. Then cash. So postage account you are entering. Postage account also. So you are entering postage account. Cash. 27 March. So Joe, you have paid very, very gently with the rules. You have paid to go. How much you have paid to go? We have received cash discount, something like that. Discount, received, and we have paid. Then we go bank account. The bank account is 810. One 190 is the discount received. So discount received also should be entered. Discount received should be here. So Joe has Joe so 190. So the entries are over. So all the entries have been made. So please cross check whether all the entries have been done. So you can cross check and sure, but we also cross check. Then now prepare the necessary ledger accounts and keep on cash. So we have prepared keep on cash flow. Balance accounts at 7th March and bring down the balance. Now we have to balance and bring down the. Now this part is remaining. So we have to learn how to balance the account. So this we are going to learn. This is the main thing we will be learning in this lesson. So come to cash flow. So cash flow what we have to do, has everything been entered in cash flow? Cross check once if everything has been entered. So then what we have to do, you total it up. So you total it up. That is so when you total it up, obviously Okay. So you see, in the cash column, there is a total of balance on the debit side. Bank column, there is a total of 10,000 on the debit side. Discount column, there is nil. Here, discount column, there is 190. Cash column over 20 is in credit side. Bank column, there is 4610. So how we have to balance this? This side is heavier, this side is heavy. This side is heavy. So this minus this side minus this side, this minus this. So basically, balance carry down your pressure. Balance carry down your right. Then what you have to do? You have to add, find the difference of this value and this value. You have to find the difference of this value and this value. So whatever comes, that you have to do. So is equal to 10,000 minus 4610. So 5390. See, when you put this value, this both will become equal. So the total should be such that whatever amount you put, the total will be same. This should be same. So to find that, we have to put that balance in here. This is the balance in here. That's why it's called balance rate. Similarly, here it is 550, here it is 20. So what you have to do? Here also 550 minus 20, 530. So that even this, both the total becomes 550. And what about discount column? No, never. Discount column should never be balanced because it is just it is not part of availability. We are just posting it. So we should not we have to write this directly to the ledger amount. So it is discount received. We have to write everything. We should never balance this. Remember, we should never balance discount column. Never balance discount column. So balance discount column is wrong. So when you are doing calculus columns in AS level and IGCSE, you may be are drawn to calculus columns. So never balance the discount column. Should never balance the discount. Then here, capital account should be balanced. So now coming to here, this is the cash book is over, cash book is done. So this is known as both book of prime entry and book of secondary entry. Also, it is ledger also because cash, it is cash ledger and bank ledger. So it is cash ledger, bank ledger. So that's why we never record, we never keep a ledger account for cash and bank. This is both. So it is both primary and secondary book. So now we have left out with the other account. What are the other accounts? Capital account. So capital account this side is 10,000. So this will become write down. So that both the sides are equal. So this is how do we get this? This is 10,000 minus 0 because nothing was there on the debit side. So the same value will come. So here the amount is same. So this will become balance carried down will become balance brought down. When is this? This is March 7. So total 10,000. 10,000. So balance brought down will be again Both the sets are matched. So both the sets are same. So there is no question of balancing at all. So both they are already balanced. There is no balance bottom or carry down. So there is no difference. So that's why it is not going. Then rent account is a nominal account, expense account, so it is not balanced. So just we have to total and make it to the balance. Barney account. Barney is a customer. So accounts received. So we have to balance it. So it should be balanced on March 7. It should be written as balance carried down. So that will be same amount 2000. So again, they are totally same 2000. Total should be same on both the sides. Remember, both the sides total same. So these are the totals. So what happens is 8th March, March 8th, they become opening balance. March 8th, they become opening balances. They become balance brought down. We have to bring down the balance. So that is 2000. So posted amount is not balance. It is a nominal account directly transferred to capital trial balance. Sales account directly taken into sales account directly to trial balance. There is no question of balance. Purchase return you should not do. There is a purchase directly taken to the trial balance. The discount is zero account directly taken to trial balance. So what should be balanced is only the personal and real amounts and assets and liabilities. So always assets and liabilities should be balanced. So whether they are non-current assets, current assets, non-current liabilities, current liabilities, only they should be balanced. In other words, the balance sheet items. So they are called the items of balance sheet. So these are assets. So cash is an asset, bank is an asset. So it is something which we always keep. So it will always be running. So that is right. So see here, balance carried down will become balance brought down in the next year. So it was balanced on 31st March. On 7th March, the balance was $530, $530 and $5,390. So which became opening balance on 8th March, that is $530 and $5,390. So this is how we have to balance. So this is done. Hello dear friends, this is one simple lesson with the classification of amount and use of the ledger. So we have seen in part 1, we have everything on this. So this is simple practice just to question up. So we will just discuss this. Complete the following table to indicate whether on cost percentage for the purchase of motor vehicle, motor car is revenue expenditure. It's cost. It's not good. Because it is capital expenditure. So then the payment of wages to employees is revenue expenditure. The account of customer in sales, the account for customers and booking sales, the repairs of the office windows is an example of capital expenditure. False. The purchase of one stationery is revenue expenditure. The sales account is a nominal amount. The figure and fittings account is a real amount. Fixtures and fittings account is a real account. Suppliers accounts are kept in nominal ledger. False. They are not kept in nominal ledger. They are kept in specific suppliers account. They are The day-to-day cost of running the business and an example of this.
You have to just plug in the figure. So they would have given the details. You have to just plug in the figure. What will come in debit and what will come in credit. Sales will always come in credit.
So complete the following sentence when setting the correct word from the following list. The sales account records the dash of the business and the example of dash.
To understand this, whatever you have learned till now, you have to apply and then you have to prepare the.
Complete the following sentence when setting the correct word from the following list.
So coming
The sales account records the
see
revenue. Is an example of noun. Revenue.
So remember one thing. Before preparing trial balance, just remember one thing. Assets.
Noun. The purchase of new machine is an example of capital expenditure. Non-current.
Are all debit.
Non-current expenditure. Account is an example of
Okay. Assets. Real account assets. Assets.
real account.
Plant and machinery, land,
Small items expenses expenditure recorded in
purchases,
the ticket.
wages, heating items. All these are expenses. Are all debit balance. They should be all be debit. So this will always be debit balances and they should appear on the debit side.
A dash asset is what
So
will
remember
be the
this.
business for long term.
So this is very much simple. Very basic formation to for balance. Then
Long term.
liabilities and expenses. Liabilities and revenue.
So here it's not long term.
Are all debit balance.
This capital.
Liabilities and revenues are all credit balance. So what are liabilities? Liabilities are something we owe, right? So liabilities can be internal as well as external. So internal is capital.
Very simple problem. So we wind it up and we'll continue in the next
All
class.
in the next. So same. All
Dear friends, welcome to Shashan's
internal.
lecture classroom.
So whether they are internal
So
or
today
external,
we
all
will be discussing
trade balances,
trial balance.
revenue or income are all trade balances. Always you have to write them as trade. Simple. So unnecessarily
How
don't
to prepare a trial
a
balance
lot of things.
and
Just remember this. You can do. You have to just
so
identify
there is
whether
only
you have a given
there is
particular
a
item
practice
as
exercise
revenue.
we need to come
Say
again from
sales is a revenue. So it is an income
their
balance.
workings.
So
So
sales item will be debit
you
balance.
can see
So purchases is a debit balance.
the new how we
Heating
how
items
we go sales
is again credit balance.
and
Wages is again debit balance. Heating and lighting expense debit balance. Rent payable expense debit balance. Rent receivable income debit.
prepare a trial balance
Advertising
as
expense
a 31st March 31st December when people
trial
will
balance.
have extracted from active books and calculate the balance from the
Income
capital. So we are
prepare
supposed to
this balance.
prepare the trial balance.
Income
So how do you prepare the trial balance?
plant and
So
machinery
the trial balance, the
inventory balance
format of trial balance is
debit balance. Bank balance asset
something like this.
debit balance.
So
Trade receivable asset debit balance.
trial balance or one because December 2025 particular debit.
Trade payable
So it
liability.
is a statement. Okay? So it is a
Drawings.
statement. That's why it
You
is
know
trial balance as on
it is
31st
always debit balance.
December 2015.
Drawings
So
by default credit balance.
we have to just plug in the figure.
So
So
you
they
have
would
to
have
just
given the details. We have to just plug in the figure.
get the debit
What
balance.
will come in debit and what will come in
Inside
credit. Sales is always coming credit. Sales figure will always come credit. Sales will always come calling always will be
you just
debit.
print.
Purchases always debit. Purchases always credit.
So
So
in
you
for
have
trial
to
balance
understand this. Whatever you have done till now, you have to apply and then
see the
you
question.
have to prepare the trial.
Here
So coming to the question again here.
the question is
See the question is here.
this is available. So you can make down amount
So remember one thing. Before preparing trial balance, just remember one thing. Assets and expenses are all debits balance. Okay, assets, real amount assets means uh, land and machinery, land. So all these are assets. So all these are expenses. So purchases, wages, heating and heating, all these are expenses. Are all debit balance. They should be all be debit. So this will always be debit balance and they should appear on the debit balance. Okay. So remember this learn to graph. So this is very much helpful. Very basic foundation to for balance. Then liabilities and income. Liabilities and revenue are all credit balance. Liabilities and revenues are all credit balances. So what are liabilities? Liabilities are something we know, right? So liabilities can be internal as well as external. So internal is capital. So external are like loans, accounts payable, all those are liabilities. So payables, all payables are liabilities. So these are all external liabilities, these are internal liabilities. So whether they are internal or external, they are always credit balances. Revenue or income are all credit balances. They are always your revenue and credit. So unnecessarily don't exaggerate, learn a lot of things in after just remember this. You can do. You have to just identify whether the particular item is debit or credit. So sales is a revenue. So it is a income, it is a credit balance. So sales return is a debit balance. So purchases is a debit balance. Purchase returns, purchase return is again credit balance. Wages is again debit balance. Heating and lighting expense debit balance. Rent payable expense debit balance. Rent receivable income debit balance. Advertising expense debit balance. Postage and telephone expense debit balance. Discount allowed expense debit balance. Discount received income debit balance. Land and machinery asset debit balance. Delivery van asset debit balance. Bank balance asset debit balance. Trade receivable asset debit balance. Trade payables liability credit balance. Drawings opposite of capital, which is always debit balance. Drawings by default credit balance, but it is balance figure. So you have to put accordingly. You just put it on the debit side or credit side, and then you can your total income will get the value. So we'll just do it. So we can prepare the trial balance. So seeing the question. So here you can see this is the question which is available. So you can take down, note down, or take the screenshot or whatever. Or if you have the textbook, you can use it. Or take a screenshot and then we will just finish it. So now sales. Sales is an income. Sales return is an expense. Purchases is an expense. Purchase return is an reverse of purchases. Wages is an expense. Heating and lighting is an expense. Rent payable is an expense. Rent receivable is an income. So it should come on credit side, which is certified. Or advertising is an expense. Postal telephone is an expense. Discount allowed is an expense. Discount received. So see, rent receivable receivable is a discount. So discount received is an income. Plant and machinery is an expense. Is an asset. So always a debit balance. So then delivery van is an asset. Always a debit balance. Bank is an asset. Debit balance. Trade receivable is an asset. Debit balance. Trade payables is a liability. Drawings always a debit balance. So then when we go to we get this value 210,000 and 175,000. So capital will be the balance sheet here. So what you can do is 2 lakh less 210,000 minus 174,000. So see, when you put this will both value. So this is balance sheet. So it's very simple. Just you need to know this concept. So just remember, all assets and expenses are all debit balances, all liabilities and revenues are all credit balances. Just remember this simple funda. It's very simple, very easy. So easy marks if it comes to the question. I have the question will learn this area easy marks. So don't miss out. A lot of questions are based on this balances, concept of balances. We often using this technique in solving lot of problems. So be prepared. So we'll just finish this and we'll just see the next problem. So next problem is an inexperienced bookkeeper has extracted trial balance as at 31st December from articles. It contains some errors and does not balance. Premises, this is correct. Of pandemic, this is correct. Of movement, this is correct. This is correct. Rent table is an expense, so it will not come here. So it will not come here. It will come here. So heat and light is correct. Outer operating expense is correct. Sales is correct. Purchases is correct. Discount allowed is an expense. It should come here, not here. So discount received is an income. Should not come here. It should come here. Bank amount is a debit balance, correct. Trade receivables is a debit balance, correct. Trade payables is a liability, is correct. So purchase returns. Purchase returns are opposite of purchases. It should come on the debit side. So it should not come here. It should come this side. So sales returns. Sales returns are reverse of sales. They should be debit balance. It should come here. Rent receivable. Then income should come this side. Capital is a liability. Drawings should not come here. Drawings should come here. So that's all. So you can do this as a so it's very simple done, and this is the end of bookkeeping. So we'll see. We'll start financial accounting. We'll then provide. So dear friends, so welcome to Shogun Virtual Classroom. So we'll be doing exam practice questions. This is again from David Hopkins. Similar questions are being asked in base level examinations. So this is from statement of financial positions. Okay. So statement of financial positions. Now, multiple choices. The purchase of an office computer has been debited to office expenses. So where should that be debited? Office should be debited to non-current assets, right? Because it is office computer, so it is non-current. So we should go to non-current assets. Whereas they are debited to office expenses. So what has happened? The profit has come down. So the profit has come down. The profit is understated. The profit is understated. The profit is understated. And even net current assets is also understated because it has not been shown as a part of non-current assets. When you don't show, then the assets will be understated, right? So this is the answer. Okay. Then next one. So the owner of the business has taken goods for their own use So then what happens? And even obviously the developer to complete the entry, you will not have limited to capital account. So the capital also will be overspent. So this is the way. So the following information has been extracted from the statement of financial position and the technical discipline between non-current assets of the 10,000, working capital is 30,000, long-term loan is 20,000, profit for the is 25,000, profit is 20,000. So non-current assets, working capital. So what are the steps? You have to add non-current assets and working capital, right? So you have to add the non-current assets and working capital. So that will be 3,40,000, 340,000. So long-term loan we have to subtract because it is non-current liability. Non-current liability we have to subtract. So that should be 320,000. So 320,000 is net assets. So we have done the problem already. So net assets should always be equal to capital. So what is the net assets? Net assets is 3,20,000, 3,20,000. So what was the balance of the capital amount of critical visible 28K? So this has no relevance. This has no relevance. So if the concept is clear, you will not even think about these two items. You will just straight away see this and you will select this. So that's why the concepts are very, very important. You have to clearly understand the concept. If you have not understood the concept, then we will get this wrong and we will miss it. So don't be in a hurry when solving MCQs. Be careful. Carefully you solve the MCQs. Explore all actions. Be conceptually perfect. Be conceptually strong to secure A plus in A levels. Okay. So don't be never think. So which of the statements is not correct? Assets is equal to liabilities plus capital. Correct? No, liabilities, assets is equal to liabilities plus capital. Because assets is equal to liabilities. So capital is also internal, so internal liability. So this is correct. Okay. So capital is equal to assets minus liabilities. This is also correct. Just now we did assets minus liabilities is equal to capital. This is also correct. Then capital minus liability. Capital is also liability. This is also liability. They cannot be equal to assets. This is wrong. So this is the correct answer. So liability is equal to assets minus capital. Correct. Assets minus capital will always be equal to liability. So you can do this using the formula. So the substituting here and there this one. So you know that right. So assets is equal to liabilities. So you may have already done this in basic accounting, like accounting equation. So you may have done minor problems related to this. So this is the first lesson that is not in accounting. So you must be knowing this. So when you just case by this, when this comes this side, it becomes minus. When minus comes this side, it becomes plus. So all these things, you know, if you know this basic simple math, then you can do this. So simply, so this is the answer. So this over. So we have covered statement of financial position, one simple problem of we have done MCQs also. So we have understood the concept very clearly. So please share, please spread the knowledge, please share so that others also get the benefit of my classes. Okay. So please share. Thank you. Have a good day. Good night. Dear friends, welcome to Shasha Subject Classroom. So today we will be discussing statement of financial position. So we will be this is very important class. So please have patience and focus on this. It's very okay. So statement of financial position. Financial position. by default. Okay, so non-current. First, you should understand what are non-current assets. So you have to make a list of non-current assets. The diagram which I have given. So from that you have to make a list of non-current assets. So what are the non-current assets? Non-current assets are those assets which are intended to use in the business for a period of more than 12 months. For a period more than 12 months from the date of financials. So very important. Okay. So non-current assets are those assets which are used, which are meant to be used in the business for more than 12 months from the date of financial statements. So what are financial statements? Statement, income statement, statement of financial position, and cash flow statement are known as financial statements. So basically here, what all is included? So you have to include, you have to prepare the list in such a way that most permanent ones are written down. For example, land and building. Land and building. How many years do you land and building? Maybe forever. So land, maybe you will never intend to sell. Normally you will intend to sell. And building, maybe you may again you may change it after maybe 15 years or 20 years, or maybe after 25 years or 30 years or something like that. But land will never be. It's not a building. So it is more permanent. It is most permanent. Then what is the next one? Next one is machinery. Okay, so plant and machinery. So plant and machinery, maybe you can use it for at least 10 to 15 years unless there is any technical changes. So the next one. So then comes vehicles, motor vehicles and vehicles. So because we will be using them for a long period. Then comes furniture. So non-current assets are those assets which are intended to be used in the business for more than 12 months from the date of financial statement, and they should be written down in the order of permanency. So first land and building, then plant and machinery, vehicles. So based on whatever the items the business has, based on that you have to use your common sense and you have to prepare the list. So that is the first step. You have to prepare, you have to write down the list of non-current assets. Then second one is current assets. So what are current assets? Current assets are those assets which which may vary. So immediately after 12 months, if they say in the very next day, they may change. So they are inventories. So what are inventories? Inventories are merchandise which are lying in the business after the day on the date of preparing the financial statement. So inventory. So that is one thing. Then Because when you are preparing financial statements of company, the format is entirely different. The format is entirely different. The items are same, but the headings are same, but they have to be sure that the form of presentation is entirely different in case of companies and other entities. So be careful. So this is meant only for sole traders, and you have to learn this. You have to learn this how to go ahead with preparation of statement of financial position, current liabilities. So what are current liabilities? What are current assets? Current assets are those which change within a period of 12 months. Inventories today, inventories may be something else. Tomorrow there may be something else. You keep buying and selling the goods. So similarly, trade receivables. So you keep selling, you keep receiving the money, so they will not be same. Cash also, cash will be receiving same. So that's why this will not be same. So because of this, all these are what do you say? They are dynamic in nature. They are dynamic in nature. Means they keep changing. So this is another way you can remember. You can just use your common sense to identify and make a list of current assets. What are current liabilities? Current liabilities are trade payables. Okay. So what are trade payables? So credit suppliers. So you have purchased goods on credit. You have to pay them after some time. So maybe after 30 days, after 35 days, 40 days, 45 days. So you have to pay immediately. It is payable within the period of 12 months. So this is also within 12 months. Okay, so trade payables. So again, what is the bank overdraft? What is bank overdraft? You may have made arrangement with the bank to take money for a shorter period. So that is what is bank overdraft. So then what you have to do when you are preparing the financial statement. So remember, first you have to write non-current assets. Non-current assets you have to write. Then you have to write current assets. Then current assets. What is the total? So then this one again current liabilities total. So what you have to do is you have to find out current assets minus current liabilities. So you calculate current assets minus current liabilities. So that is called working capital. So what is current assets minus current liabilities? So 2 minus. Though you are not required to write what is working capital, you don't have to write this. This is just for you to remember so that you don't mess up when you are working out the answer. So always remember 1, 2, 3, 2 minus 3. So whatever amount comes, you have to write. Then fourth one. So non-current liabilities. So ultimately this should be equal to so what are non-current liabilities? Liabilities that are payable after the period of 12 months when the data vanished. Okay. So more than or after 12 months. Particularly in this particular when the data vanished. For example, bank loan. So bank loan normally when you pay after the period of maybe pay after 2 years, 3 years, something maybe even 10 or 15 years also. So that's why it has payable after a period of 4 years. So what is the example best example for this? Maybe you have taken a bank loan. So maybe you have taken long-term loan for 9 years. So which has to be repaid after a period of 4 months from the date of statement of financial position. Okay. So then even that you have to add. You have to add this called net assets. What are net assets? All working capital minus working capital. So net assets are nothing but non-current assets plus working capital minus non-current assets. What is working capital? Working capital is nothing but current assets minus current. So very important, don't confuse yourself. Very important. So first you have to think of non-current assets. To that you have to have working capital. So what is working capital? Current assets minus current liabilities. Current. Okay. Current assets minus current liabilities will give working capital. So from that again you have to subtract non-current liabilities. So that gives net assets. So then the fifth term. What is the fifth item? Fifth item is OMC. Fifth item is OMC. Okay. So what is OMC? Capital at the beginning. So less profits. So the return will be the capital. Ownership. So that return is the ownership. So ultimately this should be equivalent. If finally net assets minus you have to follow this steps particularly in this particular manner, specific manner. Just follow this. You can do any time rather than statement of financial position as far as sole traders are concerned. So you will just work out from another problem. One simple problem to demonstrate this. How to find out how to put the statement of financial position. Till then, I will good night. Good night. Good night. Dear students, dear friends, welcome to Shasha subject class. Today we will focus on 14 points in income statement. So they are very important in the sense that most of the students they commit mistakes. Often they think whether they have to how to treat a particular item. So to start with, important considerations in preparing income statement. So income statements are often prepared in vertical form. Since it makes them easier to read, you should study and learn the vertical form carefully until you are great familiar. So there are various forms. There is the horizontal form also and there is vertical form also. But 99% of the cases you will be doing vertical form. So you will be preparing income statement in vertical form. So it is very essential for you to learn, study and learn the vertical form carefully until you are quite familiar with it. So that you can solve the problems. You will not prepare general entries for the income statements unless you are specifically asked to. They might have been shown the chapter simply to help you understand how entities are made. Okay, so there are so many entries. If you look into the chapter, income statement chapter, you will find couple of entries. They are not important. In the essence, they are not important. So you don't have to prepare unless otherwise they are asked for. So you can just know it. So in the examination, unless otherwise they are asking you to large entries, you are not supposed to. The heading is important. Okay, so the heading when we prepare, when we start any from the first thing, the heading is very important. The fact that the income statement for the year or month ended. So you have to write the income statement for the year ended. The statement covers a period of time, so it is necessary to state the period. Okay. Goods taken by trader for personal use. Some goods, sometimes the trader may take out some goods for his personal use. So what we have to do, deduct goods taken by the trader for personal use from purchases and add to price and cost price. So they would have given selling price also. So you should not get confused. You have to always deduct at cost price. You have to deduct goods taken by the trader for personal use from purchases and add to drawings and cost price. So the adjustments will be reflected two places. Carriage inward. Carriage inward is taken as part of cost of sales, not an expense. Okay. So carriage inward is what is carriage inward? Carriage inward is the amount spent on getting the goods inside the premises where goods are being traded. So that is why they are called carriage inward. So to bring in the goods inside for the trading purpose. So that's why they should be added to cost of sale. To sell the good, those are the expenses incurred to sell the good. That's why they are added to cost of sale. We should not take it as an expense. Like expense in the sense which we have to show below the text. So, it should be considered as part of cost of sales. Carriage outward. The cost of delivering goods to the customer is carriage outwards and is debited in the expense as an overhead expense. Okay. So it is debited as an overhead expense. Double check the treatment of carriage inwards and carriage outwards. So carriage inward will be reflected in cost of goods sold and carriage outward will be reflected in overhead expenses. Wages treated as the cost of sales. Goods purchased may not be in a suitable condition for selling to customers. Sometimes what happens, they may buy the goods and they may do some work on it. So further work may be required with them before they are sold. So maybe some rectifications will be or some final touches will be some work is pending. So on that you may spend some money. So the wages paid to employees for performing this work, which work? The additional work on the goods. Okay, so this one should be debited as part of cost of sale. So those particular part, that particular part of expenses, the cost which are incurred to improve the product, they should be treated as part of cost of sales. Gross profit. The gross profit is the profit on all selling goods before any other expenses are taken into account. So sales minus sales returns will give you net sales or net revenue. So with that you have to from that you have to subtract all cost of goods sold. So what is cost of goods sold? Cost of goods sold is nothing but opening inventory. To that we add purchases less purchase return. So to that we add carriage inwards, and from that again we subtract revenue. So what we get is cost of goods sold. So what you have to do from that once from net revenue we have to take out cost of goods sold, then what we get is profit. So gross profit. So what is gross profit? Gross profit is the profit on selling goods. Okay, the profit on selling goods before any other expenses is taken. When there is no trading account, when there is no trading, there is no gross profit. It's very easy. Okay. Some cases you may be asked to prepare a statement, income statement, where they will not give any opening inventory, closing inventory, even the purchases cannot be there, sales cannot be there. For example, in case of service industry, service people who are available services, service business, they may not have any inventory. So then in that case, gross profit, the question of gross profit. The words cost of sales and gross profit are important and should always be shown. Okay, so never miss out. In a hurry, what They forget to write cost of sales in the, they forget to write gross profit. So that should be avoided. So you should be very careful. So you have to write it. So the words cost of sales and gross profit are important and should always be shown. Should means it is mandatory. Always include the words cost of sales and gross profit in full. So avoid any short forms. So you cannot write COS, GP or something like that. So you should not use short forms. You have to use full form. You have to use full words. Include the words, full word. Okay. So you cannot use short forms. Any other income. You should add any other income to gross profit. So suppose you have got other than sales, if you have got any other income, you have to add it to the gross profit. Never treat it as a negative expense. Negative expense means don't deduct it from expense. Never do that. So you should not show it as negative expense in the expenses column. You have to just add it to gross profit. So because that is also income, but it is not from trading, it is other income. So that's why it should be added to gross. Overhead expenses. So we have to, after you add up other expenses, there are overhead expenses which you have to show. So there is no particular order in which overhead should be shown in the income statement of sole traders. But it is often best to place the larger amounts before the small. So there is no particular order. It is not mandatory that you have to show it in particular order. But it is often best, it is a practice, best practice to place the larger amount before the small. So then you show the bigger amount first, then you show the small. So it is also a good time to group together similar kinds of expenses. For example, property expenses, rent, eating and banking and insurance. So you can club up the similar type of expenses and you can show. There is no such prohibition that you have to. And it is not compulsory. So this is what is it is an option. So it is better if you do it. So the examiner will be impressed. Profit for the year figure. The profit for the year figure is important. You will need to use it when you prepare the next document, the statement of financial. So profit for the year, you have to show. The profit for the year is important. You have to show after the end result is profit for the year. You need to use it again when you prepare the next document. So the next the chapter after this is the statement of financial position. There you will be using the net profit whatever you have. Other chapters where income statements is prepared. See, income statement is very important. So it's very important in the sense that again when you study accruals and prepayment, this is another lesson. So another chapter, the matching concept. So in this also, if we incorporating this, you have to prepare income statement. So again there is one more chapter provided for depreciation of non-current assets. Again, there also you have to incorporate the depreciation and you have to prepare income statement. Irreversible and doubtful debts. Again there is another lesson, another chapter called irreversible and doubtful debts. There also you have to incorporate these things and you have to prepare income statement. So this is the income statement is the base. So to that you have to make lot of other adjustments. So incomplete records. Even in case of incomplete record, you may be required to prepare income statement. Not for profit organization. See, not for profit organizations means clubs and societies. So there may be a bar or cafe or something like that. So they may be doing some sort of business. They will buy some equipment, they will sell something. So all these things. So even there you need to prepare income statement and you have to show it as income. There also you need to. So it is very important lesson. So very important. So but this is the base, and you have to learn all this as a comprehensive. So that is how. That is where a lot of students commit mistake. So you have to be very careful. You have to be very attentive. You learn each and every aspect. Learn every lesson carefully. Learn every chapter carefully. Work out all the problems before attempting the main examination questions. You have to be double sure. You have to be thorough in these particular aspects. Income statement is prepared in different forms. See, there are partnership accounts. There also you have to prepare income statement, but the profit is shared between the partners. So that is one difference. And introduction to the accounts of limited company. There also you have to prepare income statement, but the format is entirely different. The form is entirely different. Manufacturing accounts, where manufacturing accounts, there are so many other aspects. So there also you have to show a lot of other aspects, and there also you have to prepare income statement. So income statement is overall, in overall is very important, and lot of questions are asked from income statement. So you have to be, it's very very important. Okay. Income statement of service business. See, people who sell their services such as accountants, lawyers, dentists only require income statement. So they don't need trading account. So that is there is no question of preparing finding out cost because there is no trading. So if the business is a service business, one which does not buy and sell, then there will be no cost of sales. Okay, there is no cost of sales. You will need to show the income which will be the fees received less the expenses to leave profit for the investor. So it's very simple. Okay, so keep these points in mind. This is very very important. So then in the next lesson we will start with working out the problems. Okay. So dear friends, coming to income statement for sole traders, the following diagrams have been extracted from Hadley Pizza as a 31st December 2015. So this is extract from David Hopkins. The following diagram has been extracted from Hadley Pizza as a 31st December 2015. Plant and machinery 25,000, office furniture 6,000, UV, first Jan 11,000, trade receivables 4,740, trade credit 1,000, bank 3,327, loan receivable 5,000, sales 72,800, purchases 28,540, sales return 1,600, purchase return 1,400, wages 3,100, rent 4,000, heating and lighting 5,120, advertising 2,400, other operating expenses 2,010, loan interest 250, drawings 4,840. Capital 20,000, inventory at 31st December 2015 cost 9,000. Prepare Hadley's income statement for the year 31st December 2015. Income statement for the year 31st December 2015. So we have to prepare income statement. So based on this information. So it is Hadley's income statement. So for the yes, December 2015. So that is the so heading is very important. So we are doing 31st and others and date is also very important. So name of the trader also income. Hadley's income statement for the year 2015. So what are the five steps? First we have to record sales and sales figure. So sales minus sales figure. So first step, sales minus sales figure. So what are the sales and what are the sales figure? Sales are 72,800, 1,600, 72,800. So it will be 71,000. So now less cost of goods sold, cost of sales, cost of sales. So in this case, what will be there? The by default, first one is inventory as a first Jan. Inventory as first Jan. So how much? 11,000. So for Jan, 11,000. Purchases. So how much are purchases? Purchases are 28,440. Then purchase returns are 2144.
Other operating expenses.
So what else? So carriage inward is there? No, carriage inward is not there. So purchases will go, purchases will go. So inventory 31st December is 9,000. Root rate 31st December. So even that we have to subtract. So if we add this, so it will be 11,000 plus 28,540 minus 2144 3739. 3739. So minus inventory as a inventory at 31st December 2019. So 37,396 minus 9,000, 28,080. 28,080. So this minus this will give you gross profit. So what is the gross profit?
Very simple question, very simple topic. But
42,000.
you will have a lot of experience. But if you remember the steps, you can just
So this is the gross profit. So to this, we have to add other income. So let us see if there is any other income is there. So okay, so there is no other income. So other income will not come. So if you want, you can just write and bring it back.
the answer will be
And
to answer whatever you have
other income. So when you are learning, you can just write so that you don't forget in the exams. So you will miss out and again you have to scan and go there and do lot of question paper. So on that side, it's better if you make a practice of writing this and you write it as zero because there is no other income. So now let's overhead expenses.
this is finished. We have completed
So what are the overhead expenses? So let us see. Wages, rent, heating and lighting, advertising. Wages, rent, heating and lighting, advertising. Wages, So during the tackle I have taken goods costing 2000 for your home use. So this will come as a deduction from cost of goods sold. Other operating expenses 2010. Prepare particular income statement for the year ended 31st March 2020. Keep your answer equity. I needed again in chapter 8. So hopefully I think we can do this problem on 2010. So possible. Take the screenshot of this question. Take the screenshot of this question and put efforts. Try to do it on your own. And if you don't get this, please. So click up. I will do it. Even answer plus 4,000 plus 5,017 plus 400 plus so then we proceed 2,000 plus so sometime just equal to 16,000 16,000 so these are all overhead expenses so minus 42,804 42 so 25,924 25,924 so what is this? This is nothing but profit. So next class we will do exam practice for. So please let me know if you have any doubt in this question. Okay. So this is how we do. So very simple. This was very simple question, very simple topic. But going forward, you will have a lot of adjustments here too. The problems will not be simple. But if you remember the steps, you can just increase the learning speed. So incremental learning. So you can learn, add more concepts into that. So so prepare RT's income statement for there. Keep your answer. It will be needed again in chapter 8. So the answer you need. So answer whatever you have got and required with us. Next lesson is statement of financial position. So in statement of financial position, we need to add the profit whatever we have. So profit whatever we have got, we need to add. So that's why that's very much important. Okay. So the balance sheet we have to replace. So that's why it is. So next one, let us see. This is finished. We have completed one question. So let us see the game question. So the trial balance extracted from the total business at 31st March 2016 is as follows. Sales 24,000, sales return 3,600, purchases 1,20,000, 120,000, purchase returns 4,400, purchase returns 4,400, inventory 18,000, carriage invoice 5,000, carriage outwards 3,724, discount received. This is other income 3,060, discount allowed 5,020, wages 36,800, rent 8,000, heating and lighting 6,450, other operating expenses 1,140, fixture and fittings 9,000, office furniture 2,000, trade vegetables 1,900, 2,040, gas balance 2,496, 2,496, bonds 20,427, capital 20,000. So during the tackle I have taken goods costing 2,000 for your home use. So this will come as a deduction from cost of goods sold. These are not recorded in the books of inventory at 10th December 2016 cost 20,000. Prepare Ticolas income statement for the effect 31st March 2016. Keep your answer. It will be I needed again in chapter 8. So hopefully I think you can do this problem on your own. So if possible, take the screenshot of this question. Wages take a screenshot of this question and put efforts, try to do it on your own. And if you don't get this, please let me know in the comment. I will do it. We will do it in the class. So otherwise, it is easy. We assume that you have understood, then you have got, you have completed. So then we proceed to the next part. So I will give some time. Just take a screenshot of this question. So next class we will do exam practice question. So please let me know if you have any doubt in this question as a comment. So we'll have a separate class or I will just explain to you whatever doubts you have. So till then, bye bye. Bye. Good day. Good night. So dear friends, welcome back. Welcome back to Vinasha's virtual classroom. So today we will discuss exam practice question from income statement. So this is income statement. These are the questions from income statement. So we will discuss similar questions might have come or expected to come in AS level question papers. So let's discuss this question paper. So what you can do is you can take the screenshot of this, take a picture or try to answer yourself. So then we can continue and just check whether everything has been done correctly. So which of the following does not appear in an income statement? So which does not appear? Carriage allowed, expense carriage allowed, income allowed will appear, discount usually will appear. So motor vehicles will not appear. So motor vehicles is an asset, so this will not appear. So the following information has been extracted from the gross balance of business. Sales 1 lakh, purchases sales 100,000, purchases 60,000, wages 21,000, closing inventory was 3,000, more than opening. Closing inventory was 3,000 more than opening. So one third of the wages was charged to cost of sales. One third of this 21,000. So, cost of sales in the trading section of income statement. What was the gross profit? So this is just working. So you can do here. You don't have to follow the rules. Cost of sales, so this is just calculate. So if you want, you can say cost of sales. So opening inventory minus closing inventory is more right. So for this opening inventory, so we don't know. So we keep it in bracket. So wages 7,000 to go in trading account. So that is cost of sales. So wages. So then what to do here? Opening stock is not given, closing stock is not given, but difference is given. So if you recollect, opening stock, opening inventory will be added and closing inventory will be subtracted. So since the closing inventory is more, so we have to subtract the closing inventory. So closing inventory. Equal. So please don't get confused. If the concept is not clear, so you just know this. Cost of sales is nothing but opening inventory, purchases, less purchase returns, less wages, minus closing inventory. Okay, so purchases is given, purchase returns are not there. So wages is given. So then opening inventory they are not given. Closing inventory was 3,000 more. So that's why we are. Okay. So very simple. So since we have to subtract, since it is more, so this is positive, this negative. So plus minus. So whichever is greater, this is greater. So that's why that is 3,000. So it is 67,000 minus 3,000 is 64. 64,000 is cost of sales. So therefore the gross profit will be 36,000. Okay. So next. The carriage inwards of business amounted to 6,000 and the carriage outward was 7,000. The carriage outward was charged in trading account. So this is a mistake. So it cannot come in trading account. Not come in trading account of the income statement in other, and the carriage outward was debited in the income statement. Carriage outward was debited in the income statement. Okay. So what is the carriage inward? Carriage inward is 6,000. Carriage outward is 7,000. The carriage inward was charged to trading system in the income statement and the other. So what has happened? Cost of sales difference. The third one, the carriage inward of the business amounted to $6,000 and the carriage output was 7,000. The carriage output was charged in trading section of the income statement in other, and the carriage inward was debited in the income statement. What has been the effect of these errors? So the carriage inward. Okay, see here. The carriage inward. Carriage output is. So what is the rule? The rule is carriage inward should be considered as part of trading system. So that is called part of cost of sales. But here what has happened? The carriage output was charged in trading system. We should not know. Carriage output was charged in trading system. So carriage output was how much? Carriage output is 7,000. So this is 1,000 more. So what has happened? So if it is 1,000 more, then gross profit will be understated or overstated. So I want you to be clear in this. So see whether it is carriage inward or outward, there won't be any effect. So from the profit for there won't be any effect. So this is correct, and this is correct. But we have to see about this which one is correct. So don't try to answer the question with the trial and error method. So try to understand the question. So work out. Take some minutes. So it's small time, a bit of time. So just to understand about this one. So third one. So purchases as 40,000. So now what you have to do? Carriage inward is 6,000. Okay, carriage inward is 6,000. So this is the actual treatment. So what should be the profit? So 90 minus 46 is, so 90 minus 40 is 50, 50 minus 6 is 44, 44,000. The gross profit should be 44,000 if the actual treatment is done. Now, this is the correct one. You are correct. So now the wrong. So what has happened? So revenue is 90,000 itself. Cost of sales purchases is also 40,000. What they have done? Carriage inward. Instead of taking carriage inward, they have taken carriage outward. Carriage outward they have taken it as 7,000. So what has happened? So this is carriage outward. So 90 minus 40 is 50, 50 minus 7 is 40. The gross profit is showing more or less because of the wrong year. Gross profit is showing less because of the wrong treatment. The gross profit is understated. Gross profit is understated by 1,000. See, this is how you have to confirm yourself. See what happens, most of the students, because of hurry in the examination, they hurry, and because of this they commit mistakes. So they try to answer it in a trial and error way and easily win this. So never do that. So hardly it will take 1 minute to confirm yourself. So it is understated. So the correct answer is understated the 1. So now we are double sure. So we have checked the figures and we are double sure. So this is the answer. So this is how we have to do this type of problems when there is a bit of confusion. So you have to confirm yourself whatever you are doing is right or wrong. So next one. So what I suggest you is always when you are doing the MCQs and whenever exercises are given, always you have to try solving on your own. Just see the question. Try stop the class, stop the video, pause the video, just try to work out the answer on your own, and then you compare with the actual so that you are then only the learning will be more effective. Otherwise, the learning will not be effective, and ultimate result will not you will not get the ultimate result. Okay, so never do that. So please follow my instructions so that the process should be served. Don't waste time unnecessarily by trial and error method. Okay. So now come to the next one. So let us see this one. Discount received amount to 10,500. Okay, discount received 10,500. Discount allowed. So the discount received has been debited. Discount received has been debited. So what we have to do? Discount received should be credited, right? But they have been debited. Okay, and the discounts allowed have been credited. Discounts allowed should be debited because it's in law, it's an expense, so it should be debited. So this is wrong. This statement is wrong. This statement is wrong. Okay, in the next statement, what has been the effect of errors on the profit for the year? So who is understated, overstated, understated, overstated. So don't try to answer this the hanky-panky way. So let us see. Let us assume and we will do the challenge. So then we will see the concept will be clear. So go for it. So profit before discount. Okay. This is the correct profit before discount. 40,000, 40,000 in both the cases. Then we'll do the actual treatment. Okay, so we'll do the actual treatment. So we'll deduct discount allowed. Because discount allowed should be deducted, right, from the profit. Because it is an expense, so it should deduct. So what is discount allowed? Discount allowed is 13,000. Discount allowed is 13,000. So what we have to do with the discount receipt? Discount receipt we have to add because it is an income. Discount receipt we have to add. Because it is an income, what is the discount receipt? The discount receipt is 10,000 pounds. So this should be subtracted and this should be added. So what will be the net profit? So what should be the net profit? 37,000 pounds. See, this is just assumption, okay? So we are assuming that this is the profit before discount. So this type of problems you have to do this way so that the understanding is clear, so that we are sure what has happened and what is the effect method. Otherwise, don't try to do some wrong methods, wrong calculations, and try to ultimately. So whatever method you do, ultimately you have to get the correct answer. So that is what it is. So what has been done? Actually this is the right one. So this is the right one, and this is the wrong one. So what has happened? Wrong one what they have done? They have deducted 10,500 and they have added 13,000. So then what is the profit in this case because of the wrong profit? 40,000 minus 10,500 plus 13,000. The profit will be 42,500. 42,000. So it is more. The profit is more. Okay. So it is overstated. It is overstated. Overstated by how much? 42,500 minus 37,500 is 5,000. It is overstated by 5,000. See, the concept we are double sure now. It is double sure. It is certain. There is no hinky panky like you are not going to guess and write the answer. Never do that. Never do that. Okay, so never do that. So the answer is overstated by 5,000. Overstated by 5,000. Okay, so this is how you have to do. What a lot of the students will do because of hurry, because of the exam stress, they will just try to guess and they will ultimately put either of this one and ultimately they will lose marks. What is the purpose? The entire year you have put efforts and because of some small mistake you will lose marks. So please don't do that. So please be careful. So please learn the ways and methods how to actually get the answer. Now, carriage inward in a trial balance is to 2,300. Carriage inward in a trial balance is 2,300. It has been entered in trading section of the income statement. Again, trading section of 34. In addition, motor expenses of 600 has been posted to the motor van account. What effect has this on the income statement? So again, we'll not just do it. We'll not just try to do blindly. We'll just try to analyze by understanding the case. So we'll just do it again. Here. So again, income statement. So let's assume. Okay. Before this treatment is again 90,000. This is right. it has been entered in trading section of income statement of 32. Wrong case. What we have done? We have taken the motor expenses of 600 has been posted to the motor van account. So motor expense is a expense. So it should go to reduce the profit. So motor expenses 600. But what they have done? Motor expenses have been posted to the motor van account. It has gone to motor van account. It has not been shown in income statement. So it has not been shown in income statement. So now let us see. So what is the right thing? After I will do the right one. So it will be 90,000 minus 2,900. 87,100. So 90,000 minus 3,200. 86,800. So the profit is understated. So what has happened? The profit is understated. It is understated. It is less, no? So it should be more. The profit should be more. But the profit is less. The profit is understated. What is the profit? It is understated. Understated to how much? 87,100 minus this one is understated by 3. Understated by gross profit. So the profit, okay, so this one. This is overstated by 3. Understated by 3. Understated by understated by 3. And even gross profit also will be understated by, and the gross profit is also understated by. Here, gross profit is okay. So we need to find even gross profit also. So my mistake. So just doing again once again. So please bear with me. So this is just to find out the gross profit. Okay. So let's average what is 20. And this is 32. This is just to find gross profit. So what is the profit? So 90,000 minus 300 is 87,700. So then 90,000 minus 86,800. So gross profit. So actually gross profit should be more. Here it is showing less. So it is understated. Okay. Understated by how much? Minus 87,700. Understated by this one. Understated by 900. So please repeat that I share. So don't try to guess follow without understanding. Have a clear cut understanding of the concept and please do it. So that each and every mark is very, very important. So please use my classes very carefully. So please share and subscribe. Let others also grow. So let others also get help from this. So be generous. So we'll catch up in the next class. Basically, I will be starting the next one that is statement of financial position in the next class. Till then, have a good day. Good night. Goodbye. Hello. Dear students, welcome to another virtual class. So today we will do a recap of whatever we have learned till now. So basically, this is a recap session. So in this session, we will discuss what all we have done till now. So the first lesson was cash transaction. So in this lesson, we learned how to record cash transactions when payments are made and amounts are received. When amounts are received in so that is what is cash transaction. Cash transaction is money is paid to someone and money is received from someone. So how to pass those entries? So that's what we have done. So here in this we have learned all about personal transactions, like when we receive money from account, personal account, how to record them. So when someone gives money and someone receives money, how to record it. And we have even learned how to record expenses, how to record when payment is being made or received. So all these things we have learned in cash transaction. In lesson number 2, we learned credit transactions. So what are credit transactions? Like credit transactions are those where where amounts are not paid, where amounts are not paid or not paid. So or not. So that is why it's called credit transaction. The payment is not made instantly, or amount is also not received instantly. So again, how to record when amount is not received, and again when there is a transaction with personal account, when there is a transaction with expense account, income account, and all other stuff. So we have learned in credit transaction. How to record credit transaction? We have learned in second year. So we have done couple of questions. So here also we have done couple of questions. In this also we have done couple of questions. We have discussed couple of questions. Please go through that. And then again, third, we have learned books of diamonds. We have learned about books of diamonds. So what are the books of diamonds? Sales, journal, sales journal, purchase journal, sales return journal, purchase return journal.
Hello.
General journal,
Hello. Good morning, dear.
or particularly all details of sales, particularly credit sales are entered in sales journal. Purchase journal, all paid purchases are recorded. Sales return journal, returns when customer returns the goods, then whatever entries made, so that is made in sales return journal. Purchase return journal, we record the purchases, we reject the material and then it is given back. So that is what is purchase return journal. So that is written in purchase return journal. So in cash book we record amount received.
So today we'll do theory from this one, yeah, commercial practice in accounting. Okay,
And even discount column also.
because lot of questions we had asked, no, from there.
So we are done how to record entries in sales journal, purchase journal, sales return journal, purchase sales return journal, purchase return journal, cash book, general journal, on journal. So what will be entered in general journal? Adjustment entry like outstanding expenses, prepaid expenses. So purchase of non-current assets, like purchase of machinery, purchase of how to rectify entries. So current non-current assets, entries related to non-current assets, rectification entries. So basically, what are doesn't come, what doesn't come in sales journal, purchase journal, return journal, purchase return journal, cash book. So that will be reflected in general journal or journal. So that is how it is. So we have done how to write these and all. So then how to post it to the ledger also journal, how to post to ledger. And again we have done division of classification of accounts, division of classification of ledger account. Ledger account and so in ledger we have done how to close, how to prepare. All these things we have done with ledger account. So then division or classification of ledger. So what is the how many different classifications there, all those things we have done. And we have learned the balancing of ledger account, balancing of ledger account. So that is how to do the balancing of ledger account. And we have done comprehensive column also. Comprehensive column to cover up all these aspects, and we have prepared ultimately we have prepared trial balance. So how to prepare trial balance? Prepare trial balance. What is trial balance? How to prepare trial balance? The format of trial balance, the procedure, the structure of the design of trial balance. All these things we have done. All this, whatever is there, whatever we have done, all this is known as bookkeeping. So all this is known as.
Okay, so what do you mean by what is the meaning of accounting?
Done by bookkeeping. Or like. So after this, the next step starts. So the next step is known as financial accounting. So
See here, this one you learn. An accounting system is a means of collecting, summarizing, analyzing, and reporting in monetary terms, information about the business, or this which is easy. Among this, whichever is easy, you can learn. So let us see if there is any other definition.
what are the different? So the main account here, see here, all basic, that's very, very important. for you to get understanding of accountancy. The
Accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by the users of accountants. Accounting is the art of recording, classifying, and summarizing a significant manner in terms of monetary transactions and events which are in part of at least a financial character interpreting the results. So whichever is easy. So I think this is easy, no? Accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by the users of accounts. You learn this one.
and when goods are returned, when sold goods are returned, they are known as sales return. We purchase goods, which known as purchases. So if the goods are not of good quality, they return the goods, purchase return. Business even receives and pays cash, that is recorded. So apart from that, there are a lot of other things which are there. So when they happen initially, as soon as they happen, we record at one place one certain, okay, certain, don't write we write in certain all sales. Sales, we record in sales. Daybook or sales register or sales is also known as sales. Similarly, some customers may return the goods, so we record them as sales return register. So when purchases are made, all the purchases are recorded in purchase. Similarly, the goods are not of good quality, we will return the goods, so they are recorded in purchase return. So when amounts are received and paid, receives and pays, receives and pays, so it is recorded. So recorded in cash. So summary of receipts and payments, whether cash right? So all these will be recorded in cash. So a lot of other entries like purchase of non-current assets. Because purchase of non-current assets are not purchased, right? So it is not done. Okay, purchase of non-current assets. All these entries are recorded in a book called General Journal. So we have to write the specific transactions in specific book itself. We cannot mix up. So the entries cannot be messed up. Okay, so this is the conduct. So in this lesson, we will learn how to record the entries in the books of private. So how will do the books of private entry? So you can see the books of private entry, the full level. So the dates will be there, particulars. So date is the date, particulars, parties is there, to whom we have sold. So obviously customers. Date will be there, customers will be there. So everything will be entered in sales. So sales return journal again, customers name. So again date, particulars, so particulars, customers and amount of the suppliers. again purchase return journal also we record suppliers. So obviously we need to clear all the issues. So this is how the entries we have to enter. So in this specific format, specific how do you say order it's required. So we have to write this specific. So this is a list. Actually, these are the list: sales journal, sales return journal, purchase return journal, and purchase journal. These are all lists. Okay, so these are all lists. Lists of so list of sales, list of sales return, list of sales purchase, list of purchase return. So everything will be there. So from here, once we write here, so what happens is
Okay, so now features of accounting. Review the following salient features of accounting. So bullet points. Write down the bullet points. Accounting is both art as well as science. First point. Second point is see this one.
there are two
Art as well as
first
science.
one is sales,
Second point is financial transactions. Third point is recording, classifying, summarizing, analysis, and interpretation. Write down this. 1, 2, 3, 4, 5, 6, and learn.
so sales, what we have to do? We have to add on this whatever the amount comes, we have to enter in sales count. We have to enter in sales. Sales account. So sales journal is different. Sales account is very important. Similarly, sales return journal, whatever the total amount we have to enter in sales expense account. About the cash expense. Cash whatever according to sales return. Like so purchases. So purchases, total purchases entered in purchases. So purchases. So again here this total amount is purchase return. So this total report. So the supplier's name, supplier's use. So the details of suppose Mr. A, Mr. B, posted to the respective ledger account. Similarly, customer suppose we are the customers, so we have to transfer, we have to make the entries, corresponding entries in debts ledger account, X ledger account, X ledger account, each ledger account respectively. So separately we have to record. Total of sales we have to record only one. So aggregate. So aggregate we record it. So no individual. Not record individual entries.
again in sales account. The total of sales journal will be recorded in sales account, whereas customers accounts will be independently recorded in the customers balance book. The same rule applies for even for sales returns. So remember, sales journal is different, sales account is different, and total amount of sales or sales return, purchases return, only total is recorded in either sales account or sales returns account or purchases account or purchases account. Aggregate will be recorded and individual entries will be posted to individual account. So then so remember this very important part. So often asked in MCQ, so you have to be very clear. So then similarly, sales register, sales return register versus sales bills. So remember, so then cash. So we will discuss the sales register, sales return register, purchase description register, purchase description register. So when we receive and pay, we record in cash book.
Okay.
Cash and bank columns. So cash book. So the
Tell me.
cash book we have to record in this. So cash book will be divided into
Tell me the list here.
parts. So debit part
You learned?
and credit. So debit part date.
Did you learn the list?
The cash folio.
Okay, tell me the list.
Remember discount. So there is a column for discount also. So when we receive money, we may allow some discount. So that discount will be recorded here. When we receive
How many?
cash,
6 things, no? 6.
similarly, date,
Correct.
folio discount. So when we make the payment, we will receive some discount. So we record the discount here. When we pay the cash, we pay the cash we record here. If we pay the check, we write it in bank column. So very important this particular format. So very important question.
No, it should come in an order only, okay? Because that will flow in an order. You have to tell it in that specific order. You cannot change the order. So you have to tell in this specific order only. So art as well as science, financial transactions, recording, classifying, summarizing, analysis and interpretation. So first this, then this, then this, then this, then this. So first this will happen, then this will happen, then this will happen, then this will happen. It is like that. These are all interlinked. This is the first step, second step, third step, fourth step. This is just meaning. This is just meaning what they are doing. So art as well as science. What do you mean by art as well as science? Art is you do it. However you do it is up to you. It is like that. Art means like that. What is science? Science says you have to do it in that specific order. You have to do it in that specific order only. Like this only you have to write. You have to write it in this format itself. You have to write in this order only. So that one. Financial transactions. So only financial transactions will be recorded. Whatever is measurable in terms of money. So and that too business transaction. Only business transaction should be recorded. Only finance. It is measurable in terms of money. Recording. It should be recorded. First you have to write it down. Then you have to classify. Classify means you have to write it separately, each group separately you have to write. Then you have to write summarize. Summarize means then you have to prepare one abstract. Then based on that you have to give your recommendations. That is the meaning. Okay. So
we just need to know how to record it and how to do it. So until then,
I mean elaborating you have to write on your in your own. See, accounting, art as well as science. Accounting is both an art and a science. It is the art of correctly recording the day-to-day business transactions. However you record, it is up to you what you have to record. That's all. It is a science of maintaining business records in a regular and proper manner, so as to obtain them business results easily and correctly. Accounting is a science because it's maintained according to some fundamental principles. It is an art because the records are designed to suit the particular requirements. Some experts are of the opinion that accounting is a science as it consists of a body of knowledge in the form of principles, assumptions, and concepts. The art of recording, classifying, and analyzing financial is called accountancy. Okay. So, however, the two terms accounting and accountancy are used interchangeably. So, that is also this is the meaning of art and this is the meaning of science. Understood? Okay. So you have to tell me in this order itself. So first is art as well as science. Second one is recording. So what is recording? No, no. What is second one? Financial transaction. So let us see what is financial transaction. Financial transactions. See, accounting records transactions and events of financial nature only. If a transaction cannot be measured in terms of money, it will not be recorded. Okay. So, for example, a conflict between production department and sales department effect, but it will not be recorded. So, accounting record transactions, events, financial nature only. Only whatever is in terms of money only it can be recorded. If a transaction cannot be measured in terms of money, it will not be recorded. Then next one, recording. Accounting involves recording of business transactions in a systematic manner. Recording is done in various subsidiary books such as cash book, purchase book, sales book, purchase return book, sales return book. The number of subsidiary books are to be kept depending upon nature and size of business. So recording should be recording of business transactions in a systematic manner. Recording is done in various subsidiary books. Means lot of books will be there in that you have to write. So classifying. Classifying means the process of grouping the entries or transactions of one nature at one place. This is done by opening accounts in a book called ledger, which contain all the accounts of the firm. Similar transactions relating to particular account for a given period are recorded at one place in the ledger. Okay, then summarizing. What is summarizing? Summarizing means process of presenting the classified data in a manner useful to the users of accounts. This involves preparing the final accounts in the form of trading account, profit and loss, and balance sheet. Then interpretation means based on that the results will be given. What is the profit, what is the loss, why it has happened. So all those things. Okay, so summarizing it means the process of presenting the classified data in a manner uh, useful to the users of account. This involves preparing the final accounts in the terms of uh, uh, the accounting statements are analyzed with the help of ratios such analysis helps the management analysis the performance and financial position of the business. Okay, so you have to learn it in a specific order. It's very important. Now, meaning of bookkeeping. So, what is bookkeeping? Bookkeeping is the art of recording in books of account monitors. The art of recording business transactions. So whichever is best, whichever is easy, you run that. So first one itself is easy, no? See the first one, Butley boy, whatever Butley boy has to. So what does it say? Keeping book is the art of recording business dealings in a set of books. This is easy. No? First one is easy, no? So what is the definition of bookkeeping? So you have to tell it this one. Bookkeeping is the art of recording business dealings in a set of books. And you have to write the author's name also. Who is according to whom? According to J.R. Bartley Boy. Okay, bookkeeping is the art of recording business dealings in a set of books. J.R. Bartley Boy. That's all. You can write any definition. One definition you can write. So if they ask, it will be for 1 mark or something like that. So you can just write that. You just learn this. Bookkeeping is the art of recording business dealings.
real accounting, there is few operations and so then what is being treated or that is not considered. So trade what is being given is not very what no. So this is a rule for real accounting. So you know what is real accounting? So when you deal with cash and nominal. So nominal accounting, the rupees debit or credited accounting. So you know. So nominal accounting has rules and regulations. So accounting. So when you are according to the questions from the accounting point of view, which is an accounting based point of view, assets normally have debitors, which is liabilities and creditors. Normally have debitors. So remember, assets and expenses normally are debitors. Okay, so liabilities and expenses are normally creditors. So even it is noteworthy that capital is also a liability. So in
Okay,
this
so it is
capital
easy one.
liabilities and goods are normally creditors. Okay, remember, a trader is not
Distinction between bookkeeping and accounting. This is important.
to clear your expenses, to
Okay.
get benchmarks, to excel in your skills.
1, 2, 3,
So that you
4,
understand
5, 6.
whether we are getting time waste. It's today I've been taking on
6 points.
classes. I'm aware of the difficulties faced by the students. Below average
Okay,
is
phone learn this to me first.
I analyze and understand what they don't really understand and how
Distinction
they
between bookkeeping and accounting. Write down this basis of distinction. First one is nature, then is scope, then is stage,
so I explain them
then results, then basis, then authority
to
level.
understand the
So if you remember this, the second bookkeeping and accounting part, you can just learn and you can write on your own. Okay, so but you have to learn these points. They are very important. So the questions can be based on this. So definitely questions will be asked on this.
these days a lot of students have various difficulties. They won't understand anything in the class. A lot of students who are pursuing online classes. A lot of students who are taken up distance learning classes face various difficulties in understanding the core concepts. So they try to understand, but most of the teachers uh, have different methodologies to explain, and few students are unable to understand. It's a hard time for the students. Myself, not being just learned, but having understood the subject as a common sense, I'm a professional tutor, professional trainer, and educator, having on-job experience and theoretical knowledge in various subjects, such as direct taxes, indirect taxes, accounting, be it financial accounting, advanced financial accounting, cost accounting, advanced cost accounting, managerial accounting, advanced managerial accounting, management accounting, advanced management accounting, financial management, operations research, quantitative techniques, business mathematics, business statistics, business economics, business studies, and various other business management subjects. I even have on-hand experience in ERP, SAP, Tally, QuickBooks, and all. So I am in a better position to explain the real logistical issues, the logistical problems, the core concepts in a better way. So a lot of students approach me near the exams for exam oriented crash courses and exam oriented coaching so that they pass their exams. I have a record 100% of my students clear my exams, clear their exams with ease. 100% they succeed. So I explain them as if they are novice, ignorant novice. Even the ignorant novice understands the subject easily. So I teach them as a common sense because any subject is more a common sense than a subject. So a student should be capable of understanding the concepts so as to make their life easier. So learning becomes pleasure and enjoy. So anyone who is interested, who wants to clear their exams with ease, without any difficulties, please get in touch with me. I'm available anytime for that. 24/7, I'm available for that. Thank you. Caring is caring. So please subscribe, share to my channel because spreading knowledge only increases your knowledge. So dear friends, welcome back. Let us continue with activity 7.2. So Vikram is a sole trader who buys and sells goods with a trial balance. So this is a question from statement of profit or loss. So we need to prepare a statement of profit or loss. This is David Hopkins, the latest book, so applicable for 25 to 25, 26. So we'll continue. Okay. So let us just so check out the items whatever are there. So before starting this, so let's have a recap of how statement of profit or loss is prepared. So first, what are the line items? So statement heading, always we are writing, so always, but sometimes it is given in the question paper itself. So anyways, we will just write on. Or, or loss, whatever the trader's name and the serial number or whatever. So what are the line items? So first one it is revenue. So revenue is nothing but sales minus sales return. So minus cost of sales. So cost of sales. So you know what is cost of sales? So opening inventory plus purchases minus purchase return plus carrying inwards minus closing inventory. So that will give cost of sales. So when we subtract revenue, cost of sales from revenue, we get gross profit. To that gross profit, we add other income. So other income is like discount received, interest received, so rent receivable, so all other income which is not other than operating income here. So from that we subtract expenses. What are the expenses? Like expenses incurred, which are like salaries, wages, rent, postage and telephone, all those expenses are taken out. So that will give profit or loss. So it's just 5 steps. So very important. So learn this because often the questions are asked in AS level. A lot of questions are asked on income statement. So that's why we have been repeating this concept again and again. Like what are the steps and what are the contents. So it's very important. Okay. So now let us just have a look at the question. So carriage inwards. So this is forming cost of sales. This is forming part of cost of sales. So carriage outwards is expenses. So discount allowed is also expense. Discount received is other income. Heat and light expenses. Insurance expenses. Inventory at 1st April 2019. So this is cost of sales.
Okay, tell me here.
Motor expenses expenses. Purchases cost of sales. Purchase returns cost of sales.
Okay, tell me.
So rent and rates expenses. Sales revenue. Sales returns revenue.
Uh,
Commission charges. So inventory at 31st March was valued at 29,143. So this is also cost of sales. So this is how we have to do. Okay. So first, as soon as you see the question, you should visualize where these items will come. So you should visualize where these items will come, so that when you are doing the problem,
That's
you
all.
are doing it like a bullet train. So very
Next.
fast, very
Next.
fast, because the questions will be very tricky sometimes. They will be very somewhat lengthy. If not one question, some other questions may be very tricky. So that's why you have to be very active. Okay, hyperactive. Otherwise, getting very good grades is not at all possible. Okay, so that is remember this. It's very very important. So now let us continue to
Okay.
just so what is there first, revenue. There are two items.
Mm.
So sales and sales return. So that is what is in revenue.
Mm.
Revenue, it is sales and sales return.
Okay.
So how much it is?
So then objectives of.
Sales and sales returns is 354987.
Okay. So objectives of accounting. So I think the last exam, this question had come, last test. Objectives of accounting. What are the objectives of accounting? To maintain records of business.
What is
You
the
written somewhere, no? This one.
So this is sales return.
Objectives of accounting. Is that with you now?
So that will give you
Okay, write down. Write down.
354.
So how many here are there? Four. To maintain records of business, calculation of profit and loss, depiction of financial position, to make the information available to various groups and users. One, two, three, four. Together.
351,000. Okay. So okay. So let us do it in a proper way, so that I don't want you to follow the same thing when you are writing. So let me just write it again in a proper format. So see, accounting as a subject is presentation, more concern about presentation. So all the steps should be as it is. All the steps should be very formal, very neat and clean, so that uh, each and every concept is explained to the examiner. So first of all, we have tried writing statement of profit or loss. So in the exams they would have given this actually. So it is not so important. Even then, if they are not given, so I am just writing here for your convenience. So if it is written, you don't have to write it. So first, we have to start with revenue. So revenue, under revenue, we'll have sales minus sales. So this is
Okay.
okay. Next, always write the dollar currency. Always you have to write. Don't forget to write this.
Tell me.
So revenue. So on the top, if you write, it is
What
applicable
are
to
the
all.
objectives of accounting?
So minus cost of sales.
Hmm.
Total estimated cost of sales purchases. So below that, you need to write opening inventory. Okay, don't forget to write opening inventory. Follow, understand, remember, grasp
Correct.
whatever. So always
So now advantages of accounting. This one, no, disadvantages. 8 advantages are right on them. So Advantages of accounting. So 1 to 8.
Right, the same line item, whatever they have written.
Dude,
See, what I advise you is,
you can see now here itself advantages of accounting. You can see now on the screen.
and then you can cross check with the solution here, so that
Mm.
you can answer. You can be sure.
You don't have it. They have taken it out.
So that it will increase your confidence.
It must be there. Check.
And it will help you prepare for examination.
Okay, good.
With
It's
lot of
not there.
answers. Okay, so first you try all
So limitations of accounting is there? No, no.
movie or as a video or
Okay.
something like that. So please try to work out the question on your own, and then you have to have a look at this. This will be more effective. So learning is
Classification
more
of
effective.
accounts. I think even this is not
It
there.
should be with fun also, but it should be more effective as well. So try to
That is there. That should
answer
be
the
there.
question on your own, and then you cross
Real personal, real nominal.
understood every concept, everything is clear. Okay.
That's not
So
real.
inventory at 1st April 2019,
Cash system, mercantile system, this is done.
84096. 84096. Okay then. Purchases. To that we need to add purchases. What are the purchases?
Do you have advantages of double entry system? Just check.
5110.
Okay, write down this much. Scientific system, complete record, check on accuracy, ascertainment of profit and loss.
What is the purchase returns? Purchase returns are exactly reverse of purchases. So 5620.
You don't have it, huh?
To this we need to add carriage inwards. Because when you purchase, you get the chips inside. So by default, carriage inwards 230.
No, that's what. No, this is the advantages of double entry. No, so this one, see. You see here, double entry system offers the following advantages: scientific system, complete record.
Okay, purchases.
Same, no? Your book also it's the same, no?
So from that we need to subtract inventory on 31st March. Inventory on 31st March 20.
Okay, so leave it then. It is not required, not so important. It means that is not so important.
2914. So put it in brackets so that you don't mess up again. A lot of students they mess up doing calculations if they don't if you don't put the numbers minus or.
I think that one, that's all you have in that lesson. No? You have any other thing from that lesson? Just check.
Ultimately the figure will go wrong. So you look now. So very important 340963.
That is easy one.
Yes.
That is.
5605 plus 3009 minus 4914. So 46748. Expenses total amount is 2467. So cost of sales are subtracted, so you put it in bracket again. This minus is for these items. Okay, so don't get confused again. So 104254. 104.
This chapter is almost done here.
So this is, what do we call this? This is gross profit. Gross. So this is gross profit. to this we need to add other income. So this is a comprehensive question. So all items have been given. This is a very good question for practice. Okay. So this is very good question for practice. Try to practice this to learn the line items, so that all the line items are included in this. So it will be easier for you. So you kindly mark it as important and practice these questions. Often you practice this at least 3 to 4 times you practice, so that the concept is clear and you don't, so that you don't miss out any line item. So yes, obviously there will be adjustments, lot of adjustments also will be there. So that is another thing, another part.
Okay, so you learn this point, meaning accounting principles. Accounting principles refers to concepts, conventions, and standards which are widely accepted by accountants. So this had come in your previous exam.
So practice this question. This is a very good question because
First pair, I love this meaning of accounting principles. What do you mean by accounting principles? Or define accounting principles? Whatever.
Discount received. So this is other income. So this is other income. Discount received. 2067. Discount received. So you add this. So this will give you one amount. So we don't remove that amount. One zero six three two one. So from this we need to take out expenses. So what are the expenses? Carriage outward 1 2 3 4.
Write down once you write down. It's important. This will again come in 11th and again it will come in degree also. It's very important.
Discount allowed 1888. Heat and lights 3765. Insurance 4750. Motor expenses 5269. Rent and rates 14,000. So that's all. So these are the expenses. Okay. So these are the only expenses, nothing else. So how many line items are there? 1 2 3 4 5 6 7 8 9 10 11 15. Let us just check. We have taken everything. So 1 2 3 4 5 6 7.
Okay. You wrote or you learned? Okay, learn it. So another 2 3 minutes after learn it and we'll just close it.
Three, four, five, seven, eight, nine, 10, 11, 12, 13, 14. learn even how to cross check sometimes.
Don't know.
Okay. So we have to
Okay, so we'll continue tomorrow. I mean, tomorrow, next week, Monday. Okay.
even 1 mark is very
Okay, tomorrow is Friday, no?
so don't
Okay. So 4 days. That's all today, Monday to. Next week you'll be having Ganesha festival. No? From when do you have Ganesh festival?
if you are not taken Wednesday.
I think Thursday onwards. I think Thursday is Gauri and Friday is Ganesha. So next week we can have on Monday, Tuesday, Wednesday, 3 days. Okay.
So we don't have to now. We don't have to. Okay. So now we don't have to verify because we already done it. So we found out wages and salaries. There are 15 line items, right? So we have got all the 15 line items. 67109. 67109. So we have taken all the 15 items. So that is how we have to check. Okay. So when we have to cross check, we have to put the ticks like that, and then you have to cross check. So you get 1, 2, 3, 4 less. Okay. This is one. This is how it is. So we have finished activity 7.2. So you can just have a recap like statement of profit was always presenting. So revenue sales minus sales returns. So when the item finishes, cost of sales, inventory, purchases, purchase returns, carrying cost, inventory and then surrender on everything. Then you get half of that. So this one is this you get gross profit. To that you add other income. You will get one value. So from that you subtract all the other expenses, all the expenses. So you take out all the expenses, you add all this, you put it here. So when it is minus, you have put it in bracket. This minus this, then you. Okay. So this is how it is. So now we can. So this is the end of activity question 7.2. This is 7.2. We will catch up with the next one. Till then, have a good day. Dear friends, welcome back to Shasha Social Classroom. So activity 7.3. Produce a statement of profit loss for Samara that shows the gross profit and profit and loss for Samara. Who is this Samara? Just let us have a look. It is somewhere here. go to statement of financial position, revenue, bill, other revenue, discount revenue. Okay, this is other income. So this will go to other income. So then carriage forwards expense, sales revenue, inventories. First December 2019, 1st May 2019. So is there anything new in this? So inventory at first May 2019, electricity, sales return, commission, purchase return. Discount about purchases, total sales, insurance will not come. So let me go to statement of financial position. So total expenses less. So no much unique items. So I think you can try this question on your own. So even then, let me be just quick. Let me just finish it fast so that you can cross check with the solutions. So this is very important topic. That's why I am doing this. So let us continue. Okay. So we'll start with input profit. First revenue, write all my expenses one by one. Rent and rent and rates 480. Salary return. Return. FTC revenue estimate. So 480. Discount allowed 16. Yes, yes, you can mention. Most expenses. So now you add all these expenses. Okay. Yes. 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 One, two, three, and eight. One, two, so 22, 24. Minus 12390 into 9830. This is profit. And this is profit. So remember, so this is also so very simple question. So let us take picture of the profit because we need it in the next activity. They have asked for the same activity. They have asked you to prepare statement of financial condition. So take down the number and further MCQ. So keep it securely. Stay still means just remember it. And anyways, if you are doing it in a notebook, then it will always be there. So you can have just check and you can use it. Okay. So this is how it is. So just action. Once again, you can just cross check with the solution. So before attempting any of the questions, so my request is that you try answering the question on your own. Then you cross check with the solution. So the same way, we will be even doing the question papers also. Like you will have to try on your own, and then you have to cross check. So possibly we may discuss a lot of concepts. You will, if you have a look at all of if you attend all my virtual classrooms, obviously it will be full-fledged discussion on various topics, including question papers, whether it is A levels, AS levels, even IGCSE also. So please refer my channel to your friends and relatives whoever are studying in A levels, IGCSE, so that it will be helpful for you and vis-a-vis it will be So thank you. So you can just finish this. Just have a look. So let me know if you have any concerns, if you have any doubts or anything like that in the comment section of this video, so that if there are any errors also, please let me know, because even I am a human, and there are chances that even human beings only commit mistakes, so that I can rectify my mistakes, and it will help other your fellow students also. So this is my humble request to you, all of my friends, my students. So this is the end of activity 7.3. So activity 7.3. So see you in the next class. Till then, have a good day. Good night. Dear friends, welcome back to Shasha's virtual classroom. So this is a statement of profit or loss. This is David Hopkins' latest book. So today we'll discuss exam style questions. So similar questions are asked in AS level MCQ paper. So exam style questions. Which of the following should not be recorded? So just let us just have a look. So which of the following should not be recorded as an expense? Not be recorded as an expense in the statement of profit or loss. Yeah, delivery cost is an expense. Discount allowed is an expense. Insurance is an expense. Drawings is not an expense. So which of the following is included in the calculation of cost of sales? Carriage inwards is included, yes. Carriage outward is not included. Discount allowed is not included. Discount received is not included. So the initial profit for the year in the statement of profit or loss is 70,500. However, a number of items have been omitted. So these all items have been omitted. So 1800 is this carriage inward. So discount received is 6200. Sales return is 4100. So which are the minus items? So carriage inward will, so loss, the initial profit. Okay, so initial profit. So this is a profit. So profit is 17,500. 17,500 is the profit. So carriage inward is 1800. So it is an expense. Whether it is a common cost of sales or expenses, it is always an expense. So that will go to reduce the profit. So it will reduce the profit 1800. So discount received. Discount received is other income. So which increases. So increases the profit. Sales return. Sales return is reverse of revenue, that is minus sales. So this will decrease the profit. So just let us just calculate 17,500. 17,500 minus 1800 plus 6200 minus 41. So 17,800. 19,800. Yes, that. So then after this, you have a trial balance. I mean, the trial balance extracted from me is 31st March. So let us just discuss this. So I'm not going to work out this. I think you can work on this on your own. What is the task here? So during the table goods cost 2775 for his own use. So this one you have to subtract from purchases. This is not recorded in the books. The inventory of 31st March was 1900. photo, statement of financial position. Capital A photo, statement of financial position. Direct invoice, basis cost of sales. Direct reports expenses, discount other expenses, discount received other income. So gross statement of financial position. Fixed and fitting statement of financial position. Fitting and relating expenses. Inventory. So this is cost of sales. The land and building. Statement of financial position. Expenses, office expenses, expenses. Office project will go to statement of financial position. Trade payables will go to statement of financial position. Trade purchases will go to cost of sales. Purchase returns, cost of sales. So trade receivables will go to statement of financial position. Revenue, sales is nothing but sales minus sales return. So this nothing but revenue. This should be subtracted from revenue. Wages is expenses. Again, closing inventory will go to cost of sales. So that's all. So now you can try this question on your own. So if you have any doubts, you can please let me know in the comment section. So it's very simple. You can do because we have to do a lot of other stuff. So I'm not wasting time on doing this because it's a very simple question. I think you can do this on your own. Okay. So this is the end of lesson statement of profit or loss. So we will be continuing statement of financial position in the next class. Till then, have a good day. Good night. Take care. For international curriculum like IGCSE, O level, AS level, and A level, clear understanding of the concepts. Remember, correlate application skills is a must. Proper practice and training is very prerequisite for scoring MCs. Dear friends, welcome back. So today we'll be discussing accounting concepts. So this is lesson number 9 in David Hopkins. Lesson number 9 in David Hopkins. Okay. So you can read the book and you can understand most of it. But let me just explain to you in layman terms, like how you need to understand the concepts. So you need to understand the concepts. You can just read the book and you can understand, but let me have a brief overview. So the need for rules. What is the need for rules? So rules must be followed because accounts are used everywhere in the world. So different people should be able to understand what one person is telling about their financial position, financial results. So everyone in the world should be able to understand the statements prepared by any part of the country or any part of the world. So that is why we have to follow certain rules. So the rules are followed uniformly. So followed in preparation of books and notes. So that is what is accounting concept. What is duality? Duality means duality says according to duality, every debit has a credit. So the it acts like a check. It acts like a check on the arithmetical accuracy and try to be more authentic and clear. Okay. So business entity concept. What is business entity concept? According to business entity concept, even though the owner of the business is the person who is running the business, he is considered as an outsider. So that is why the concept of capital and drawings comes. Capital and drawings. That is where the concept of capital and drawings come. So similarly, all the transactions from the recorded from the business point of view. So that is what business entity concept says. Money measurement concept. What is money measurement concept? According to money measurement concept, everything should be measurable in terms of money. All the business transactions should be measurable in terms of money. It cannot be recorded in currency. It cannot be recorded. No transaction can be recorded in quantitative or qualitative terms. It should be always measured in terms of money. So money means either in dollars or pounds or whatever. So historic cost. So normally the transactions are recorded at historic cost. So suppose one item has been purchased some 10 years back, it will be recorded at that price itself and that will be carried over. So we cannot assume and presume, we should not apply the current cost, the realizable value or whatever. So normally everything should be recorded at historic cost and that should be shown in the books of accounts. What is realization concept? So realization concept is as soon as the sale is made and once the invoice is raised, it should be recorded as revenue. It should be recorded as revenue. But in case of goods sales on approval, goods on sale or approval. So what happens is, it should be recorded as the goods must be recorded as sale only when. So what is goods on sale or approval? What is goods on sale or approval? So what happens is a person sends goods to another person on the condition that if the customer agrees, yes, the goods are of proper value, I have accepted, then it becomes a sale. So what happens in case of goods on sale or approval? So the goods are sent to the customer, the goods go out, and he will receive the goods. Entries are made in the stock book, but it will not be recorded as sale. So it should be recorded as sale only when the customer gives his consent, approval. Customer gives his consent or approval. So then only it will be considered as sale. Otherwise, it will not be considered as sale. It will be considered as goods in transit. Okay. So it should not be considered as sale. Goods on sale or approval. Consistency. What is consistency? See, there are certain rules there, certain principles which the accountant follows. Suppose, let us say there are two methods of providing depreciation. One is straight line method and one is return on value. So, what does the rule say? If one person follows, if the company follows straight line method, he should be following straight line method several years, throughout the years. We cannot shift from straight line method to return on value method or from return on value method to straight line method. Or if you, when you come to management and cost and management, there you will come to something across FIFO, AVCO, method of valuation of material. So if one company is following FIFO method, he should be following FIFO method. He cannot interchange to AVCO or vice versa. So they should be consistent following the accounting principles. If they are following FIFO method in valuing inventory, they should follow FIFO method in valuing inventory. Suppose if they are following AVCO method, they will be following AVCO method of valuation of inventory. So that it should be consistent, consistently followed. The rules must be consistently followed. Rules or methods. Methods must be consistently followed. So what is materiality? Materiality is dependent from person to person and from business to business. Suppose if it is a large company, small items may be written off as an expense. Small items may be written off. But if it is a small company, then small items are also can be recorded as assets. So based on what type of business it is and what is the magnitude of the importance of that particular item, the items are recorded. So that is why it's called materiality. How material the particular item is. Based on that, the transactions are shown. Matching principle. So this is also known as accrual principle. So matching principle means all the assets and liabilities, all incomes and expenses must be belonging to one specific period. So you cannot postpone or prepone any expenses or incomes or assets or liabilities from one period to another period and recording it from one period to another period. They should match specific period. Specific period is very important. So period is so specific period. They should match all assets, liabilities, expenses, and incomes should match for the specific period. If they are not belonging to that period, they should be taken out. So that is what is matching principle. What does prudence principle say? Prudence principle says that all probable losses should be accounted. All probable or prospective. Prospective losses should be accounted, whereas all probable or prospective income should never be accounted unless if they are realized. So prudence concept. So it is also known as conservatism concept. So it is also known as prudential concept. So accordingly that all probable or prospective items, if there are expenses or losses, they should be accounted. They should be considered and recorded in the books of accounts. Whereas if the items are incomes or probable incomes, they should never be recorded unless otherwise they are going concern. What does going concern concept say? According to going concern concept, it is normally assumed that business will be continued forever. Business will be considered as running forever. Suppose if you say you will run the business for only 1 year, who will come and buy goods from you? Who will sell goods to you? No one will trade with you. So they will hesitate. What if you run away and the other day? So that is why it is always assumed that all businesses are going concern. They run, they are intended, they have been started with an intention to continue forever. Forever. Okay? Very important concepts. It's often and often asked in the exams. All these concepts are so theory-based concepts, but they are often asked. So you have to understand in layman terms, because when they ask in case studies or MCQs, you should be able to tell the answer. Substance over form. So what is substance over form? Like you can say hire purchase. What happens in hire purchase? Unless you pay the last installment, the buyer will not become the owner. But in our accounts, what we do is from the day one we consider them as assets and we record and we even charge the depreciation. So here the legal form is that, legal substance is that the asset has not been transferred from the buyer to the seller. But in the form, it has become an asset to the of the seller. So the seller record them and they even charge depreciation and they show it as an asset in their books of accounts. So that is what it is. So then objectivity. What is objectivity? All all transactions must be evident. There should not be any bias. There should not be any bias. So there should be proof for every business transaction. There should be evidence. Proof or evidence for every business transaction. So very important. So that is how it is. So understand. So you can read the book. I mean, you can read the text based on this. So try to understand in layman terms how it is, what it is. So lot of questions are often asked regularly on these concepts, so that particularly MCQs, case studies. So they are asked. So you should be aware of this basic concepts. They are very important, scary but very important. Please go through. So in the next class we'll discuss the exam state questions from this lesson. So the concept will be more clearer. So till then, have a good day. Dear friends, exam size questions from accounting book. Okay, so let's discuss exam size questions from accounting book. The owner of the business paid for some repairs made on his wife's car out of the business bank account. The amount was debited to his drawings account. Which concept was applied? Obviously, business entity concept. So according to business entity concept, the owner is considered as an outsider. That's why whatever money is taken out from the business is considered as his loan. It is recorded from there. So not matching, not proven, not this. So this is the right answer. So business entity concept. A trader paid $700 for business insurance, but 100 out of this related to first 2 months of next year. Which accounting concept has been applied? Obviously matching concept. Why matching concept? Because we have to, the expenses and incomes of that period should match. It should be related to that specific period. So next year, 2 months of the next year should never be accounted. So you should account only the expenses of that particular period. So this is correct. So matching principle has been applied. Matching concept. Matching concept. Right? So next. The balances in sales ledger total 24,000. A customer who owes $1,500 is known to be in severe financial difficulties and may go out of business. The figure of trade receivable shown in the statement of financial position is 22,500. So you are recorded probable loss, prospective loss. So you applied prudence concept. Because you have prudential, so you are conservative, so you are prudential. You have followed prudence concept. So a trader sends goods on sale or return to a customer. When the trader prepares for a statement of financial position, the customer has still not indicated that she has accepted the goods. Which concept should be a trader when she prepares her account? So realization concept. So realization concept is applicable because realization concept says that when the goods are sent on return on approval, it should not be recorded as sales unless the person to whom the goods have been sent indicates his assent to buy. So assent to buy. So that is why it is called realization concept. So realization concept is applied. So this is the end of it sounds so simple. So easy concept, but very important. The questions are often asked in AS level. So very important topic. So very easy also. So easily it's scoring. So please I get a hold of this. Try to answer more and more questions and get a hold of this. Okay. So let's catch up in the next class. Till then, have a good day. Good night. So dear friends, welcome back to Shasha's virtual classroom. So today we'll be discussing exam style questions from Statement of Financial Position, David Hopkins' latest book. So you can just answer yourself and then cross check with the solutions here. So the owner of a business has taken goods for her own use. She has withdrawn, but no entry has been made in the books to record this. Which row will show the effect of this? Which row will show effect of this on the statement of financial position? So she has taken drawings, she has taken goods, but it has not been entered. So what will happen? So inventory will be showing more. So it is not possible. This cannot be. This cannot be. This cannot be. This can be, and this can be. So because you have taken out the inventory and you have not shown, so it will be showing more. So what will happen on the credit side? I mean the other asset, the capital you should have credited the capital. You should have taken out from the capital. So it is impossible that it cannot have any effect on capital. It will be too large. So obviously yes, capital will be too large because it will not have been debited. So this is the option. D is the answer. The following information has been extracted from a statement of financial position at 31st March 2020. So what was the balance on the capital account at 31st March 2020? So they are given non-current assets, current assets. So what is the total assets? Add up this. So any other asset asset, current liability is a liability, long-term loan is a liability, profit. So will come in the capital. So drawings also will come in the capital. Profits will obviously credit itself. Drawings will be obviously minus, right? So it will have been subtracted. So this you add both 1275 plus 54,275 plus 4. So the total assets is 3,29,000. So the total liability should be equal to this. So this should be the so assets will be equal to liability. So you know in accounting equation, assets is equal to liabilities plus capital. So you know assets. So assets are 329,000. So 329,000 is equal to liabilities plus capital. Liabilities is what? This and these are liabilities. 28,000 plus 28,000 plus 67,000. So 95,000. So 95,000. So plus capital. Capital is not given. So it is balancing figure. But they have given other items. So they have given this is eliminated. Only these two are given. So 31,000 minus 42,000. So it is 9,000. 11,000 minus 11,000. So it is minus 11,000. So minus 11,000 plus some amount. Okay. So there is some amount which is this. So you need to simplify. So what you will do? You take this side. So 3,29,000 minus 95,000. 3,00,000 minus 95 is 234,000. 234,000. So this already minus, so it will become plus. This is already minus, minus 11,000, right? Because it is drawings. Minus 11,000, you put it in bracket, right? So this will become plus when this comes this side. So basic math, if you are bad in basic math, so I can just show you here. Asset is equal to liability plus capital. Asset is 329,000. 329,000 is equal to liability. Liability is this plus this 95,000. Plus capital, we don't know, so we can keep it as it is capital. We write it as capital. So now 3,329,000 minus 95,000 is equal to capital. So 329,000 minus 95,000 is 234,000. 234,000 is equal to capital. But in capital, this includes one figure. This is what all is here. This side 31,000 minus 42,000 is opening capital plus profit minus drawings. Correct. So this is what is capital, right? So capital is profit drawings. Opening capital plus profit minus drawings. So now you do one thing. So you keep opening capital this side. You just take out profit also this side. You take out you take drawings also this side. So what will happen? What will happen? 334,000. So plus profit will become minus profit. So you know this is basic math. So when plus comes this side, it becomes minus. So minus becomes plus. So minus drawings will become plus drawings is equal to opening capital. Opening capital, you keep as opening capital here itself as it is. So now opening 234,000 minus what is profit? Profit is 31,000. What is drawings? 44,000, 42,000. Drawings is 42,000. Is equal to opening capital. So now subtract all this. Let us calculate 234 minus 31 plus 42 is 245 is equal to opening capital. So this is what we want, right? So this is what we want. So 245,000 is the answer. So the answer is 245,000. So it is simple. If you know basic maths, then it's very simple. Otherwise, it's a bit complicated. But by understanding this, by doing this in these particular steps, you can do it easily. Okay. So this is done. Then the next one, let us see what is there in the next question. Which of the following is not correct? Assets is equal to liabilities plus capital. This is correct. Capital is equal to assets minus liabilities. Capital you keep here. Assets minus liabilities is also correct. liabilities is equal to liabilities you keep here, assets will come here, or you keep this side, assets minus liabilities. So this is wrong. So this is the answer. Which of the following is not correct? So D is not correct. Okay. Next. Fourth one. The following documents were constructed from investment books at 31st December 2019. So advertising, bank, capital, all these things are here. So expenses are here. So inventory at 31st December, profit for the year was 50,700. Okay. So prepare X and SS statement of financial position for the year ended December 31st December 2019. So very simple question. I think you should be able to do it in a quicker time. So let's have a competition. Let's check who can do it faster. So whether you or me. So and we will see who will be right. Okay. So you can just start working out, and you can just visit this solution once again after you have finished it. So let's start. Equipment is 42,190. Sale is 22,234. So that's all non-current. Motor vehicles is 17,459. That's all. So no other correct. So this is non-current assets. Now come to current assets. Just total is enter 42,190 plus 2,954, 2,954 plus 104,107,059. Triple eight, double eight three, double eight, double eight three. Current assets. So let us see what are the current assets. So bank balance is there. So first let us make a list. What is required? Bank is required. This 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 is not required. This is required. This is required. This is not required. This is required. This is not required. This is required. This is required. This and this is not required. Okay. So in this, what all we have taken? So now come to current assets. What are the current assets? Inventory. Inventory is given here. Location. 3531 inventory. Mobile PC inventory. Always try to remember it. ITC, remember. ITC inventory should come first. Inventory 35331. 35331. Trade receivables. get them? So practice more and more questions because questions are often asked from statement of financial position, and you have to be very fast. And along with this, you may have to do a lot of adjustment questions also. So which we will be continuing. So from the next class. So the next class is based on theory. So but very important. So I have observed a lot of students, they ignore theory, they focus only on practical question, thinking they are more important, and theory is less important. So they don't do that. So everything is important, everything is scoring. So please try to learn everything. Okay, so don't skip anything at all. So have a good day, good night, take care, bye. Dear friends, welcome back to Shasha's virtual classroom. So today we'll be discussing statement of financial statements, statement of financial position. Okay. So today, so this is David Hopkins' latest book. We'll discuss activity 8.1. So before having looking into this class, I would request you to try answering the question on your own. So from whatever you have learned in school, from your teachers, from wherever, so then you can cross check with the solution so that you can confirm your understanding. Okay. So activity 8.1. Chennai sole trader had a capital account balance of 89,350 on 1st April 2019. During the year, Jana made drawings of 22,720. Prepare the capital account. Yes, capital account. If the profit for the year of $26,390 had been made. So close the closing capital. Next one, B, this is part A. This is part B. Calculate the closing capital using the listing approach. If a profit for the year of 26,390 has been made. So you can try on your own based on your understanding. So there are two ways. So what is one way? You have to learn how an account is prepared, what credit will, what will come on the credit side, what will come on the debit side, and list of items, what will be added, what will be subtracted in listing approach. So that way you can do, or you can understand and you can try. So now let us discuss the solution. So first, prepare the capital account. Prepare the capital account. So capital account. So capital account is usually in ET format. So this side is always debit. This side is always credit by default. So dollar currency will come in a blank. Add a capital balance. Add a capital balance of 89,350. 89,350. So capital balance. Capital is a liability, right? So always it will have credit balance. So remember, capital is a liability, and always it will have credit balance. Credit balance means it will always come on the right side. 89,350 by default. Okay. 89,350. This is on what date? This is on 1st April 2019. So balance product. Remember the three. Then during their Jana made drawings of 22,720. So drawings are exactly reverse of capital. So profit of 26,390. So profit means normally it is credit balance, right? Profit is always credit because credit all incomes and gains, no? So incomes always show credit balance. So profit means it's a credit balance, so it will always come on the credit side. So 26,390. 26,390. So that is profit for that. Prepare the capital account. So that's all. So capital account. Done. So those are the items that have been given. So now what you have to do? You have to add this side and this side. So which side is heavier? Obviously this side, right side is heavier. So if the right side is heavier, it's called excess credit. So excess credit means balance will come here, balance carry down will come here. So this plus this minus this. So you add both and subtract this item. So 89,350. 89,350 plus 26,390 minus 22,500. 93,020. 93,020. So this is the amount. So this is activity 8.1. Yes. Okay. And now coming to so very simple. So we can just check once again. Activity 1.1a, 8.1a, debit this side, drawings and balance, and credit side balance got down and profit. Okay. So then we have to add 20. This is the balance given, and this is so that's all. This is given, this is given, this is given, everything is given. So we need to add, right? Simple. We have to just plug in this. So it's very simple. Capital amount is very simple. So now prepare it in the form of a statement. So when you are preparing in the form of a statement, you have to add these two items and you have to subtract these items. So you start with the opening balance. We calculate closing capital using the listing numbers. So part B, section B. So answer B. Okay. Capital, opening capital, calculated between. So this is capital at listing amount. Capital at the beginning. So what is the capital at the beginning? Same by default. We get one. So to that we need to add profit 26,390. And add something how much again? of financial position. This is the latest book of David Hopkins. So we discussed activity 1. So let's start. So Raza is what total the items have been the items taken from his trial balance 31st May 2020 that relates to the statement of financial position are as follows: bank balance 3245, bank loan receivable 2024, bank loan receivable 2020 28,300. So cash balance is PAN 10, capital opening balance of 1st June 2019, that's in okay opening. So 169,945, drawings 33,450, fixtures and fittings for 44,125, premises 33,000, premises trade payables is 33,025, premises contract 27,600, annual bills 7,600. So trade receivables 36,085. The loss for the year was 9,145. Inventory at 31st March was valued at 51,340. Prepare a statement of financial position for Raza at 31st March. Statement of financial position at 31st March 2020. Okay. So just before starting this, let's understand few things which are very important. So statement of financial. Position of Raza at wanted 31st May. So before doing this, let us understand a few very important concepts. So what are the so there are 5 line items. Okay, so there are 5 line items, 5 steps, not 5 line items. In statement of financial position of a sole trader. What is the first one? First one is non-current assets. So non-current assets are fixed assets. So we need to write this in an order. So particularly item amount wise, whichever is earlier we can write that, or the asset which has got longer period of life, we can write that first. So you have to follow a specific order. So though it is advisable. Okay. So then the next one is current assets. Current assets. Here also order is important. Like whichever are realizable on the basis of realization. So first inventories, because inventories cannot be easily realized. Then comes the trade receivables. Then cash and bank balance. So this is okay. So then we have to total of this. So this is as separate. These are total assets. Then comes liability side. Coming to liability side now. So these 2 line items are over. The third line item is capital. The capital account we already learned. So first we need to start with opening capital, opening balance. So that from that we need to add subtract drawings. So to that we need to add net profit for the year. So that will give closing balance. So you need to write the capital structure. Then fourth line item after 12 months. After 12 months. So there are no non-current liabilities. So the outstanding date is important. So on the date of balance sheet, from the date of balance sheet, after that 12 months from there. For example, if any, this is 31st May 2020. So if any liability is payable after 31st May 2021, after that. So this is 31st May, after 1 year, lapse of 1 year, then it is non-current. It should be recorded as non-current liability. So now you know what are liabilities, right? So liabilities are something we owe. So non-current liabilities. What is current liabilities? Current liabilities are the liabilities that are payable within a period of before 12 months. So if there is any amount outstanding on 31st May 2020, so between this period and this period, and between this any liability payable between this period and this period, it is current liability. So basically it is equal less than or equal to 12 months. So less than or equal to 12 months. If any liability is there which is payable within a period of 12 months, it's called current. Current means we have to pay immediately. If not immediately, within 12 months. Non-current after 12 months. After 12 months. Okay. So very important. So again, this is so statement of financial position is somewhat easy. So like this you have to understand, just understand where what are the line items and where to plug it. And following the particular format is also very important. You have to follow the specific format. It's very, very important. So now statement of cash. So first we need to write fixed assets. So premises is very heavy. So premises, I have write premises. So first we have to write non-current assets heading. In the non-current assets, we need to write building premises. What is the value of premises? Value of premises is 127,600. Which is the next item which is a bit higher. Furnitures and fixtures. Furnitures and fixtures and fittings. Fixtures and fittings. How much is the amount? Fixtures and fittings it is 44,125. 44,125. Any other assets are there? Any other fixed assets are there? No, only two fixed assets. So very good. So first you write this. So both you add, right? 127,625. 1716. So current assets. Now coming to current assets. Current assets. First, we need to write inventory. Inventory means inventory at the beginning, at the end of the year, not at the beginning. Inventory 31st May 2020. receivables. So remember this as ITR, okay? So remember this as ITR. ITR is inventory trade receivables. ITC, not ITC. C is cash and cash equivalent. C, cash and cash equivalent. Trade receivables. So trade receivables is 36085. So then next one, cash balance. Cash balance is there, bank balance is there. This cash and bank balance. So bank cash. What is the bank balance? Bank balance 3245. What is cash balance? Cash balance is 5000. So we have finished. We have written this. We have written this. And you have taken this. You have taken this. You have taken this. So you have taken so many line items. Two fixed assets. One, two, three current assets. Four current assets. Trade receivables. Even this is including them. So now we add together and write. That's all. I1 P4 0. I1 P2 open. And 91,180. 91,180. Add this together. So 6292. This is total assets. So total assets 262. Now we have to find out total liabilities. So before this itself we have write in an order. So in the presentation, remember always. So first you write capital. So capital first at the beginning. Capital at the beginning is 169945. So less drawings. There are drawings. What are the drawings? Drawings are here. 33,480. So says loss 9145. Loss 115. So put it in bracket. So you add with this bracket minus POP minus 9. So 14750. 127. Okay, so capital. So this is what we have figured. Everything is done. Order revenue, bank loan, receivable, bank loan receivable, and trade payables. So now we have to write non-current liabilities. So bank loan, which is repayable after 2024. Loan repayable 2024 144,150. 144,150. So straight away you can write yes. Bank loan repayable 2020. So that is current liabilities. This is non-current liability. Now you write current liabilities. the paper first. So in fact, what I used to do is I never used to calculate the totals. I used to do everything and leave out this part. I used to leave out this part. I would not total it. I would not total this. I would not total this. Why? Because if in anxiety, what we try to do is we try to figure out the mistake. Figure out the mistake, we'll try to look at the entire problem once again, just trying to check where the difference is. So because of that, we'll be wasting almost 30 minutes, 30 to 40 minutes. Ultimately, whatever we get is just 1 mark. So it is not worth. In the meantime, you would have got around 6 to 8 marks in other problem. So it is not worth. The opportunity cost is very high. So never try to find out the mistake. Even if you do the total, if you get any mistake, leave it as it is and try to finish the paper first. Please try and finish the paper first. Once you finish the paper, you come back again and you can cross check, because at that time you will not be losing any marks, because you have finished all the paper. And then obviously if you discover the mistake, it is great that you will get whatever 1 mark or whatever. So just because for 1 mark, don't try to. So it is a very important advice. It is very important practice that you have to adopt. You have to follow. That never try to figure out the difference. Never try to tally. No, that is the usual. That is the problem in most of the students. What they do is they try to tally the balance sheet. So they tally the statement of financial position. So thinking that they will lose marks, otherwise they will lose those marks. No, no, nothing like that. So finish the paper first. Finish the paper. So even if there is any difference, you finish the paper first. Then you come back. So maybe there are some easier questions which you can do, which you do easily without any mistake. So ultimately, you would have got more marks. You would have realized that also. So never do that. Please don't do that. So take this advice as very important, and you have to follow from now on. So all the best. So we will continue in the next class. Till then, have a good day. Good luck. Dear friends, welcome back to Shasha's virtual classroom. So today we will discuss activity 8.3. So produce a statement of financial position for Samara using the information in your video file. So Samara, this is what we remember. This is Samara. So we need to prepare statement of financial position. Statement of financial position. So let us have a look at the items that have been mentioned in this question. So as at 30th April, so statement of financial position at 30th April 2020. Okay. So rent and rate motor vehicle. So motor vehicle is an asset. So furniture and fixtures. So we need this item. We need this item. We need this item in statement of financial position. We don't need this. We don't need this. We don't need this. We don't need this. We need this bank loan. We don't need this bank capital is required. We don't need this. So commission received not required, not required, not required, not required. Related to the drawing sales. And we don't know what the distribution is done. trigger items and speed. Okay. So these are the items which we need. Other than this, we don't need any of the items. So 1, 2, 3, 4, 5, 7, 8, 9. Okay. So let us be fast. So what you can do, please try working out the solution on your own, and you can cross check after having a look at this, whatever we are doing on this. Okay. So try working out on your own. So the pace should increase. Actually, your speed should increase automatically. So by doing this way only, you are going to get a hold of the solution. Okay. So first, obviously, first we have tried the non-current assets, motor vehicle and furniture, fixtures and fittings. Is non-current asset. So first item is so it is $1. Motor vehicle fixtures. How much is motor vehicle? 2400 multiplied with 2400 fixture 30. So it is 9930. Non-current. Now current assets. So current assets, remember, I told you, please remember the concept, just remember it is ITC. ITC is nothing but inventory given as a, always you have to take inventory will be given as 3000. Trade receivables, trade receivables is given here 3400. So every 710. So let us mark the items whatever we have taken, so that we will know how to mark any of these items. So we have taken this, we have taken this, we have taken this, we have taken this, we have taken this also. 4 calendars we have taken. Next, current assets 4. So this is the that's it. Previous amount 0, 17,090. So total assets. Oh, so one more thing is this. Bank balance. Cash and cash equivalents. Cash and cash equivalents. So that is known as bank balance. So bank balance is 620. Let us check it here in cash balance. Let's check it here. we get the profits. We had done in the previous class. So that is in statement of profit and loss here. From activity 7.2 in chapter 7, we know that the statement of profit and loss produced a profit for there of 9,800. Now we add all this, we get the capital. So 7,985. 13,810. So now non-current liabilities. What are non-current liabilities? So bank loan receivable of 2022. So long term. How much? Next, non-current liability, current liability. So whatever the current liabilities, where are out of the various current liabilities. So just have to trade credit 1400. Auto generate, let us check. So trade tables also taken. Nothing else. That's all. Only one much. So current liabilities are so much. So now we just add 810 plus 1771. 1771. You can cross check. So here asset side also 17710, liability side also